doing it all because they're worried. What in the mattering framework?
Yeah.
What is a business leader supposed to do in these very polarizing moments?
Well, I think you've called on them this week to speak up, but I would argue with mattering, we need to go all the way downstream. Political theorists talk about how if you don't feel like you have a voice or agency at work, you are less likely to engage civically in a healthy way. So I would say to
all I
managers,
need
if
is
you
a
wanna
psychologist
bring
to
back
tell
our
me how to
disconnected
live.
world, it starts at mattering at work, having a voice, having agency there, feeling like you are making a positive impact. People care about you.
Well, the book is mattering. You made us feel like it mattered this morning. So
She's mentally ill.
Great book. Thank you. Good morning.
All right, we have some earnings just out. Fourth quarter results from AT&T. Those numbers came in at 52 cents a share. That beat the street's expectations of 46 cents. Revenue came in at $33.5 billion. The street was only looking for $32.9 billion. If you look at some of the numbers here, postpaid phone net adds of 421,000 came in below the 464,000 that the street was expecting. AT&T's fiber net adds, 283,000, that beat estimates. And the 2026 guidance and then even the longer term guidance is above what the street had been expecting. For 2026, the company is now saying that it's looking for earnings per share of $2.25 to $2.35. The street was only at $2.21. The stock is climbing on this news. Right now, it's up by about 3.25%. The long-term guidance that they're laying out over 3 years, not just the earnings per share, but they've got some pretty impressive numbers, and I'm sure that's why the street is reacting in kind right now with that stock indicated up. Adjusted EBITDA, they're looking for growth in the 3 to 4% range in 2026. They expect that to improve to 5% or better in 2028. Free cash flow, $18 billion plus in 2026, $19 billion plus in 2027, and $21 billion plus in 2028. I mean, the company does seem to be firing on all cylinders when you look through what they're talking about. I spoke with the CFO, Pascal Desroches, and he talked a little bit about what they're seeing. Part of that is he says that they are continuing to steal market share. A lot of that comes from the cable companies that are incumbents in some of these markets where they go in and they're putting more fiber in. They're laying a ton of fiber, and they're converting a lot of those fiber customers to wireless customers as well. Pascal Desroches says that's the crux of what their real strategy is, to try and get these customers that they have not only for fiber but also for wireless, because when they have customers with a dual relationship like that over the lifetime of the customer, it's a much more profitable relationship. And that's why they've seen improvement in their margins just as a result of some of those things coming. Now, in terms of the consumer, Desroches says that the consumer is resilient, but he also says that you've seen what you've seen throughout 2025 here with the consumer, and that is that they're a little choosier. They're looking for bargains. He says AT&T is able to deliver that on one thing. If you sign up for 3 years with them, you might get your device free, you might get it a little cheaper. But the real thing that they're going for is if you are a fiber customer or a wireless customer and they can convince you to sign up for the other side of that, you might get a discount with that. And again, those are the valuable relationships that they're looking for with these customers. But strong plans that they're laying out for what they expect, not just for this year, but for the next couple of years to come with that. And we'll continue to keep an eye on that stock right now up by about 3.5%. When we return, chip stocks powering the NASDAQ higher in the pre-market today. We're monitoring a big rally in these names, and we do have the details right after this break. First, though, take a look at yesterday's S&P 500 winners and losers. things to know ahead of today's opening bell. The Fed will announce its latest interest rate decision. That's coming at 2 p.m. Eastern time. Investors expecting no change in the federal funds rate, but we will be paying close attention to Fed Chair Jay Powell's news conference for any clues about the future of rate paths. Elevance Health, formerly known as Anthem, out with its fourth quarter results. Those earnings beat expectations. Revenue was a little bit light. Elevance shares, though, were down 14% yesterday after the Trump administration proposed nearly flat rates for Medicare Advantage insurers for this year. Other health insurers also saw big losses, and this morning you can see Elevance Health down by another 6.5%. South Korea's SK Hynix moving higher after earnings. The company reported record full-year profit. It also announced that it will be setting up a new U.S.-based company focused on AI. Shares of Dutch chip giant ASML popping after the company reported orders that more than doubled analyst expectation. That stock right now up by about 6%. And then you have Texas Instruments earnings and revenue missing estimates, but the current quarter guidance that it's giving is lifting the stock. It's up by about 8.5%. Texas Instruments is projecting growth of 4.3 to 4.7 billion in the current quarter. Those gains by ASML and Texas Instruments lifting the entire chip sector right now. You can see these gains across the board. Western Digital up by about 8%. Seagate up by close to 10.5%.
Coming up on the other side of this, trade tensions building between the U.S. and Canada. We're going to talk to former U.S. Trade Rep Michael Froman right after the break. Of course, he now runs the Council on Foreign Relations. And a reminder, you get the best of Squawk Box in our daily podcast. Follow Squawk Pod in your favorite podcast app and listen anytime. We're coming right back. Meantime, we are back on Squawk, and the U.S. and Canada seeing new trade tensions as Washington signals a tougher approach on tariffs and Ottawa's ties with China. Joining us right now is Michael Froman, Council on Foreign Relations President and a former U.S. Trade Representative. And lots of talk, as you know, about what's happening now between the U.S. And Canada, what that relationship ultimately looks like, but maybe more importantly, what Mark Carney said last week. And I'm curious whether you think Mark Carney's speech was not either one for the ages and is what is actually about to happen here, or is a negotiating ploy, if you will, as it relates to tariffs and trade?
Well, I think Prime Minister Carney's speech was an important speech at Davos for laying out what was on everybody's mind, which is that there has been a rupture in the way that we've done business normally in the global trading system, and that middle-sized countries like Canada need to figure out what their approach is going to be in that context. You know, for Canada, it has meant de-risking from the United States, beginning to explore other ways of diversifying its markets. But I'm afraid Canada is sort of condemned by geography and by history. And there's so much integration north-south between the United States and Canada that I think its ability to truly diversify away from the United States is really at the margins, not in some fundamental way.
And this idea, though, that we are sending our great neighbor into the hands of our great enemy, China, is that happening? Is that real?
Well, I think globally what's happening is that countries are reevaluating and have an incentive to further their relations with other countries. It's not just Canada. The EU finally concluded a trade agreement with India. It's been on the table for 20 years. And I think what's happened is that what the Trump's approach to trade has created an incentive for them to finally get these things done. Same thing between the EU and Mercosur, the trading arrangement in Latin America and South America. And so it's not that we're sort of driving them into the hands of others, it's that we're creating an incentive for them to finally kind of finish the work of diversifying their trade relations with others.
And so how ultimately, is that going to be a loss to us? Is that a win? I mean, one of the things that we've heard from the administration is that they want Europe to be stronger, they would say, and to make their economies stronger in parts so they can help pay for some of the military and defense efforts for NATO and the like.
I think if this gives Europe the push it needs to deal with the reforms that everyone in Europe knows needs to be done, the Draghi report, the Letta report, all of these reports have been out there for years saying, here are the things that Europe needs to do to become more productive, to become more innovative. But they all involve difficult decisions, oftentimes cutting across nationalisms, where French nationalism, German nationalism comes out, and it's hard for them to overcome that. This may be an extra push from the outside that actually gets that done. That would be a good thing and would help strengthen Europe. I do think China is benefiting from the fact that that other countries are feeling the need to de-risk from the United States and to look for other partners. I don't think it's irredeemable, and I don't think they're going to find China to be a good trading partner over the long run. I think they still prefer to be closer to the United States, but I think China is benefiting from this moment of instability.
And so, what's your, throw on top of that, whatever's happening now with South Korea? You saw that news just 24 hours ago. Where do you think all of this stands, or is it just something that's a moving jump ball for the next 3 years, if not longer?
It's hard to predict what this administration, this president, is going to do 3 years from now, let alone even 2 months or a month from now. I do think the use of tariffs as the answer to everything is beginning to sort of lose some of its oomph. With Korea, he announced he's going to raise tariffs from 15 to 25%, and then a day later said, but we'll work something out. And I think people don't really know how much credibility to put behind the tariff threat. The tariffs on on Canada, he announced 100% tariffs on Canada. There is no plan for that. There is no announcement of how the 100% tariffs are going to apply. Is it going to apply to trade that takes place under the USMCA free trade agreement or not? Will there be exceptions? I think they're just hoping that the announcement effect will bring Prime Minister Carney and President Trump back to the table in a way, and they'll reach some sort of accommodation.
What was your takeaway from Davos last week? I think people are trying to make sense of all of the different, the whiplash of the possibility of military action on Greenland and a deal on Greenland. I don't know how much you make of that deal, and then sort of underneath it, what was either being said in the hallways about everything else.
Yeah, one thing that came out clearly, Andrew, was that Davos was certainly President Trump's show. In the anticipation of his speech on Wednesday, there was a lot of anxiety around the town, with people wondering, was he going to announce military action to take Greenland or not? There was a sense of relief that he took that off the table in his speech. Also, a little bit of a sense of despair that we were in this place where, where all eyes were focused on something like Greenland, when we weren't talking about Russia, Ukraine, or Venezuela, or Iran, or China, the U.S.-China relationship, arguably the most important relationship in the world. Lots of issues being pushed off the agenda because of the particular preoccupation of the president right now. So a lot of concern about that as well. But this was certainly Donald Trump's show, and it shows that even as much as other countries would like to move away from the United States, they are completely preoccupied with what goes on here in the United States.
Right. Michael, want to thank you. It's nice to see you. Appreciate it.
Thanks for having me.
You bet.
Still to come this morning, why Amazon just announced another round of job cuts. We have details on the tech giant after a break. But first, the AccuWeather forecast with meteorologist Bernie Rayno.
Well, the cold continues across the eastern third of the United States, but the travel forecast, quiet. AccuWeather says 25 in Boston today, sunshine New York City, 49 degrees in Atlanta, maybe a spotty shower in Miami. Kansas City, you'll have some sunshine. Best weather is in the west. Los Angeles, 73 degrees today. There will be some rain in Seattle if you're doing any traveling, though. We're not looking at any travel delays across much of the country. To help you make the best decisions and be more in the know, download the AccuWeather app today.
New this morning, Amazon is cutting 16,000 positions worldwide in the second major round of layoffs in 3 months. It says it's restructuring to offset pandemic-era overhiring and to streamline the decision-making processes at the company. Last week in Davos, we spoke with Amazon CEO Andy Jassy and asked him about last year's job cuts, which totaled 14,000 corporate employees, and how he's looking at his workforce.
I do think that jobs are going to be impacted by what's happening with AI over time. They're not in a significant way yet, but I think you'll see that if you just think about how AI and agents will enable you to do coding and customer service and research and analytics. Even just the idea of doing spreadsheets the way we've done them in the past, I think those will be pretty different. And so I don't think that wipes out all those jobs. But I think we'll still have plenty of people in those roles, and those people will start their jobs, each task they pursue at a higher, more advanced starting point. All the rote work that we used to all have to do before we could get to actually the thinking work, a lot of that will be done by AI. So we'll still have people who will be able to invent quicker and more easily. But I do think that you won't need as many people in all those jobs.
The job cuts that they've been doing, not only that they've announced today, but from last year, weren't related to AI tools. This was really more about culture for the company and trying to make sure that they continue to operate, as Jassy likes to say, as the world's largest startup. Total 30,000 jobs between these two waves of cuts. That's about 10% of their corporate workforce of 300,000 people, but they do employ over 1.5 million people when you include the warehouses and deliveries and everything else that goes with that. That makes them the second largest private employer in the world with some of these numbers. But Andrew, he did write last year about those AI tools and how eventually he thinks that could lead to a more efficient and potentially smaller workforce, but especially at corporate.
This is the story of our age.
Right.
It's the story of our age, and the question is it already happening now?
Yeah.
And I think we don't know. Coming up, what to expect when Tesla reports earnings after the bell tonight. Numbers are one thing, but what Elon Musk might say, quite another. We're going to get the scoop right after the break.
Welcome back, everybody. Tesla is set to report fourth quarter results after the bell today. Joining us right now is Tim Higgins. He's Wall Street Journal business columnist and a CNBC contributor. And Tim, you say that this is kind of a weird moment for Elon Musk and Tesla. You want to explain that?
Yeah, absolutely. I mean, this is a car company. That's how they make their money, electric car company. That's what they've been doing for many years now. But Musk has sold a lot of investors, a lot of people on Wall Street on this idea that it's evolving very rapidly into a robotics company that is going to be making a lot of money in the future on robot taxis and humanoid robots. But that's going to take some time here. It's not exactly clear when they're going to start to see that kind of money coming in. And it's going to be a messy middle. And so I think investors today are going to be looking for any kind of insight into when and how and what kind of money you're going to possibly see here in the future.
That doesn't sound all that different from the strategy for the last, I don't know, many years with Tesla. Tesla's never been just a car company. It's always had this bigger vision, whether that's full self-driving, whether that's what you have to get to on the next level with these things, but it has never felt like just a car company to me.
That's some of the magic, and that's some of kind of what Elon Musk's skill has been selling investors and fans and customers on the idea of the company, right? It's not just a car company, though that's how they make their money. It is something bigger. Whether it was initially this idea of ushering in green technology, helping the environment, helping the world that way, or the solar business, or then kind of the pivot towards autonomous vehicles. It's this ability to tap into something bigger, something that excites people about the future and how the company can be part of this dramatic change.
So for any details on some of the great things to come, I guess investors will be looking for full self-driving when that actually is 100% autonomous. What are you thinking on that? What do you think about robo-taxis?
Yeah, we've seen some movements by the company in the recent days. In Austin, where they are in the early steps of their robo-taxi service there, they finally have taken out the safety operator, if you will, who's in the car to make sure things are going okay, taking them out of the vehicles. That was a big step, one that rival Waymo did a long time ago, but still something important to see Tesla do. Also, Musk has announced that the company's not going to be selling FSD going forward. What they're going to be doing is a subscription service, and that's an important kind of continuing revenue going forward.
Is it a better deal for a consumer to buy that now, or is it a better deal to subscribe later? And what happens if you wreck your car? Do you get to take it with you?
This is always one of the big questions. Customers are always pushing Musk at various times to allow them to take that service to the next vehicle that they own at Tesla. And at times you've seen him allow that, but it's always a question. The idea of an ongoing paying revenue subscriptions kind of model, definitely good probably for the company. If you're a customer, you probably would want to just pay once, but that's kind of the move that we've seen tech companies push for the last decade or so to get into these kind of recurring revenue models.
Yeah, subscriptions for all of us. You know, it's all happening against the backdrop of SpaceX. There's a report out this morning that he could be looking for that SpaceX IPO to come in June, not only tied to, I think, when Venus is close to Jupiter or Saturn or something for the first time in 3 years, but also his birthday that comes up at
Yeah, happy birthday, right? And this is a hotly, really hugely kind of exciting moment for the Elon Musk fan world, because this is another opportunity if you're a retail investor to get into the stock. Tesla investors have been eager to do that. They were at the shareholder meeting last fall. They were asking if perhaps they could get into the stock at early opportunity there, and Musk, you know, he likes retail investors, so this will be definitely a moment. The question I think some Tesla investors are also going to have is what role will Tesla play in this bigger vision that Musk has for SpaceX, for AI data centers in space? That's a big part of that potential IPO with SpaceX. Now, these are two companies, right? But Tesla big in solar, and solar is a key part of this bigger vision. He has suggested there's some overlap. That could be a good business for Tesla.
Tim, wonderful. We're going to be watching this, and we will have you back. We appreciate your time this morning.
Thank you.
Meantime, it is 7 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross working along with Becky Quick. Joe's off today. A lot going on, though. Among today's top stories, the Fed meeting now on day 2. The central bank widely expected to keep rates on hold. No movement, but CNBC is going to have complete coverage at 2 p.m. Eastern time, despite no movement. At least that's the expectation. Of course, there are always important questions that our friends like Steve Leisman and others are going to have that I imagine are going to make lots and lots of news, give us some direction on where the Fed is headed next. Meantime, SoftBank is in talks to invest up to $30 billion more in OpenAI. Reports say the infusion would be part of a fundraise of up to $100 billion that values OpenAI at around $830 billion. Back in December, you might remember SoftBank said it had completed what was a $41 billion investment in Sam Altman's company that gave it an 11% stake. People have talked about this is the public backdoor way to own a private company. So if you wanted to own a piece of OpenAI right now, one of the ways in is via SoftBank. Meantime, AI startup Anthropic closing its latest funding round of between 10 and $15 billion. This is now at a $350 billion valuation. That's according to sources who spoke with CNBC. That figure could grow, though, if Microsoft and NVIDIA decide to contribute to that fundraise. So keep your eyes on that.
There is still no deal in sight to avoid a partial government shutdown on Saturday when funding for key federal departments and agencies is set to expire. Emily Wilkins joins us right now with the latest. No thawing anywhere, either in the weather or when it comes to what you're seeing on Capitol Hill.
Yeah, Becky, there is just not a lot of movement here. Senate Democrats, they're still holding firm in their pledge to block funding for the Department of Homeland Security and half the government in order to push for changes to that agency. And while some lawmakers were initially hoping that some changes perhaps from the White House could break the impasse, Senate Democratic leader Chuck Schumer said yesterday that that will not be enough and that Congress needs to act.
I will vote no on any legislation that funds ICE until it is reined in and overhauled. And Senate Democrats are overwhelmingly united on this issue. ICE should meet the same basic standards of accountability and due process that any law enforcement agency is asked to meet.
Democrats and Republicans will meet for the first time today after a federal agent shot and killed Alex Preddy. Various Democratic senators, they have begun to make suggestions for what they would need to see before they back a DHS funding bill. Those things include requiring ICE to get a warrant before making any arrest, requiring DHS to cooperate with state and local investigations, mandating that federal agents identify themselves and wear body cameras, and ending quotas for the number of arrests that the agency makes in a day. These are just some of the suggestions out there. There's no firm ask at this point. But while Democrats have called for Republicans to strip DHS funding out of a larger spending bill, Republicans themselves are digging in and moving ahead with going for the full package, including DHS. That means that a shutdown is likely, and of course, it would impact much of the government, including it could potentially delay jobs and CPI data again. It could cause chaos at airports with FAA and TSA members not getting paid. It could lead to losses in the travel industry. We saw billions in the last shutdown. And because it is now tax season, reduced help for those filing taxes could be coming as the IRS and the Treasury Department will be impacted. Plus, it could take longer for individuals to get their refunds. Becky?
Emily, did they learn nothing from this last go-around? I'm not sure what was accomplished with the last shutdown, other than angering voters on all corners. Both sides, I think, took a beating on this. What's the off-ramp? Are there cooler heads anywhere who are saying, here's what would get us to a deal? Because it didn't sound like it from Chuck Schumer.
You know, Becky, what I have been hearing is that there is a willingness on the side of Republicans. You've already seen a couple of them come out and make calls for the federal government to work with state and local governments.
Right.
Yes. Exactly. And so there does, the lawmakers who I've talked to at this point, they do believe that there is some sort of off ramp here. I think what's going to be needed is for actually Democrats and Republicans to get into respective rooms with their groups and kind of say, all right, what are our red lines? What are we going to accept? What do we really need from this? And then go forward with that and see exactly how feasible those asks are. The problem really right now is timing. If we had a couple weeks, this might be something they could potentially work out, but we have a Friday deadline, which means that a shutdown is incredibly likely right now.
And then they're all going to go to the Alfalfa Club on Saturday. That's a good look. Emily, thank you.
Okay. Meantime, join us right now with insights on how another shutdown could impact the markets. Don Schneider is the deputy head of U.S. policy at Piper Sandler. You've looked at these things before. If you're an investor walking into what looks like a potential shutdown, historically, has that been a good buying opportunity or not?
I don't think shutdowns really have much of a long-term or even immediate macroeconomic consequences. I mean, this one right now, we're talking about 78% of government funding, which is meaningful amount, as your prior guest noted. There could be a lot of disruption on halts in defense contracts, a lot of furloughs. This could affect the deal out.
You know, the shutdown might have happened a little early there. At least a technical shutdown of sorts. We're going to see if we can get Don back on the connection. Welcome to technology in the age of 2026. I think what we'll do is take a pause maybe and come back out. I know we've got some other earnings reports that are going to be coming out soon, so we're going to keep our eyes on bringing you that news as it comes.
We do have Corning results that are out right now. It looks like the company came out with earnings of 72 cents a share. That beat the street's estimates by a penny. Revenue, $4.4 billion. That beat estimates of $4.3 billion. And the current quarter revenue guidance was roughly in line with estimates. The company also saying that it expects earnings in the range of 66 to 70 cents a share. The street was looking for earnings of 66 cents, so that there's some upside potential to that guidance. Corning CEO Wendell Weeks is going to be joining us in just a few minutes to talk about earnings, the company's new fiber optic deal with Meta. But take a look at the stock this morning. Right now, it looks like it's off by about 0.5%. Put this in context of the 1 week. Yesterday, that stock was up by better than 15%. I just want to take a look at the 5-day. Yeah, so week to date, it's still up by more than 15% because yesterday was when the deal was announced with Meta. I think investors may have been thinking, okay, maybe you get some even stronger earnings guidance coming from the company. Right now, down by about 1%. We've got a lot to talk about with Wendell Weeks, what they're seeing happen in fiber optics right now, and what that's done to the stock, which is up by, I think, better than 120% over the last year. But again, we'll be talking to him in just a few moments or a little later this hour, maybe in 20 minutes, to find out more about what they've seen with the stock, what they're seeing with the fiber optics demand, and how he plans to manage all of that.
Great. We are going to come back, hopefully, with Don once we get the shutdown fixed. We might have to negotiate. It might be a little easier than the negotiations that may happen in Washington. We'll see. Coming up on the other side of this, the chip sector is red hot this morning. Our own Don Chin is going to run through some of the big winners next. And later, an interview you don't want to miss, an exclusive conversation with New York City Mayor Zohran Mamdani on the budget and so much more. That's at 8:45 Eastern Time this morning right here on Squawk Box. Don't go anywhere.
right, welcome back, everybody. Take a look at the futures this morning. It looks like the Dow futures up by about 40 points. S&P futures up by 26. The NASDAQ up by 250. Chip stocks powering the rally in the NASDAQ futures this morning. That's why you see it so much stronger, both not only on a points term, but as a percentage term as well. Let's get over to Dom Chu. He's got some of the names behind that big move. Good morning, Dom.
Good morning. So, Becky, let's put some details around that NASDAQ move here. We got multiple chip-related stocks that are higher this morning on stronger earnings reports, including ASML, SK Hynix, Texas Instruments, and Seagate. You can see here all solidly in the green. Very much so. Now, Seagate, again, they all reported orders that were more than double what analysts' expectations were. South Korea's SK Hynix had doubled its profits in 2025. Texas Instruments issued better than expected first quarter guidance, and the hard drive disk maker Seagate beat on top and bottom lines as well. So if you look at that, that's the reason why you're seeing some of those moves in those chip stocks. Now, those results signal stronger AI demand and are sending chip and memory-related stocks higher this morning across the board. Western Digital is higher, you can see here. Micron's higher by 4%, SanDisk by about 7%, and Intel shares higher by about 5.5% as well. Meanwhile, shares of NVIDIA are higher right now as well, just about maybe 1.5% or so, on a Reuters report that China is signing off on purchases of NVIDIA's H200 chips by 3 of its biggest tech companies. The report says that Alibaba, Tencent, and ByteDance were approved to buy more than 400,000 of those H200 chips in total. Now, Reuters report says that other firms will have the chance to buy those chips later on, too. Alibaba, Tencent, both rising on that news. Alibaba by 2% and Tencent by 2.5%. Then you've got shares of LVMH, which are dropping right now just to the tune of 6.75%. The French luxury goods maker reported a slight fourth quarter sales beat, but failed to impress investors following stronger earnings reports from its competitors like Burberry, Cartier owner Richemont, and others. So keep an eye on LVMH on the other side of the pond in France, down 6.5%. Becky, I'll send things back over to you guys.
Okay, Dom, thank you. We'll check in just a little bit.
Meantime, we got some news this morning. Starbucks mandating that CEO Brian Niccol use the company's private jet for all of his travel, including personal trips. This follows a security review. The board is removing previous restriction that would have required him to reimburse charges for personal travel above an annual cap of $250,000. The board said it's enhancing security measures for him, citing enhanced media attention and the current threat landscape. The security study also found the existence of a credible, what they're calling, quote, credible threat actors. So something to think about, and I know a number of CEOs and their security threats have clearly risen. Meantime, in 2025, Niccol's total security costs totaled $1.1 million, while his use of the jet cost the company just under $1 million. Starbucks set to report quarterly results later this morning. Of course, we'll bring you that. And then tomorrow on Squawk Box, we're going to bring you a first on CNBC interview with Brian Niccol. Coming up after this, we're going to talk about Apple's Tim Cook, the latest executive to speak up on the situation in Minneapolis. We also have the results of CNBC's flash poll of C-suite executives about speaking out and why many have chosen not to. Squawk Box, coming right back.
Time now for today's Aflac trivia question. What 5 baseball legends were the first to be named to the Baseball Hall of Fame? The answer when Squawk Box returns. And now the answer to today's AFLAC trivia question. What 5 baseball legends were the first to be named to the Baseball Hall of Fame? The answer: Ty Cobb, Babe Ruth, Honus Wagner, Christy Mathewson, and Walter Johnson.
Guessed a few of those, not all of them. Anyway, Apple CEO Tim Cook speaking up following the fatal shooting of a man in Minneapolis by federal agents. In a memo to Apple employees, Cook said that he was heartbroken by the shooting of ICU nurse Alex Preddy and called for de-escalation. He also said, "I had a good conversation with the president this week where I shared my views, and I appreciate his openness to engaging on issues that matter to us all."
Meantime, in a memo to OpenAI employees, co-founder Sam Altman saying what's happening with ICE has gone too far. And on Sunday, CEOs of 60 major Minnesota-based companies, including Target and Best Buy, signed a letter urging, quote, an immediate de-escalation of tensions. Leaders across the country are considering the situation and the risks of speaking out. Sharon Epperson joins us this morning now with results from a new CNBC Flash survey on the topic.
Andrew, in a poll of C-suite executives, we heard from 34 firms, and one leader said their organization had spoken out publicly about the situation in Minneapolis. Here's how the other 33 leaders responded when asked why their organization has not publicly addressed the situation. 3% of the leaders are not opposed to ICE's conduct in Minnesota. 9% are still contemplating. 18% are worried about backlash from the Trump administration. And 1/3, 33%, responded that it is not relevant to their business. As one executive wrote in response to the survey, quote, "It would be a breach of management's fiduciary duty to use our business for such tangential political purposes. We do not view our silence as an endorsement of current administration policy, action, or personality." That may be the organization's response at this time, but communications experts say leaders should consider what happens next.
There is a next chapter to this moment. And I think that you will find a lot of consumers, a lot of stakeholders, and political leaders will remember that silence.
The overwhelming majority of leaders in the survey agree that it's not an easy call. 56% responded that it is a lot more challenging to speak out today compared to previous occasions when corporations have weighed in on social or political causes. For more than a quarter, 29%, it's somewhat more challenging, and 12% responded it's about the same. Only 3% said it's a lot easier. Now, this flash survey of CNBC council members, CEOs, CFOs, technology, and workforce executives was conducted over the past 2 days, Andrew.
Okay, so I have a whole bunch of questions.
I know you
That
do.
CNBC poll shows how leaders are responding. So then the question is, what do the consultants say they should be doing or not doing? And by the way, should we be listening to consultants at all? But there is a whole
view of that as well.
Ecosystem.
Exactly. But I think that this is an important thing that many of the consultants we talked to brought up is this is when you show leadership in chaos. This is when you focus on what your workforce needs to hear from you, that they're safe, that their well-being is going to be taken care of. That's what you want to make sure that you articulate to your workers as well as other stakeholders, and then also to make sure that you are informing and making sure all of the leadership team is involved, particularly the chief human resource officer, so that you really have a pulse of what's happening throughout the company.
Can I ask a different question, which is, I've been talking about how I think certain CEOs should speak out, not all CEOs. And the question is, and it speaks to this survey, which is, there's some CEOs say, this is just not tangential to, this is tangential to my business. Either I don't do business in Minneapolis or I'm just so far afield from this space. What do I have to say about any of this? And then there are other CEOs like Tim Cook, frankly, and Sam Altman and others who've spent a lot of time with the president quite publicly and this administration. And whether there's a distinction in either your mind or you think the public's mind, consumers and even employees' minds, about the role that leaders who are more engaged in politics, if you will, should speak out. Whether you think there's a distinction in how to think about that.
Well, I think what has come out from our reporting is that you're looking at when you speak out, it's not going to be the only time. So you have to make sure that you're consistent about what you're saying and what your message is. And so those who are choosing to be silent are saying, we're not going to weigh in on this because this is not part of our business. Those who are saying this is part of who we are, to make sure that our employees know that we're standing up for them, because in some cases, employees want you to take a stand. And they're asking for that. There have been many out there that are saying that.
To that.
And there's always blowback.
No, but you go back
There's
and
often
look,
blowback.
You go back and look at, I think, the last couple of years, including after George Floyd and just the sort of, this goes back to the go woke, go broke catchphrase, that if you sort of push on these political issues too far, it can actually have a demonstrable impact on your business on the other end.
Yeah. So it's basically the way the country is so polarized. It's evident in the workforce too. And so you're gonna anger 50% or 50%. That's what some of the leaders are saying.
Yeah,
we don't want to get involved.
Duck, or do you say something without trying to anger either side?
That's a call you have to make, and you have to be okay with whatever that response is. And I think that's what some are saying, that they're not sure yet. And others are saying, we don't care. We're going to make sure that we say something.
Well, and then the question is the statements themselves. Some of them are relatively anodyne, dare I say. Others are more provocative, if you will, right? And sort of how far are you going? You know, Tim Cook's statement, arguably in my mind, was relatively anodyne. It was not saying much about much. You know, Sam Altman, I give him great credit for saying what he said to the employees, but it came effectively after the pivot by the administration on some of these things. So it wasn't, you know, there's a nuance to this.
So that's why some leaders are saying they're taking a beat for now, that they're still contemplating what they're going to do, because we have seen just in the last several days the turn that the administration has taken on this, and the changes that have happened and what's happening on the ground there in ICE and who's there from the government. So I think that's part of what is happening as well. The concern is that there's, unfortunately, seems like there's always a next time.
Right.
And that next chapter is going to be very interesting to watch.
Thank you.
Sure.
Appreciate it.
Okay, when we come back, how a 175-year-old glass company is now a part of the AI boom. We have an exclusive interview with Corning CEO Wendell Weeks. The company just landed a fiber optic supply deal with Meta and is out with quarterly results today. Wendell will join us right after this break. Squawk Box, we'll be right back. right, welcome back, everybody. Materials company Corning out with fourth quarter results. Earnings came in at 72 cents a share. That beat estimates by a penny. Revenue of $4.4 billion beat estimates by $4.3 billion. It does come after the company announced a $6 billion partnership with Meta to supply fiber optic cables for its data centers. That stock right now is down by 3.4%, but yesterday it was up by about 15 or 16%. So over the course of the week, it is a gain of about 13%. Joining us right now is Wendell Weeks. He's Corning's president and CEO. And Wendell, it's great to have you here.
Always a pleasure to see you.
Okay, there's so much to talk about. Earnings beat expectations, but maybe the disappointment you see in the stock this morning is a reflection of A, the significant gains yesterday in the stock, and B, maybe people were looking for an even bigger number on guidance. You did lay out what's happened with Springboard since then. Springboard 2 years ago, you came and said, here's our plan for the next many years. And you are now saying this morning that that plan is showing improvements on what you're going to be doing on annualized sales growth, $11 billion versus the $8 billion from the original plan. So let's lay it out. Let's talk about the numbers right now, and then let's get to this deal, because that was the huge move in the stock yesterday.
Great. Well, as you remember, we launched Springboard here on your program about 2 years ago. And since then, we've grown revenue about 35%. We've grown earnings per share at greater than twice that rate, and we have doubled our free cash flow. And what we announced today is our new Springboard upgrade, where we expect to, from this point, to grow our sales at a double-digit CAGR between now and the end of 2028, with, of course, enhanced returns and cash flows for our customers. So that is what the Springboard upgrade is, and since every time we upgraded, we come here, we thought we'd do it again.
What you didn't mention is just over the last year, you've doubled your stock price as well, actually more than doubled it. It's up by about 105%. All of this is because of, well, it's two things. You're operating more efficiently, but you also are part of this AI ecosystem at this point, part of the building materials for that with the fiber that you are creating at this point. People look at this and they say, great, we are believers in the AI build out. There was more than $1 trillion in AI infrastructure build that was promised last year, but there is some skepticism around it. And we've seen this before with Corning, because you guys did so well with fiber during the .com boom and then the bust. I think in 3 years, from 1997 to 2000, your stock was up eightfold, but then it dropped by about 90%. And people want to know, A, what you learned from that and why this time is different.
That was right about the time I took over. It's right about after that 90% down. We've deliberately structured the company because we're in the business of innovation. You will have times when your innovations surge and when they retreat. So what we've tried to do is deliberately build balance and stability in the company. And when we construct deals like the major Meta deal, what we're seeking to do is appropriately share the risk and cost of these expansions. I mean, to get specific, when we put our talent and treasure to work to do something like we're doing for Meta, the main risk is, will we fill these large plants that we build? And will this innovation have demand? So we're the world's experts in the right optical products at the right scale and right cost. Meta's an expert at how to deploy those innovations in their architecture and how much they need. So what we seek to do with these agreements is they give us revenue assurance over a long period of time, and we give them supply assurance. So it's just a risk.
Last time around, you're saying, okay, we will expand this plant, I think by 15 to 20% of the employee growth there. You're going to expand the plant, but you want to make sure you don't get left high and dry if orders suddenly disappear.
Yes, and what we're doing is the first place we applied this was in our LCD innovations for these big 10.5 plants that produce the TVs that everyone is watching us on. That's the first time we tried this type of transaction.
When was that?
Where they fund, that was about almost 10 years ago we first started doing this. And then you just saw it again with Apple for all their cover glass in August. So what we're doing is we're taking that same approach we use in our glass innovations and now applying them to optical.
idea of what you're seeing in demand right now, describe that, because it's not just Meta that is looking for more fiber. That's all of the companies that are building out AI data centers. I guess Microsoft, you can run down the list of all these companies. What do you hear from your customers in terms of how much demand there is and how solid that demand is, how much you can bank on?
So we are in the process of concluding several other agreements of the same scale and duration as the Meta agreement.
Wow.
What is that all at the same plant, or these will be different plants around the country?
So what we're doing is in 4 of our major plants in North Carolina, we are doing investment both with inside our existing plants to fundamentally revolutionize the way we make fiber, cable, and connectors, as well as adding new roof. Meta is the anchor customer for these expansions, but we are also going to have dedicated capacity for several other customers who are going to enter the same type of risk-sharing agreement.
In terms, that's where I was going to go with. Just how are all? I mean, when you look at these other transactions and you look sort of forward,
yes, sir.
How are most of them going to be financed by the various players that you're involved in? Are they all very similar deals? Are they totally idiosyncratic?
They're going to be very similar. We have a set of tools we apply with our customers that meets their specific needs. But in general, they're all about them giving us demand assurance in a variety of different ways and us giving them supply assurance.
So what does that mean in terms of how much supply you can knock out, and how does the deal work? It was mentioned as an up to $6 billion agreement.
Yes.
That means they have to have demand levels, or they request what? How do you break it down?
That means that they are guaranteeing that stream of revenue for us. This is multiples higher than their current demand. So they're guaranteeing us that revenue. And what we're guaranteeing them is that we'll be able to deliver these products at that scale and continue to innovate.
In terms of all of that, I guess the street might wonder, why couldn't you raise your guidance more based on these things? Are you being cautious with this, or are these long-term plays that will take a year or longer to really show up in the results?
This capacity is going to start coming into play sort of in late 26 and next year and 28. These factories are large scale, these innovations are significant. So they start to come in as we go forward, but the capacity that we're going to do this year, we've already put in place last year.
Right. The springboard update that you're giving us, now $11 billion in annualized sales growth versus the $8 billion originally. So that's a $3 billion difference.
Yes.
That is a reflection of this deal with Meta, or that's a reflection of this deal with Meta and the others that are soon to follow?
So as always, you know us well. We tend to be pretty conservative. This allows us to come back and visit you for future upgrades.
Okay, so we're just talking about, I should assume that this is just the Meta deal, that's incorporated?
No, we're probabilistically adjusting, but we tend not to count our chickens until they hatch. It's another thing we've learned being 175 years old this year.
Wow.
You're mostly doing deals with it seems like the big hyperscalers. How often are you being asked to do deals with maybe companies that might be described as startups or something closer to sort of a low, because I think there's sort of this interesting ecosystem. We talk about the hyperscalers, but there's a whole other layer.
Yes, the neo clouds.
And sort of where do you play in that? Is that a safer place to play in terms of some of the commitments that some of those players can make?
Well, these tend to be very deep innovation relationships that take years to develop. So we tend to prioritize those customers with whom we've worked and developed products over time. But at the same time, we're also very welcoming to some of these new innovative customers. We work with them both, but that's how we do our capacity planning, that these major anchor customers provide that secure base for us to explore others as well.
AT&T was out with earnings this morning and talked about how they are going to be expanding their fiber footprint. They are planning on rolling out much more. In fact, they're going to be dropping the copper lines that run to people's houses. within the next 3 years, I think. That those will be gone. Are they a customer of yours too?
John Stanky's both a dear friend and a treasured customer.
Okay, so the demand that you see is not just the hyperscalers, but from some of these big telecom companies as well.
Yes.
How do you measure who gets what? I mean, it's like the issue that NVIDIA has, where he goes to dinner with, you know, Oracle and with Larry Ellison and Elon Musk, and they fight over who's going to get.
Well, I don't think I'll ever be as popular as Jensen, but
in terms of deciding what customers get it in a time of huge demand, how do you obviously Meta gets a place in line because they do this partnership with you.
Yes.
What about your old line customers who have been there for a long time? Do they get edged
the
out?
people that helped us build these capabilities, we will always take care of. Once again, it's just part of being in this unique situation of we celebrate our 175th birthday this year. And it's pretty cool that from when we came to launch Springboard back in the end of 23, that just over the coming few years, we'll double the size of the company. So that's pretty good for an old company.
It's not bad at all. This new fiber optic cable that you have, you've got your name on the patent included with that. What's different about this fiber optic cable versus what we thought about maybe 20 years ago?
Oh gosh, never make the mistake of asking an innovator about the product they invented. But
okay. Short and capsule.
In short and capsule, fundamentally, it's about density. How do we fit way more connections in a much smaller space? So basically, this set of innovations allows our customers to fit twice as many connections in exactly the same space, and to do it at a lower cost, more reliably, with better performance.
Does that mean the cable, the fiber that's in the ground at this point is going to all have to be updated?
One can only hope.
Yeah, okay. Wendell, thank you for joining us this morning. We appreciate your time. Wendell Weeks from Course.
Always a pleasure.
Thank you.
We've got a lot more coming up on Squawk Box this morning, including an exclusive interview coming up with New York City Mayor Zohran Mamdani on the budget. It's coming up at 8:45 a.m. Eastern Time. We return from a very chilly Times Square in just a few moments. Welcome back to Squawk. When we come back, the case against social media giants Meta and Alphabet, accusing them of making Instagram and YouTube addictive. We're going to bring you more on that just ahead. And as we head to a break, check out shares of insurer Elevance, earnings beating estimates, but revenue falling short and full-year earnings guidance lower than the street expected. Today's losses add to yesterday's plunge. This after the Trump administration proposed holding steady the rates for Medicare payments to insurers. And that stock off right now about 7.5%. Squawk Box coming right back. Welcome back to Squawk Box. Starbucks just reporting earnings of 56 cents per share. It did miss estimates of 59 cents. Now, revenue coming in at $9.9 billion. That topped street expectations of $9.7 billion. Global comp store sales rose by 4%, beating estimates of 2.3%. And U.S. comp store sales were also up 4%. China comps rising by 7%. CEO Brian Nichols said the Q1 results demonstrate that it is back to Starbucks strategy is working, and they believe they are now ahead of schedule. As for guidance, the company sees full-year earnings of $2.15 to $2.40 per share versus street expectations of $2.35. Also sees global and U.S. comp store sales growth of 3% or greater. You're looking at that stock on the move this morning. This is good news for Starbucks at the moment, up about 5.5%. Tomorrow on Starbucks, we're going to bring you an interview with CEO Brian Nichols, first on CNBC, and we will discuss all of this and so much more.
When we return, social media on trial. Meta's Instagram and Alphabet's YouTube accused of making their apps addictive. The lawsuits drawing comparisons to the legal action against big tobacco in the 90s. We're going to take a look at the case and how these tech companies plan to defend themselves. Right now, though, as we head to a break, check out the performance of Meta and Alphabet over the last month. Alphabet up by close to 7.2%. Meta shares up by 1.25%. Squawk Box will be right back. Meta and Alphabet are on trial in Los Angeles this week, facing allegations that the design of Instagram and YouTube leave young people addicted to those apps. Joining us right now is Anish Chopra. He is former White House Chief Technology Officer during the Obama administration. And Anish, we've been speaking for several years about what to make of the social media companies, where things stand, what government has done well, and where government has not done a very good job. What do you think of this trial? It's being likened to the big tobacco cases of the 1990s. How significant do you think it is?
Well, it's a blunt instrument to bring accountability on these concerns that social media overuse results in potential mental health issues for kids. I'll say that we have a bit of a mixed policy history here. The original Section 230, which provided a bit of that protective liability shield, also included a provision asking for the social media companies to responsibly self-govern. We can probably all agree that maybe just, hey, will you give it your best shot? Didn't quite work. We did try about a decade or so ago to bring more multi-stakeholder collaboration to get to these voluntary agreements, but that didn't seem to move the needle. So we're at a place now where if the social media companies don't get their act together and move forward, they're gonna face these blunt instruments or really regulatory challenges like in Europe with the Digital Services Act. And so it's kind of on them to want to work closer together or else face these sorts of more blunt instruments of accountability.
The social media companies will say, hey, we are doing our best. We're trying to make sure that we are policing this more. Other people will say, hey, it's the parents' fault for allowing kids on social media. How do you take those arguments?
Well, let's peel the onion back a layer. I mean, what we're really saying is that the feeds we're seeing today, at least the accusation is, their algorithms are maximizing engagement, which is encouraging more use, which is encouraging some of the behaviors that result potentially in mental health harm. So those are active choices that the platforms are making. And we're seeing a bit of a split. If you remember, X has made a slightly different move. They've published the algorithm for their For You, so you can actually have third parties evaluate whether they're doing particular things to kind of bump engagement. So that's transparency at a level that others haven't yet replicated. And they're giving you algorithmic choice. For those of you who look at your X feed, you can either do the For You or you can do following, which looks more like a neutral timeline feed. And so those are steps that are different than the traditional social media tools that perhaps our kids use. And that may be an area where we can see some divergence and really a legal interpretation as to whether or not you're simply a neutral editor if you don't offer these options, or you're actually an active product designer that has made conscious decisions that could potentially put people in harm's way. So that's a difference now in where the industry is operating, and hopefully with enough pressure, this could result in some collaboration.
In Australia, they basically banned these accounts for children under the age of 15. Do you think that's the right move?
I think these are blunt instruments. And so if you go back, I mean, even in President Trump's executive order on AI preemption, there's actually a carve out to say, look, we still need to solve problems like online safety for kids. And so states are allowed to kind of innovate here. What we need to understand is when you've got a new technology that is potentially filled with great joy and promise, and we're going to solve a lot of problems in the world, and I'm an optimist, right? That's my background. We also have to find ways to get the industry to work together on enforceable codes of conduct that are easier to adjust than changing laws or regulations that are really difficult to move. So we've got this trade. We want the innovation, but we need enforceable codes of conduct, and it's better to be organized by the private sector with stakeholders around the table, thoughtfully evaluating the micro decisions about what is too far, what is just right. And that just is a different DNA. And I think you've seen the frontier models take a step in this direction on safety. And so maybe we could get the social media companies to think about that more on the online safety for kids specifically.
Why is this so hard to get anything past Congress? I mean, some of these seems pretty simple. I'm not talking about doing what the French are now threatening to do, which is following Australia's ban for anybody under the age of 15. But why has it been so difficult to get even a baseline of protections for children's built in
when you
a
have
federal level?
Let's take the European Digital Services Act, and they've got very strict, detailed regulations on what you have to do, which is obviously a big part of the non-tariff trade barrier discussion with the Trump administration. When you have blunt language in the law around technical features, inevitably they're going to be a little bit outdated and subject to a court interpretation anyway. So if you're thinking about this trade-off, and see, we're looking for Goldilocks, okay, not too hot, not too cold. What we're looking for is, you don't want the industry to say, hey, please try harder. That's not good enough. You don't want to be blunt, because then you're sort of potentially constraining innovation and adding this sort of regulatory tax. What you really want is responsible governance with stakeholders. And so that's hard because Congress can't say, please work together on enforceable standards. You gotta have to set that as a norm. And this is not a lot of stakeholders that need to get around the table to do this. And so maybe if the trials go, and we have months and years to go to figure out where these particular ones land, hopefully there'll be another catalyst to drive action that speaks to that Goldilocks middle. Because otherwise we want to be an innovative economy in the United States, but we want to have responsibility at the pace of innovation. And that can only be done through sort of voluntary enforceable standards.
Yesterday, TikTok settled this case, so it was taken out of the lawsuit. Previously, Snap had settled. What are the odds that the other two major players end up settling, or do you think this is going to trial?
This feels like a category, Becky. I don't think this is a single trial. Like, we got state attorney general coming. Yeah. So I think it's, at the end of the day, we're going to have to set norms. And, again, I just point out, X has gone a certain direction and the other platforms haven't, and maybe there's a path to replicate. Because I'd rather, like in the Australia analogy, I'd rather there be choice to the consumer, an informed choice, than a blanket.
Anish Chopra. Anish, thank you for joining us this morning. I'm sure we'll come back to you with more on it.
Thanks for having me.
All right, it is just before 8 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick. Andrew is making his way downtown to City Hall, where he'll be bringing us an exclusive interview with New York City Mayor Zohran Mamdani. That is coming later this hour. Joe is out today. Among our top stories this morning, the Federal Reserve's decision on interest rates due at 2 p.m. Eastern Time. The central bank widely expected to keep interest rates steady, but investors will be seeking hints on longer-term changes to monetary policy. We've got more on today's FOMC decision and forecast coming up just a little later. In an internal memo, Apple CEO Tim Cook says that he is heartbroken over the shooting of Alex Preddy in Minneapolis and is urging de-escalation. Cook also said that he discussed his concerns with the president earlier this week. And German police carried out raids at Deutsche Bank in Frankfurt and in Berlin this morning as part of an investigation into money laundering. The bank confirmed that the investigation is taking place and said it is cooperating fully. You can see shares of Deutsche Bank off by about 2 to 3%, depending on when you check in. Let's get a check on the futures this morning. Right now, Dow futures have turned negative. They're off by about 21 points. S&P futures are up by 16. The NASDAQ indicated up by 225. Dom Chu is watching all of this. He's got this morning's pre-market movers. Dom, good morning again.
Good morning, Becky. So let's start with shares of AT&T, which are now higher. By you can see here, we'll take a look just by about now. Well, that's Deutsche Bank, but if we show you AT&T, it'll be up 2 3/4% now. The company actually reported higher sales in the fiscal fourth quarter, boosted by revenue increases in its mobility, its consumer and wireline business, and Mexico businesses as well. AT&T's postpaid churn rate, referring to that percentage of subscribers who cancel their service, came in lower than expected for the quarter, which also maybe encouraged some investors there. So AT&T shares, which are bouncing around, now just up fractionally in this pre-market trade. Meanwhile, Starbucks shares are moving higher now to the tune of 10% after the coffee giant just reported mixed quarterly results, beating expectations for revenues, but missing on the earnings front. Its global and North American comp store sales came in above analyst expectations, and CEO Brian Nichols said that the Q1 results demonstrate that its back to Starbucks strategy is actually working, and they believe they are ahead of schedule. Transactions also grew for the first time in 2 years, and that stock again up about 9.5% on that news. And then Morgan Stanley's out with an upgrade this morning of Johnson & Johnson, upgrading it to an overweight rating and raising its target price to $262. It was $200 prior. The bank cites higher estimates on new products, adding the company is building commercial momentum that's too hard to ignore. That stock is up just about 0.5% so far this morning, so keep an eye on Johnson & Johnson shares. Now, for more on those and other top analyst calls of the day, just head over to cnbc.com/pro, where subscribers get all the context and detail around some of those notable upgrades and downgrades each morning. Becky, I'll send things back over to you.
All right, Dom. Thank you very much.
You got it.
Joining us right now on the markets and some stocks to watch is Joanne Feeney. She is partner and portfolio manager at Advisors Capital Management. Joanne, there are a lot of macro things we can talk about, but maybe we should talk about what you're concerned about right now. There have been a few things this week that have rattled some investors. Markets seem to be powering ahead overall, but you are watching some of them with concern. You want to talk about that?
Yeah, sure. Becky, good to be with you. Clearly there are still risks out there, and people shouldn't underestimate those, and they should be positioned in their portfolios with those risks in mind. One of them clearly is a potential government shutdown, looking more and more likely. Potentially, though, a very short one if both sides of the aisle, which seems to be the case, look like they want to find some way to resolve this budgetary issue with Homeland Security. But that's clearly a risk. Other risks out there are the weakening dollar. It essentially is another tax on the consumer in the U.S. because it makes all imports more expensive. And then we have the longer term risks of the growing fiscal debt problem, and that creating upward pressure on long-term interest rates, which is likely to be sustained for a while. And then there are broader political risks. So it's important for investors to recognize those while they also embrace the potential continued growth of this AI investment period, and now probably in 2026, more and more deployment of AI applications.
Yeah, and that's been the thing, watching earnings coming in so far. Earnings have been pretty good. You did hear AT&T this morning. You had Texas Instruments last night, and that gives you a little faith about what you're seeing more broadly across the economy. Where would you be placing your bets, not only with what we're seeing on the industrial side, but with the AI boom in spending, as you mentioned.
Yeah, I mean, you mentioned Texas Instruments, Becky, and clearly they're a good barometer of what's going on in the broader economy. So the rebound they are seeing and reporting in industrials and autos, and certainly the growth they're seeing in data centers, are all really good signs. Which is, by the way, why we don't expect the Fed to cut rates anytime soon, with that strength in the economy still coming through and inflation still remaining above target. But in terms of the growth potential for investors, companies in the AI space that I think are particularly well positioned. Obviously, you have NVIDIA, a good core holding, but look beyond that. Look at Broadcom, for example, which is in the place in the AI world where they are selling those ASICs, those less expensive AI-based, oriented chips that are going to be more and more important as inference and applications grow. And so that's an opportunity. We've held it, for 10, 11 years since I arrived at the firm for clients, and it's clearly something that I think is well positioned, not just in the AI trade but elsewhere. But beyond that, look to something like Synopsys. Hasn't done well over the last year, but not only are they well positioned to continue to enable the development of new AI chip designs, but they've also gotten into the industrial business with a recent acquisition, and that gives them access to powering digital twins, which is one of the new applications that we think is going to be really powerful in the industrial space and medical space going forward.
Joanne, thank you for joining us this morning. We'll keep watching the earnings, and we'll talk to you soon. Up next, the Weil Foundation making a major donation to UC Davis. We're going to hear more about this donation. We will also talk markets and much more with Sandy Weil. That's right after this break. And later, New York City Mayor Zohran Mamdani will be our special guest. Squawk Box will be right back. Welcome back, everybody. This morning, the Weil Family Foundation is announcing a $120 million gift to the UC Davis School of Veterinary Medicine. That is the largest donation in the university's history. Joining us right now is Sandy Weil. He's the chairman and CEO of the Weil Family Foundation, chairman emeritus of Citigroup, and CEO of Casa Rosa Ventures. University of California Davis Chancellor Gary May is here as well. And so is Mark Stetter. He is the UC Davis School of Veterinary Medicine Dean and Professor. And gentlemen, welcome to all of you. It's great to have you.
Thank you for having us.
Sandy, this is a big deal. We spoke about it a little while ago, and you laid out why you're doing this. What happened? How did you come about? Because I think of you giving in a lot of different places, whether that be philanthropy to Carnegie Hall, whether that be some of the medical things that you've come on and talked with us about before. With cancer, with all kinds of different research that you're doing in autism and beyond. How did you get to the veterinary school? That kind of came out of left field when I heard about it at first.
Well, I've been married for 70 years, and all that time we've had dogs. My wife loves dogs, and we finally now have a dog that likes me, which
It took a while.
and has become part of our family. But basically, our previous dog, Angel, had lymphoma. And we didn't know what to do, but we had heard about UC Davis, so we decided to go there and see what they would do and could they be helpful. And they turned out to be terrific people, very knowledgeable about what they were doing, and we entered her into a clinical trial where the trial was terrific, and she had some good results for a while, but unfortunately the medicines weren't developed enough for a small animal at that point in time. But what I learned was that animals have a lot of the same, small animals have a lot of the same characteristics as people. And they get the same diseases like cancer and cardio and some of the neurodegenerative diseases. And I found out that no place in the world is better than UC Davis. And that's how I started, and I met terrific people like Gary May and went on the board and watched the growth of the university in its reputation, and I'm really I've never been happier, because now I think it makes so much sense to work with animals in experimenting on different things when they have diseases, and being able to do things that are much tougher to do with humans, with all the regulations and stuff like that. And I think great things are going to happen from institutions like UC Davis and working with other great research institutions with people.
Yeah.
So
That's what hooked me. Mark, I'll come to you on this, because when Sandy first told me that he was giving this huge gift to a veterinary school, I thought, wow, that's great. I love animals. But it wasn't until he laid out the potential benefits for humans that I really thought, okay, this is something that I understand, that I get more about. Why don't you lay out what you're able to do at the veterinary school that helps you kind of figure out things that might eventually help humans with some of these advances in medicine too?
Well, Becky, you know we have over 100 million dogs and cats that are family members across the country. Many of them are probably on beds and on couches and in the kitchen watching us today. And they get the same diseases as Sandy said, whether that be cancer or heart disease. And we see 50,000 cases in our hospital, in our veterinary teaching hospital every year. Those animals come in and are getting cutting edge treatment, and the things that we learn from those diseases in animals can absolutely help people. And we have a variety of collaborative projects with medical schools, with other programs that help elevate not only the animal health, but the human health. And so it's a real win-win situation.
Yeah, Sandy, I think what you told me is when Angel came in, you were able to get Angel into a clinical trial that was cutting edge. I think it was at Johnson & Johnson, right, where they had a treatment that was there. Right. And these are things that are helping Angel and these other pets, but the idea that this is research that then goes back to Johnson & Johnson or other medical companies that they would not necessarily be able to do through trials. And by the way, you're not giving the animal the disease, you're experimenting on animals that already have these diseases, trying to help them.
Right. And, you know, and one of the things that convinced me even more is that like a place like UCSF, which is a great research institution, loves working with UC Davis and the veterinary school. And when you hear good things from people in the business, like in the neurosciences at UCSF or in cancer at UCSF, I mean, you really see how things can happen where you can come to discover things in 1 year working in a vet school that might just take you 10 years going through the regulations. And therefore, I think it's going to help over the next decade in our coming up with a lot of things that's going to help human life.
Gary, can you talk a little bit about that, the partnership that you have with other schools like UCSF, and what that can mean for the speed and advancement for getting medicines to market more quickly?
Yeah, sure. Thank you for having us, Becky. This gift is going to be a game changer for UC Davis, and it will not only impact the work that we do with other universities, but will also help to connect the collaborations between our basic scientists, our clinicians, our vets, and our physicians. We do a lot of work across the UC system. UCSF is a great partner, but we also collaborate with other public universities across the country. We're very pleased to be among the top 10 publics in the United States.
When you say top 5?
I would say top 2.
Top 2?
Yeah, recently, the Wall Street Journal named us the second best public university in the country, and much of that is because of our outstanding veterinary medicine program, which is number one in agriculture, number one in sustainability. But this gift is going to be something that allows us to get a really strong head start on a brand new $750 million veterinary medical complex. And I can't say enough about how grateful we are to Sandy and Joan for a long friendship with the university, a personal friendship. And this gift will just be the beginning. We hope to find some like-minded partners similar to Sandy and Joan to help us get across the finish line. But as has been said, human and animal medicine have a very strong connection. And some of the treatments we have been able to perfect for animals have been applicable to humans and changing lives.
Mark, what's the most exciting 1 or 2 things that you've seen in terms of potential advancements in medicine that can make their way from what you're doing with animals to eventually to humans?
Well, one of the most heartwarming collaborations that we've seen is with stem cells. And stem cells have really been one of these things that we know have incredible potential, but we still have a lot to learn about how to utilize them. Somebody once gave me the analogy of stem cells are like teenagers. They can do anything in the world, but they need the right motivation at the right time and the right mentorship to get where they need to be.
Yeah,
the stem cells are the same way.
Yeah.
Right, so we have a lot to learn about how to motivate those stem cells to do the right things. I think you may be aware of some of the work we've done with spina bifida, and what we found is that if you have a puppy that's born with spina bifida, which is the same disease as in people, and you can use stem cells right after they're born and be able to put them in that lesion in their spinal cord, which otherwise they'd have to be euthanized because they couldn't walk, they'd be incontinent. And we learned that with these puppies, and then amazingly, we were able to say to our medical school colleagues, why don't you look at being able to use this with humans? And they took it one step further, which meant that they were able to use the stem cells in utero before the baby was born. And these kids that usually would be in a wheelchair for the rest of their life wouldn't be able to walk, wouldn't be able to do many of the things that we think about. Suddenly we're able to walk and have a normal life. And so that's a great example of something that we all would have had concerns about trying this for the first time with a kid without it knowing if it was going to work, and being able to use it with animals first, animals that get the disease naturally, helping them, and then taking it to the next level and being able to say to the FDA and to the regulators, this will work. And now it's off to a much larger clinical trial.
That's fantastic. Sandy, I know you look at philanthropy the same way you always looked at Citigroup when you were building it. You wanted to turn it into a super center, a financial super center. How does that apply when you're looking at philanthropy?
I think I'm doing the same thing that I did when I was in business, putting bright people together that believe collaboration is going to be a way where things can happen much faster than trying to do it by oneself. And I just find that in the business world, we put a lot of companies together that really worked very well, and I was lucky enough to make some money as the stock went up over a long period of time. Here, I'm doing the same thing, except here I have to pay to play. What I mean by that is I have to make that first contribution that gets other people to think that this might be a good thing, and we're working with such smart people working together. It is the greatest pleasure I've had in my life.
That's wonderful to hear. While you're here, I want to ask you a couple of questions about the markets, what you're seeing with financials right now. There is this new move from the administration, or a proposal that President Trump has put forth, to cap credit card interest rates at 10% for a year. What do you think of that proposal?
You know, I think a lot of people pay a lot less than 10% now. I think that the world is better when the private sector can operate and do what they think is right, rather than to have to follow regulations all the time. But you know, this would be a project that would be tried if it happens for 1 year. I think it could be disturbing. If it is, it'll change. But we have a president now that changes his mind from time to time.
Yes, he does. So you think that this is a proposal that won't necessarily make its way onto the books?
I think you never know.
No. You never know.
You know, Congress is so divided, it's very hard to get anything to pass.
That's true. We'll see if the government remains open towards the end of this week. And Sandy, I know you've talked to us in the past about Jamie Dimon and said that it was probably your biggest mistake. I think you told us that in 2014 when you were here.
You've got a good memory.
I do. I went back and looked it up. When you watch what Jamie has built today, what do you think? 20 years on, JP Morgan is probably the size of the next 3 biggest banks that are out there.
Mm-hmm.
What do you think when you see all of that?
Well, Jamie was working with me in 1997 when we spoke to JP Morgan about merging with our company, where a bank and an insurance company had never done anything together. And JP Morgan felt that all their people were brighter than every one of our people. I said, do you really think that's true about Jamie too? He said, yep, everybody. And that was the end of our thinking about doing that merger. And watching Jamie now, I am so proud of what he's built. It's phenomenal. And God bless.
Yeah, that's right. What do you think when you look at the markets right now? Do you pay that much attention to them these days? I mean, on some level, I would imagine it fuels what you're giving away in philanthropy.
That's correct.
Yeah.
Yeah, that's where everything is going to go when we're not here. And we've given, I think, somewhat close to $2 billion already.
Wow. $2 billion over the last...
Well, our foundation is over 50 years old.
Yeah.
And our first year we gave away 3 checks. 2 were for $10 and 1 was for $100. So the numbers have changed a little bit.
A few more zeros on the checks these days. Sandy, I want to thank you very much for being with us today. I want to thank you, Gary and Mark, and I can't wait to see what you guys are doing with this, because I think the potential for what this can mean for speeding up cures is a really fantastic thing. Thank you, Sandy, for bringing this to us today. Keep us updated
Thank you,
on where
Becky.
things go. We appreciate
Thank you for what you do.
Thank you.
And keeping everybody educated.
Okay, thank you
Thanks for
very
having
much.
us.
Still to come this morning, it is Fed Decision Day. We have a preview of what's to come this afternoon straight ahead. And then New York City Mayor Zohran Mamdani will join us. We're going to talk about his budget plan for New York City, affordability, the situation in Minnesota, and much more. Squawk Box will be right back. Welcome back to Squawk Box, everyone. The futures this morning are now showing the Dow off by about 7 points. The S&P futures have paired their gains. They're up by about 13 now, and the NASDAQ is still indicated up above 200 points. It's sitting just above 220 points higher. AI startup Anthropic closing its latest round of funding somewhere between $10 and $15 billion at a $350 billion valuation. That's according to sources who spoke with CNBC. That figure could grow if Microsoft and NVIDIA decide to contribute to fundraise. Cotu and Singapore Sovereign Wealth Fund, GIC, are leading that financing. Still to come this morning, the Fed not expected to move rates this afternoon, but there is a big focus on the committee's outlook. We'll have that story next. Squawk Box will be right back. Welcome back, everybody. The Fed not expected to change rates today, but there remain plenty of questions surrounding the outlook and the press conference today. Our senior economics reporter, Steve Leisman, joins us right now with the details. Steve, it's a big day because of the lead up to this and what people are going to be watching from a political point of view, too.
Yeah, I need more than one question, Becky. I only have one and a follow-up, but I'm going to need more than one. It's going to be Fed Chair Powell's first time taking questions from reporters since he accused the administration of launching a criminal investigation into the building renovation as a consequence of where the Fed is setting rates. He'll face questions from the press on that, but also on with the Fed on pause, what will it take to get the Fed cutting again? The Fed, by its own account, is on the high side of neutral, but they're divided by how much. Some say the Fed is at neutral, others say neutral is a full percentage point below the current rate, others say just an eighth below. The Fed is similarly divided on the outlook for this year. 11 officials in the December projections have only one cut or less. 8 had 2 cuts or more. To bring back cuts, Gregory Dacko of VY Parthenon says the Fed will need to see either clearer, more durable evidence of disinflation or a renewed labor market downshift. As for the market price, again, a 62% probability of a cut by June and another 62 of a second cut by December. That's a good number, but it's not tremendous confidence. So the Fed is seen getting on with rate cuts eventually, but not a whole lot of confidence. Of course, a lot depends. Who leads the Fed? Who else the president appoints to the Board of Governors? How much legal authority the Supreme Court grants the president to fire governors? It's also going to depend on whether Fed Chair Powell decides to stay on as governor and the outcome of the criminal investigation, Becky.
Dare I ask what your one question will be or your follow-up?
I don't know. I do want to ask about the video that he gave it. But I also have a lot of questions about the monetary policy outlook. And I guess when I think about what our viewers want to hear most, I think it's probably about the outlook for rates and what it would take to get the Fed cutting again. But I'm very curious. For example, I could ask him point blank, and I don't know if he's ready to talk about this. Mr. Chair, are you ready to tell us if you're going to stay on as a governor after your term as chair ends? He hasn't dealt or hasn't talked about that before. But, you know, you ask these questions and he shuts you down, and then eventually he's ready to talk about it. I don't know yet. So it's a gamble, you know, you could be shut down right away.
Do you waste your question?
Well, he has provided...
Or do you potentially get an answer out of it?
He has provided reporters with a mulligan before. He said, you know, you blew that one, take another one. So he's done that before. He's pretty funny about that. And then, of course, when these questions come out about the video where he accused the administration of this criminal investigation as a pretext, you might, during the press conference, be getting tweets from the president. So it could be... One economist wrote, Joe Brisuelis wrote in his commentary, get out your popcorn. He says this is going to be pretty interesting.
Steve, thank you. We're going to be watching closely.
Me too.
And we'll get bingo cards out on what we anticipate you're going to wind up asking.
Send me a note, Becky. Tell me what you want me to do here.
Okay, we'll do. I'll see you later, Steve. In the meantime, let's bring in former Kansas City Fed President Esther George. Thank you for being with us today, Esther. I know you had already said that you would not have voted for the 25 basis points cut in December. How are you feeling about things now? I'm guessing that stance still stands.
Yeah, it does still stand for me, Becky, but I think when you look at the landscape that we're facing right now, we are going on now 5 years of inflation running well above the Fed's target. And I think today, the committee has signaled it's time to pause. They've done 3 rate cuts. They have talked a lot about their concern about the labor market and what they're trying to do to support that aspect of the mandate. But the truth is that the inflation target cannot be ignored, and it is going to be connected as we look at the year ahead to what happens to a number of movements in the economy that I think are going to be telling about the inflation landscape.
Yesterday, we got consumer confidence numbers that plunged to the lowest level we've seen in 12 years. It was because not only this consumer angst about higher prices, but also consumers worried about the job market too. That plays to the 2 mandates that the Federal Reserve has. Which one plays a more important role if the job market wobbles a bit?
Yeah, so in a mandate that requires you to look at both aspects of this, I'll be looking today to hear how the Fed is judging the risk. Is it more two-sided risk here that allows them to pause and wait and see what happens? Because I think we are getting very clear signals out of these sentiment surveys, both on the business side and on consumer side. High prices are a problem. People don't like high prices. But when you combine that with the fact that you don't see a lot of hiring going on, it does cause people to have sour sentiment, even in the face of an economy you might otherwise say looks like it's moving ahead in a pretty solid fashion.
You know, inflation is a beast, and you mentioned it's been 5 years. The inflation rate has come down significantly, but prices don't come down just because inflation comes down. Affordability is the key word that keeps playing its way across the country and is being picked up by both political parties at this point. The president has made the point that he would like to bring down rates to help consumers out, whether that be on getting a cheaper car loan, getting a better mortgage price, having lower interest rates. He's talked about this cap on credit cards. There's a lot of angst that comes with that, with people who don't want to see the government more involved with these things. There's angst on the idea that those very moves could cause inflation to rise even higher. But if you're trying to fix prices and affordability, what's your argument about moving rates to try and bring down mortgage rates?
Yeah. Well, I would say all good intentions, Becky, but there is a high cost of good intentions as well. And that high cost would come in the form of creating more demand at a time when inflation is already high. And so it becomes, over time, really a tax against the purchasing power of the very consumer that you are trying to help. The best remedy, in my view, is over the long run, you want to calibrate interest rate policy. You want to bring into balance supply and demand. And once that can be achieved, then the economy has the ability to grow. People don't have to worry about the prices of things, as we saw over the last 20 years plus. That was not really a factor. Today, it's become a big factor in how people view their purchasing power, their ability to be able to sustain their standard of living. And so I think the best long-run path here is not to intervene as much as it is to allow those dynamics to play out. And of course, the Fed has been given a specific charge by Congress on how it should look at those factors in terms of the job that it plays relative to setting interest rates.
Esther George. Esther, thank you for being with us this morning. We appreciate it.
Thank you.
Let's get over to Andrew. He has made his way to a special location. Andrew.
I am at City Hall in New York right now, and coming up next, an exclusive interview with New York City Mayor Zohran Mamdani. Squawk Box coming back with him right after this. Welcome back to Squawk Box. I am downtown at City Hall this morning, and joining me right now in an exclusive interview is New York City Mayor Zohran Mamdani. We've wanted to talk to you for a very long time about so many different issues going on with the city, but I know that you've been working on the budget, and that is one of your first priorities, and so let's go there.
Absolutely.
Because I know that this morning, I believe, you're planning to make some announcements about the budget.
Yes, well, first I want to say it's a real pleasure to be on.
Thank you.
And today, you're right, we're going to be sharing the truth with New Yorkers that has sadly been hidden from them for far too long, which is that the prior mayoral administration has left us with a $12 billion fiscal deficit. And this is at a scale that's actually greater than what we saw here in New York City during the Great Recession. And it's something that is attributable to gross fiscal mismanagement, to a refusal to actually budget honestly and be direct with New Yorkers. And that's what we're going to actually do today.
Okay, so the big question is, assuming that that is the hole, how do you fix the hole?
I think the first way is you actually be honest about it. And the reason that that's important is what we saw in the last year from the mayoral administration was there was a recognition about the scale of this crisis, but instead of actually being direct with New Yorkers, it was trying to shift those costs out of view. We had cash assistance, for example, where we were budgeting only for about 50% of its cost on the books, keeping about 50% of its cost off the books. The second thing is about actually making the case for how we fix structural imbalances in the city. We're talking about a $12 billion deficit that is a result of not just the fiscal mismanagement, but also the decades-long effort of then Governor Cuomo to shift costs from the state to the city. So we need to change our relationship to the state. We also need to change our relationship to the wealthiest residents and most profitable corporations here in New York City.
Okay, so let's speak to that, because that's something you run on, raising taxes on the wealthy in New York. How much?
I know that's very popular on this program.
When you look, though, at the budget and this hole you're talking about, how much do you look at this hole and say, I can solve this because there are things in here that I can cut, there's zombie programs, other things? And how much do you think it is absolutely necessary for you to raise taxes on the wealthiest?
I think the scale of this crisis is one where we have to pursue all of these things. I have to show that this city government is not just serious about public goods, but also public excellence and public efficiency. And so we have to make sure every dollar that's being spent is actually being spent in a worthwhile way. I'll give you an example. The previous administration launched an AI chatbot that is basically unusable, cost the city close to $500,000, right? That's the kind of money that is going down the drain. At the same time, $12 billion of a fiscal deficit requires the kinds of increased revenue on the top 1% of New Yorkers who make $1 million a year or more, increasing their taxes by 2%. It also means that we look at the relationship between the city and the state, where New York City is the economic engine of the state, of the country. And yet, while we contribute 54.5% of the state's revenue, we only receive 40.5% in return. And if we had actually bridged that gap over the Cuomo years, we'd be talking about receiving an $8 billion additional every single year.
Do you go after that money first, or do you go after the additional tax dollars on the wealthiest New Yorkers first?
I think as a New Yorker, you always have to do all of the above. And so we have to both increase taxes on the wealthiest, we have to also change the relationship with the state, and we have to pursue these kinds of savings and efficiencies here in our city.
Speak to this, because one of the biggest issues about taxing the wealthiest New Yorkers is the possibility that they leave New York. So the top 1% of New Yorkers pay somewhere between 40 and 48% of the total revenue for New York City taxes. If a couple hundred of them are mobile and have a private plane and can leave, live in Florida and come here, 150 days a year, that's a problem. What do you do about that?
I think you get back to first the facts, because capital flight is always spoken about whenever we talk about the potential of increasing taxes on the wealthy. What we've seen is that since 2021, when New York State increased taxes on the wealthiest New Yorkers, the number of millionaires actually increased in this state. And so it has to be to get back to the facts. The second thing also has to be, we are increasing revenue also to be able to increase quality of service. Right? We're sitting here right now in one of the coldest stretches in New York City weather history. One of the reasons why the city could start to get back on its feet was because we had a sanitation department that was staffed by thousands of people, to the extent that we could have 2,500 workers on every 12-hour shift. That's only possible when you're actually investing in public service.
You talk about more millionaires in New York City, and that's true, but at the very tip of the spear, I'm talking maybe even the billionaires, their ability to be mobile seems higher. And so the question is, you look at a state like New Jersey. David Tepper was a hedge fund manager in New Jersey who left the state. All of a sudden, they lost something like $140 million in revenue annually. And so the question is,
if you lose a couple of those people, is that in your mind okay? Is that a cost of doing business? Or is that a problem, and what do you do about that?
Well, I think I have to prove that this increased revenue leads to an increased quality of life. And frankly, we also have to get through the kind of fear-mongering that typically takes place in this. The other day, I was speaking to a New Yorker who self-identified themselves as someone who would be taxed by our proposals. They said, I've heard that you're going to tax millionaires. Is that true? I said, yeah, that's what we want to do. We want to increase personal income taxes by 2%. They said, I'm going to leave, like you're saying. I said, I don't think you will. They said, why? I said, because it's a 2% increase. We're talking about $20,000 on an income of $1 million. They said, that's actually much less than I thought it would be. I wouldn't actually be making a financial decision on the basis of that kind of an increase.
I got a philosophical question for you.
Come on, hit me.
If you look at the top marginal tax rate for somebody who lives in New York City, this is somebody at the tip of the tip right now, you could be paying somewhere around 52, 53%. Is there an invisible line in your mind where you say, actually, that the average New Yorker, not even average New Yorker, but the wealthy New Yorker says, no mas, this is just, there's a number, I'm happy to give 50% of my income over annually, but after this, it's just too much.
I really think the invisible line comes from whether working people can afford to live in the city. And what I mean by that is, for all the talk about capital flight, the potential of it, we lose sight of the fact that there is an exodus of people from the city. It's working people, right? We're talking about so many who are leaving because of housing costs, childcare costs, and also we tend to talk about this as if it's a conversation about a collective versus capital. But even when I sit down with business leaders, I ask them, what are some of your greatest retention issues? They'll tell me childcare. They'll tell me that when their business invests in childcare, in the business setting, they see their retention rates increase. And part of the reason they have to invest is because the city has refused to acknowledge its own responsibility in this.
Well, I think the question is, can you do it without increasing taxes? I mean, de Blasio ran on increasing wealth taxes and got pre-K through without an additional tax rate.
I think that we've shown that we are advancing universal child care. We're doing it with existing state revenue, and that was on day 8 of our administration. However, we're also inheriting the largest fiscal crisis that we've seen since the Great Recession. And I think that here in the most expensive city in the United States of America, also the wealthiest city, we have 1 in 4 people living in poverty. And I think the last point I'd make, kind of more at the philosophical level as well, is that everyone benefits from a stronger city. And what I mean by that is that though you may not think that the programs we're speaking about might directly benefit you, the benefit it has to the strength of this society is one that is immeasurable, just in terms of peace of mind and...
I don't think people disagree with that. Business leaders don't disagree with that. I think the question is, how do you make this a super attractive place to do business? And so I'm going to ask you about this, which is part of the issue is about people talking about the flight, the exodus. The other piece is the incentive to come to the city, to start a new business in the city. JP Morgan just built a big building on Park Avenue. It's very hard for them to go, right? They're locked in place. But for a lot of their other business, for example, they're moving to Texas, they're moving to Florida. And so the thought isn't necessarily, do they leave, so much as do they come?
And I think that, to me, is the health and vitality of the city is not by protecting what it has, but continuing to grow. And for too long in our politics, there's been this kind of reverse New York exceptionalism, where we say things that worked elsewhere could never work here. We're New York, we're always going to be great. We have to earn that greatness every day. And so part of my point here is that I want us to be delivering the best public services this country has ever seen. I want us to have a public transit system that is so good that no matter how much money is in your pocket, you say, quickest, best, easiest way to get around, I'm gonna get on the train, I'm gonna ride the bus. That is something that can be transformative. It's only possible, however, if we reckon with these structural issues.
Let me ask you about this. President Trump says that he is worried about an exodus as well. He told a radio show this week, I got along very well with him, that's you, says you have a very good personality, by the way. I want to see New York be successful, and if he could make it successful, make it much more successful, because now it's heading in the wrong direction, losing people. You saw, I said, the New York Stock Exchange, having a major stock exchange built in Dallas, is not a good thing. How do you react to that?
Well, look, I think the president and I had a productive meeting at the Oval Office, and after that meeting, he said, when New York does better, he's happier. I think that for everything that we have firm and fundamental disagreements about, we are also 2 New Yorkers who care deeply about the city. And I would agree that this is a city
that has become so expensive that so many are being pushed out of it. And I think even when we talk about the cost of childcare, it's $25,000 a year, and that's considered a good deal in New York City. You could be earning $200,000-$300,000 a year. That cost could still push you out of the city. And so I do think we need to take this affordability crisis seriously. I also think we have to pierce through the fiction and get to the fact of what's actually happening.
We're talking a lot about wealth taxes. We're not really talking about corporate taxes, which actually also have a big impact, not just on big corporations, even though they're called corporate taxes, but on small businesses and bodegas and the like. And the question I have for you is, I know you want to raise corporate taxes and you want to make that, what you say is similar to New Jersey. But at the same time, by default, that is going to have a demonstrable impact on those corporations to employ people.
So the corporate tax that I've been speaking about is the highest echelon of profitability. We're not talking about the bodega where you're getting your egg and cheese and jalapeno on a roll. We're talking about corporations that are making an immense amount of profit. And what this is about is redirecting to ensure that that profit is also something that helps the city remain strong, that helps the city also get back on a firm financial footing. Because right now what we're seeing is there's an immense amount of money being made in the city, but that prosperity is not reaching enough New Yorkers' lives.
One of the big issues nationally is the question of ICE, what we've all seen happen in Minneapolis. But there's a big question about whether ICE is going to come to New York. And I'm curious about what kind of conversations you've been having with the president, with the administration about that possibility and how you think you would be reacting to this.
I said to the president directly that these ICE raids are cruel and inhumane, and that they do nothing to actually serve the interests of public safety. And that public safety is of paramount importance to us. It's the cornerstone of an affordability agenda. But to use it as a justification to pull people out of their cars, out of their homes, out of their lives, it is completely contradictory to what New Yorkers are seeing and what Americans are seeing. And I think what we've seen is that there is a fear that has gripped hold of so many. And this is a fear that is without respect to anyone's documentation. A friend of mine the other day told me that if ICE was to come here at the kind of presence that we're seeing elsewhere, they wouldn't feel comfortable with their mother, a U.S. citizen, leaving the house because they wouldn't know if she would be profiled. That's how people are living.
Do you think ICE is coming to New York City?
We're going to do everything in our power to ensure that what we see elsewhere, we keep making the case directly to the president, directly to New Yorkers, to Americans, that these kinds of actions, they are the actions of a reckless agency that is operating with impunity, one that deserves to be abolished, frankly, and that they do nothing to actually serve public interest. The other thing I'd say is you have to prepare in advance. In the same way that with this snowstorm, the reason we're able to actually respond to it on the day of the storm is not because sanitation's there on the morning of, it's because Friday morning they've brined all the highways and major roadways. Similarly, if we're talking about the prospect of ICE coming here, we have to ensure New Yorkers actually know their rights. New Yorkers know what it means to be a sanctuary city, that we have a law department that's ready to use the courts as one form of the battleground. That's what we're also preparing for.
Now that you're the mayor, how has your relationship changed with the business community? And how do you feel about billionaires today who are now your constituents who you represent? Because you've talked about them in ways that frankly a lot of them don't like. And I'm curious if you think that being in the seat today changes your view in any way or changes your disposition about how to approach this.
Well, I think being the mayor of this city is to be the mayor of all 8.5 million people of this city. And I've made very clear to members of the business community that my definition of success is not that anyone leaves this city. It's not that there's some kind of a win in a narrative war. It's that everyone stays and that we have more room for others to join as well. And I think there was this moment I was speaking with a real estate leader, and he was kind of portioning out where the profits of his company come from. He pointed back to his office. He said, about 20% of what we make comes from what we do in the office. And then he pointed outside the window and he said, and about 40% comes from what you do out there. So he said, whether I like you or not, our fates are intertwined. And I think no matter the scale of policy disagreement, what brings us together is a love of this city. That's what we're going to pursue with these policies.
Mr. Mayor, thank you for being on the broadcast.
Real
I
pleasure.
hope we get to continue this conversation. Lots of big questions about capitalism and socialism and all sorts of things.
Never heard about any of that.
So we'll do that more. But thank you this morning. Appreciate it very much.
Absolutely.
I'm going to send it back to Becky.
Squawk Box will be right back. Thank you, Andrew. Breaking news on Squawk Box this morning. Amazon laying off 16,000 corporate workers. This is the company's second round of major job cuts since October. In this morning's earnings report, Starbucks reporting traffic growth at stores for the first time in 2 years. CEO Brian Nichols said that it proves his back to Starbucks strategy is working. The company missed earnings estimates and gave guidance on the lower end of expectations, but that stock is up by 7% in early trading. And natural gas down by about 12% after that recent run-up because of the cold snap, the cold weather. There are reports of thawing, allowing some nat gas facilities to operate again after a deep freeze stopped some operations. Let's take a very quick look at where the futures stand right now. Dow futures are off by about 34 points. S&P futures up by another 15 points after closing at a record level yesterday. And the NASDAQ indicated up by 211 points. Make sure you join us back here tomorrow. Right now, it's time for Squawk on the Street.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl King today with Jim Cramer, David Faber, and Post 9 of the New York Stock Exchange. Futures are mixed as we come off Tuesday's S&P all-time high. Big day with the Fed decision, mega cap tech earnings tonight. Dollars trying to stabilize after the worst one-day sell-off since the tariff rollout last spring. And gold at 5,300. Our roadmap begins with the state of the AI trade as Texan, ASML all rally on the back of their latest earnings, and China reportedly giving the nod for its tech companies to buy those H200s.
Plus, Meta, Microsoft, and Tesla all getting ready to report earnings. That will be after the bell today. Of course, we'll try and get you ready for those. And it's also a Fed day, a decision on interest rates. Chair Powell's news conference as well. That's the first one since he took that unprecedented step in accusing the White House of trying to use legal threats to pressure him to slash rates.
Let's begin with the markets getting a lift from the AI trade today in this rally in semiconductors. S&P, of course, now within some striking distance of hitting 7K for the first time ever. But man, Jim, the news in the chip space today is incredible.
Yeah, I mean, you've got outfits like Texas Instruments. We know this is a storied company, but they have historically been both conservative and actually missed a lot of markets. Always seem to have a lot of inventory when everybody else was shy. No more. They have this data center business that's broken out. This is on fire. They have their inventories are low for everything. Auto's even good, but industrial's amazing. It's an industrial renaissance, no doubt about it. The data center business is extraordinary. Seagate last night, they can't make them fast enough, but they're not adding a lot of capacity, which is going to make it so they continue to raise price, fix the gross margins, which aren't that good. ASML last night was, it's almost double the orders that we thought. And what I think is happening here, David, is it's almost as if, I'm going to go back to NVIDIA for a second, that everyone got the new NVIDIA chips, which are really a platform with software, and they realized, you know what, these things just generated a huge amount of data. Particularly people hearing about data on NVIDIA. Data, just a lot more data than we've seen. And what's happened is that people are all catching up, and you're seeing an explosion in business for anything that involves storage because of how much storage you need from NVIDIA.
I mean, this kind of was a trade that was seemingly obvious, but months ago, I would think, and we talk about so many of these stocks that have had incredible moves, and obviously today we're even looking at Texas Instruments, which has not had the greatest period of time in terms of the stock, but Seagate, but obviously the SanDisk, the Microns, the AMDs. Wow, the Intels until, of course.
Did Micron break ground on a new plant today? They break ground.
They seem to break ground every day.
Like
Yesterday was potentially but my point, Jim, is that this was kind of there.
It was all there, and you know what? The only guy who got nailed for not getting it right was Lip-Bu-Tan from Intel. And yet I think the Intel foundry, I think wouldn't be surprised me if they had both Apple and NVIDIA as customers. NVIDIA, by the way, very close to Intel. So everybody needs storage. But I would think, David,
but your point being that Intel, did not see potentially, I mean, they run out of inventory, right?
By their own, but unlike everybody else, by their own admission, they thought, Lip-Bu-Tan is such a humble man. He said, Lloyd, the CEO of Intel, I didn't get it right. I wish I had. But he will get it right. The stock's up, and the foundry that they're building, which is the Gelsinger White Elephant, is going to be used. There's a second one, too, that I think will be used. But, Carl, I think that I don't think people realize what Anthropic would come up with. what would happen with Gemini. Yesterday Microsoft bought this company where I saw they had a bartender, I had a drink from it. It was all phony then, now it's real. These robots require a huge amount of data. Everything needs more data, and the companies were all caught unaware. And the only ones that really were ready for it were Lam Research, Applied Materials, and I would say KLA.
Yeah.
They seem to know.
Yeah, AMAT today, Mizuho finally goes to outperform on AMAT.
But the street is so wrong. I mean, there's a lot of guys that upgraded Texas Instruments. Well, they took the numbers to 160. I mean, look where the stock is, for heaven's sake.
And we haven't even really touched on this renewed revenue forecast out of Anthropic, to your point, or the additional SoftBank investment in OpenAI.
Billion. I mean,
I'm going to talk more about that in a bit in terms of, I got a little bit more color around OpenAI. But the point, obviously, you're raising is the money that is coming into both Anthropic and OpenAI is enormous. It is padding their balance sheets. They are also dealing with incredible continued increases in their overall revenues and or what the spending that will then be associated with that as well. That ends up in the data center, although frankly, they're not the ones paying for the building of these data centers or all that.
No.
They're just simply there to buy the tokens, so to speak.
Right. Now you're going to see Glassworks, Corning, go down. I'm used from the old days, and that'll be down because it was up 16% yesterday. You're going to see GE Vernova go down because people feel like it's fully discounted. That's completely untrue. You want to buy GE Vernova, hand over fist, and get 7680.
Yeah, Glassworks.
Sorry, what?
Sorry, we put up the wrong stock. Yeah, go ahead.
Oh, that's not impressive.
Yeah, go ahead.
But I think about this GE Vernova, and they too, Scott Strachan was talking to me this morning, they too saw a flood of orders. It was like people realized, wait a second, this is for real. I mean, Carl, if you watched our show, shame on you if you're one of these companies and you're like now finding out it's for real. Yeah. I mean, all we ever did would have Jensen Huang telling you, listen, this is going to change the world and so forth. Suddenly they say, you know what, it's real. It's real.
Although, Jim, your point is good. That is the earnings prints that are negative today, right, that are down stock-wise, Otis, MSCI, Textron, Teva, PPG, Logitech. Is the chip news taking all the oxygen out of the room?
Yeah, it has, and I think that when you talk about industrial, like Texas Instruments, it's industrial related to this kind of product. There's not more elevators being built. I think Judy Marsh did a remarkable job servicing elevators to be able to get the business. Anyone who is just flat out just industrial, it hasn't been great. By the way, Roper is no longer industrial. People forget that. Roper switched to an enterprise software model, which of course is the worst model imaginable. But I would point out, David, that if it's industrial that's working, even when it comes to Nucor, it's related to this.
It's related to the building of data centers and to what goes inside.
Also the border wall, Nucor business, and some auto. But if you want to know what's the spur of the economy, it's data center.
The other element of this, Jim, and ASML does have layoffs embedded in this, along with the Amazon news, along with the UPS news, along with the Pinterest and Citigroup news we've talked about.
It is incredible. When you see what happens at Wells Fargo when they hired a guy from Amazon Web Services, gets in there because the people who are bankers don't really know how to do software, so they're starting to bring in people from these places. Starbucks brings in someone from Amazon. It's like the Amazon and Megas are taking over the world. One of the things when you bring in Amazon, David, it's kind of like the old days when you used to bring in McKinsey, and it would be a way to be able to cover your firings.
Yeah, although, I mean, to be fair, and obviously the Amazon news is important in terms of the numbers that we're talking about of white-collar workers at the company. But they also, Amazon was the poster child for hiring during the pandemic, certainly.
When you tell me, I would say to the CFO, I'd say, hey, why don't you have hired 500,000 people? Why don't you just fire 200,000 people? And he said, no, it's like Jenga. Maybe you pick the wrong guy.
What I would
Next thing you know, you get your Johnson Maiden powder 3 weeks late. Next day.
We are going to all jump to the conclusion somehow that many of these layoffs are related to AI, but it's far from clear that that is the case as yet.
I'm not getting that.
Which may actually be scary in the sense of if it's not related to AI, what will come in terms of the layoffs that will occur as a result of the efficiencies once AI really is embedded in the enterprise and is getting used in a more significant way than really still is the case right now.
No, it isn't at all. And look, Anthropic just went viral a month ago. An Anthropic product that is going to make it so that enterprise software is really software as a service. I mean, everyone I can service now on tonight. I mean, this thing's a free fire zone. It's a good company, but the price to earnings multiple is shrinking. Like Salesforce wins that $5 billion contract with the Defense Department, the stock goes down. How hated is this group?
There is investors see something very scary on the horizon. And they wonder whether these agentics, even though the companies themselves have them, and they have the relationships with the clients, that they're going to somehow be disintermediated by new companies that are able to harness AI in a different way for specific tasks that are going to make this superfluous.
And that's why, for the longest time, a SanDisk, a Seagate, a Western Digital, these were the worst, Texas was the worst stocks to own because they're like, people thought them were metal benders. They never thought that the memory. When the Seagate call, by the way, was like, yes, we've got the greatest technology. They're like using technology. I mean, yes, their technology's not that bad. And if you go to Sandra Morocha, his high bandwidth memory that's good. It's got to, but that's not NVIDIA.
It's a chip cycle, Jim. You don't need to be leading edge to have a chip cycle.
No, you don't.
But
Look at that
it still may be early.
That's that's the Teton. That's the left.
It's incredible. If you'd made the decision a year ago or say, I'm just going to invest in everything related to the data center, whatever's going in there, whatever's powering it, however it works, everything that the portfolio would have performed extremely well.
There's only one company that did that. NVIDIA. 100% data center. These other guys didn't do it.
No, I'm saying as an investor, Jim, as an investor in public securities that were available.
It didn't spend.
What are you saying? He's saying NVIDIA did that.
He's saying it was the purest of all those.
Jason, when I went to his mom last summer, he said, Jim, you got to emphasize this. These guys aren't buying enough equipment. They don't see a CPU shortage coming. They don't see a data storage coming. I mean, he told them all.
Oh, you're saying he knew he saw
told them all. And I think people just said, yeah, well, I'm going to wait and see. Well, now they're all ordering like mad. They can't get it. And by the way, if you want a data center, you want electricity in a data center, you want turbines. I mean, you got to put a slotting fee up of a huge amount of money to GE Vernova for a slotting fee for 2028, so you might get a turbine. Their stock's down. Well, that's
or a
just
turbine.
That's a joke. That's a joke
to get one of those. Yeah, I mean, I always like a turbine. It'd be nice. It's kind of good.
I've made that joke so many times. Do you think you can really
never gets old?
Never gets old.
Never gets old. No, some jokes just don't get old.
I think that
the idea of you wearing a turban.
I think the person ringing the bell's wearing a turban.
What?
No, I'm saying turban. No, I see some. We have a bell ringer that's different today. In many different varieties.
Man, I don't. Yeah,
there's
well,
one.
sometimes there's
one.
no.
Did you see them? Did you not see the velvet? Did you not step over the velvet rope?
There are a lot of velvet ropes
You
today.
look
Yes.
very nice today, by the way, both of you.
I don't
Putting
know.
me to shame.
No, I had a Brioni tone yesterday. It was much better.
Well-dressed colleagues I have.
Maybe we dressed up for Fed Day. Fed decisions due out today, 2 p.m. Eastern Time. Press conference at 2:30. Policymakers are expected no change in rates, but the street will be paying close attention to the statement for any hints about the path ahead. Powell is scheduled to hold that presser at, as we said, 2:30. Interesting dynamics here, Jim. For example, Waller is going to get watched to see if he votes to cut or not, and if he doesn't, does that sabotage his chances in this horse race?
100%. I mean, look, I think that this one says, want to tell everybody there's 2 days today. There's this day about all this data center and what's going on and upgrade J&J. And then there's the firestorm that I expect from the president and maybe True Social. Boy, this True Social really upset the defense stocks yesterday. Holy cow. But I think that there could be a real conflagration this afternoon if the president doesn't get what he wants.
Well, he may not. There's a piece in the Journal, Nick Timmeros, looking at Warsh, Waller, Reeder, and Hassett, and arguing that he may never find someone who can deliver the cuts he wants while maintaining the credibility with the street.
Well, it's very hard. I mean, one of the reasons why gold has had this run, I think, and I see Tether's been buying a lot of gold, is because there are people who think, well, you're going to cut rates during a boom, an industrial boom, even if it's data center oriented. Well, that's about as inflationary as you get. And I know the president thinks he can have
That's what the president wants. He wants good economic news and lower rates.
Right.
Which they don't typically go together.
No, they don't. They historically does. Guns and butter. It doesn't work.
And to the point Carl was making, this story in the Journal points out that none of the candidates, therefore, are exactly what
now it's about
he may be
Rick
hoping
Reeder's
for.
donations to candidates who might have been, say, opposed to MAGA, Nikki Haley, Buttigieg. I don't know if you've seen 2-year break-evens, Jim, but they're up almost 50 bips from December.
Look, it's not going that way. We clearly have two economies, though. I can tell you the way you would come at it if you were the president was housing and the inability of the middle class to be able to afford housing. That way you don't have to talk about healthcare. So if you talk about healthcare, that's Medicaid. They wrap that for you.
That was quite something yesterday, and in terms of the performance of the. We'll keep an eye on
That was Oz.
today.
That was Oz putting the wood to companies that he thinks have been historically judged. But I go back with Oz. Oz has been behind it. He's understood where the inflation is in the system better than anybody. And he knew that these guys were part of what could bankrupt Medicare.
May
That was
very
a
well be the
very
case. What the companies will say, and I'm sure you'll start to hear that chorus as you move from getting the initial price increase, which was virtually nothing for Medicare Advantage, to what it ends up being. They will say, we're going to deliver less service. Fewer services,
Exactly, yeah.
you're going to get less as a senior. And so we'll see how that debate
historically
plays out.
the numbers going up.
We were expecting 5%, they got 0.09.
Well, because Oz doesn't think that it's the right thing for the taxpayer and the right thing for Medicare. By the way, Oz, correct. I don't think under either regime we would think that Medicare is doing great.
Medicare Advantage. This is Medicare Advantage.
Medicare, yeah, but it comes from the Medicare pocket.
Yes,
Medicare Advantage
understood.
is very expensive. And David, when you ever get to the point where you need it, you gotta pay. You gotta pay because when you get a $280 bottle of cortisone that is $8 otherwise because it's not on the formulary, you're in line at the CVS, says, I'm not paying that. You see all these drugs on the counter? Because the formula, they're not on the formulary. That's a word you're gonna have to get to know. Formulary.
It's a very serious issue hitting at the core of our audience, that's for sure. Still to come this morning, the First Lady's here at the big board today. She'll be ringing the opening bell in advance of the premiere of her new film, Melania, which opens on the 30th. Futures, as we said, a bit mixed. We'll talk about this dollar action, which tries to stabilize today. It's still close to a 4-year low. Don't go anywhere.
About 4 minutes left, shit.
Okay. Pull back. Below my support, I had that yellow line there. Hello, retail traders. I am Washboardjim, the thinking strategist of technical analysis, where I talk about chart patterns, moving averages, and not being the transsexual. So you need to pull back on STX.
Take a look at some S&P gainers. You'll see Seagate in there. We've covered some of the memory stuff, but watch restaurants too. Starbucks comps.
Starbucks is the fat cat's pump. It'll eventually bounce. It has kind of bounced. Oh. CFO continues to expect coffee prices and tariff pressures to peak in second quarter to find relief in, they don't know. They don't know. Starbucks is trading higher after the company reported better than expected first quarter results. What do you mean? Quarter one sales? We haven't even gone through a quarter yet, and that don't make no sense. First quarter sale, that's a year late. That don't make no sense. That ain't good news. Oh, well, what the heck? Oh, I was looking at never mind. I looked at my oven clock and it said I had 4 minutes to go, and I'm getting ready here, and I look at my clock and it's 8:21. I got 9 minutes. Starbucks expects 3% global comp sales growth, driven by strategic, flexible, and robust development pipeline. They're pumping it up. Nothing's changed about it. So you're getting all this good news. First quarter, I don't get that. How can you get first quarter results so late? Quarter one. Maybe I'm reading it wrong. Just earnings per share. Yeah, that don't make no sense. Still, $9 billion is a lot of money. Good morning.
We have a Fed divide. We have a Fed meeting today,
Fed meeting today.
At the press conference, and we have a lot of Washington uncertainty.
Good morning, Randy. Good morning, G. Good morning, Sheba, Jesse, Mark, RPT, and Big Gains. It's such a pretty world today. Oh, look at the cleavage. Nicole's got cleavage today. So far, all my indicators are showing positive results. We got a message. Does the trash dumpster usually fill up completely every week? Okay. Most cases, it's about half full, but the guys inside dump a lot of stuff in there too. But I pick up about a bag of trash a day, so about 6 go in there. you could try a size down if that'll work. And then if it doesn't, I'll let you know. I'd say about a half to 3/4 full in most cases. I'm gonna go get my coffee. Apple's pulled back. Oh, coffee, yeah. Oh. Got a head and shoulders on the SPX, and we got less than a minute. So the crowd's going wild here at the sports arena today. And SPY has to come up and break this pivot point. So I'm just going to try experiment today. I'm just going to relax and let the trade setup come. Okay. I told a woman today, I said she's just as beautiful in the wintertime as women are just as beautiful in the wintertime as they are in the summer. Bing, ding, ding. On my ding-a-ling-a-ling. Oh, look at that. Support level of the previous resistance. Hike. Come on. Apple's the only one in the red. What's Tesla? Tesla 432. It could create a new support system. I mean, it's been 428 to 430. It used to be 400 to 406, 407. Nvidia is up $3. And they were beating down Nvidia, now look at it. You can't believe these fat cats. They have no clue. They have a little clue, but they don't have much. When we were down here, they were bowling it down. Said it wasn't worth what it is. All these other stocks are going to fill its place. Seagate, multi-year breakout is another lie. It's like a 6-month breakout. Kramer. Well, you know, it ran a little bit, I guess, but not, this is irrational exuberance. It'll be like Oracle. I gotta figure the right time to do that. Keep flipping back and forth on my tickers until I see something. And always going back to the SPX. And once set an alert. Now you got the 9 here, so it could pull back and hit the 9 EMA on the 1 minute. Or find some solid support here at 6988, 67, 67, 67, 67, 67, 67. Randy, you like that when I do that? Randy. 6-7. 10-4. We're at the VWAP on the /ES. So here we are at a pivot point in a decision-making time. It's either going to break it. Now, you see this here trend line? We're going to magnify this up. We're going to take that trend line right there, that triple top. Okay, prepare ye, head and shoulders. Pow pow. Oh, my platform's not up. God. That's not good. That's bad. Bad decision making. Fuck. See, I missed it. No, I didn't. Save time. Okay, prepare ye. Don't you know this always works a little slow and there it goes right there. It already triggered it. Nope, not yet. 699375 is your first support. 699395. Write that down. Oh, Jim, what are you doing? You're spacing out. Dadgummit, Jimmy did it again. I'm right on. Oh, that's the orb. I just now noticed that that's the orb too. So this could be a serious situation here. January the 28th. The 70-20s or the 70-25s. One. Right now, I don't know. Let me see where that /ES is. Strike. I'm just watching it. I'm gonna. '70-20s Doesn't sound as sexy as 70-25. She's a devil woman with evil on her mind. 420, Rundy. 410. I think I'm going to grab one, and if it doesn't work, 420, if I can get it. But we got PAL today too, so this thing can easily pull back. I'd rather buy it down here off this support. AMD bounced back to the 200. Metter is pulled back to kind of like an inverse head and shoulders. Nvidia is breaking out to resistance levels. And we got a double bottom on Apple. It did have a small little breakout on that pullback and pulled back to a low, just a little bit lower low on Apple. We got that my PDD's getting to price range. We're at 104.96. I got to see if it had any news. Ticker, maybe ticker symbol TE. United Health had a little bounce. Yeah, there it is, TE. Tell me what you think about TE when you get a chance, Randy. TE. Volume is low due to futures platforms not working. Oh, fudge. Well, there I could have had 420 to 480 if that let me. Dadgummit. Perfect. Ugh. $5.30. Dadgum. Oh, shit. Okay, you know, there's a fuck up. I could have had that. I could have got it at 5:30 and not been so greedy. I'd have got in it. But that's a perfect call. So we talked about that. I'm going to talk about this. Hello. I've got a 4th grade education. Could I ask you a question, Jim? When we were at the top up there, you were calling the support levels, and you didn't notice the ORD, but you went ahead and put in that 496993.959595 support level and called it off the 9. I've never seen anything injected in my history of education to see something work out so well. It pulled right back to that 9 and bounced up to a double top exit idea. For that, James, I want to give you 10% of my profit. $14,000. It'll be in the mail soon. Dadgum, I mean, you call a trade out the thing perfect. Randy. La-ti-da-dee. Oh, we're back down, double bottom, baby. Do or die. Back to 420. Gosh. So the year of 2026, I start Medicare. As my body starts to decay and I get old and decrepit, always remember me as Washboardjim with a sneaky snake trading strategy where I talk about chart patterns, moving averages, and not being a transsexual. $420 to $470. Here we go again. We got, these are kind of bearish flags right here. No, they're inverted hammers. They could be bullish. I'll give it a shot. I'm going to buy one contract just to see. 420. But I don't want to push my luck. That last sell-off. There's 420. There it is. Little risk. $450. If you're not comfortable, get out of it. Let your senses. So I'm lucky I've got the fear of God in me. Do you understand? We're at 470. Make business decisions. 490. I'm the happiest man in the world. It's a double bottom. I don't know what's going on with this thing. It's the most wonderful time of the world. So I've got 2 trades out of the way. There's 480. So TE, I've got it on watch. I got this from Novice. My Vietnam vet that got shot in the head in Vietnam. So we've created a Darvis box, a horizontal channel, and do you see what I see? Jim, my name's Allison. I'm a transsexual, and I've got a big crush on you. I've been watching you on YouTube, and I'd like to know if you'd like to come over and have a coffee mocha. Yeah, I take the foam and I put a big butt in it, so when you drink it, you kind of feel like you're licking my ass. Right down here, we have a triple bottom. And we have an inverse head and shoulders, 2-headed snake. There we go, get ready. It's do or die. Triple bottom from I Am Washboardjim. I talked about the triple bottoms yesterday, and these are at 370, 380, the 7220s. I might just go up a notch. Nah, stay. Yeah. Nah, stay here. It's the most wonderful time of the year. Trade number 3 coming down at $3.80, a triple bottom. So we've got the this is just running like clockwork. Just like clockwork. Okay. It's the SPX calls and scalping. Am I getting too loose and too risky with this? That's the question. Strike. I might be getting a little bit too risky. 3.80. I'd say there's a risk level in this trade because we could come down. I got 380, and if we hit the 200, I'll buy 2 more. But actually, we could pull back to that previous high too. So I got 1 at 380. thinking that we're going to have a little pullback to the 200. Oh, yeah. Well, what's this? What's this? 63. Oh. Okay. Come on. It's a little more risk in the world. Do 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 do. Well, if this ain't going to do nothing, I'm going to get out. Fed decision and the U.S. equity futures turn mixed pre-market. Nope. That give you. Double bottom off a wick. I should have added right there, dadgummit. I didn't add, I wasn't thinking. I said I was going to add it to 63 and I didn't do it. I might get a chance here. No. It's not too risky, but I'm going 3.20. We got 380 and 2 at 320, and that's, I'm not going no more. I'm gonna have to make a decision here if we don't hold this support. This is that previous high. So this is a major support here. Previous high of yesterday, and we almost double topped that. So it could just drop a little bit below it. And I'm gonna put a little thing here. I gotta think here. Just a little bit below it and hold it. That would be very bullish. $698765. There it is right there. There's the 200 EMA. Now let's get the reversal. Let's hold this here wall. This will show the true strength of these here 200s here, that's for sure. So we didn't hold the triple bottom. That was my entry. Added on. Got 340 average. Come on. I notice these don't have the prices on the end of them. We've got a wedge. Not much of one, but I mean, it does kind of show a wedge through this channel right there. That sheet just a few inches, a few centimeters. Got a gravestone. Okay, well, this one ain't working out too well. United Health pulled back a little bit. /ES has 3 black crows. Oh gosh, that's what on the 5-minute. The thing's selling off. Well, I'm fucked. Come on! Reverse. Fallen wedge. It should. This is bullish flag. My average is 340. We got to break the 9. We're at $3. So, now, okay, I don't like what I just did there. Okay, that's cool. We're at the 63 on the SPX. So I think that might act as a pivot point because of the double bottom bounce off the 63 right here. We got a double bottom, then we hit the resistance. So we'll consolidate, stay above the 9. That keeps it bullish. And then break out to the orb. I'm gonna go turn my iron skillet on. I haven't ate nothing. I've been up since 1:30. Okay, we're retesting here. I'm down 180. 100, no, more than that, 220. Now 180. Snake breakout, pull back. Let's see if we want to extend the boom. Snake breakout, triple top, pull back to the 200. So far we're holding that support channel, but the volume's kind of low because of pow pow and what Magnificent said. I think who said that? So we got KR. We got Kroger, and what else we got? What's the other one? Kroger, Intel. 295. See, Intel bounced up. It's 320. Slash ES, fallen wedge, snake, breakout, pull back, double top. So this is a hard, if we break this resistance, we might shoot all the way back up here to the 50 and have an exit idea. And maybe, yeah, 50 for sure. 69, 50 SMA, 69.96. Draw a trend line from these two candles right here. Let's get it on a bigger screen. $330. Yay! Oh, that ain't the right screen. How can I keep putting that up there? Fuck. Did it again. Should have bought four at 320, but just got two. I think that would have been a big difference. I'm about even right now. I wanted to be up here, but I'm not up. And I think that would be the hardest resistance to break, a triple bottom. If that does, I think we'll shoot straight up to 7,002. This will probably retest. I get out with 60 bucks in the hole here. Well, Angel, will you take me to go get my pedicure done? Say yes. God, I knew I should have got out of it. So that's a hard resistance, that orb is. That's inverted hammer. Shooting star. Oh, God. I don't understand. Oh, yeah, I do.
Some headline risk this afternoon once those earnings are released.
Yeah, absolutely. Absolutely. So what are you watching, as far as some of the opportunities in the market right now? The start of 2026 was one of rotation. The theme was very much broadening out and diversification, but now
that's your theme.
Back into perhaps arguably what had been working last year with some of the
theme. See,
back in the driver's seat. Where are you looking in this?
These people are all together, all rigged together. It wasn't my theme.
I want to be invested in large cap tech because AI is the wave of the future, and there's going to be that build out in that monetization of that AI. Ultimately, though, we barbell that with some value tilted dividend payers, and specifically those industries that should benefit from the AI infrastructure build out over the next couple of years. Also, if we look into the Russell 2000s, we look down at that small and mid cap, they're going to be beneficiaries of easier monetary policy, but also the re-onshoring of
I'm really sore.
into the U.S. and will also participate as suppliers for some of these industrials and that AI infrastructure build out.
With these Mag 7 names, obviously not just the mega cap tech, but even outside of that, they've been very much benefiting from the hope that, obviously AI is going to be a game changer for our lives. It's all going to be about productivity. It's all going to be about efficiency gains. But do you think that's being a little bit too well priced in at this stage as to, the benefit that's going to have, as far as how we carry out our days at this stage when, all the talk seems to be about application, but we're just
need
not
patience,
there
I guess.
yet, or do you think it's been sufficiently baked
I
in?
could double down, but I just don't.
So where valuations are higher, and so there is excitement about the benefit.
So
that AI
for the next
can
month,
bring to the U.S. economy,
if I'm still around, I'm going to read little chapters out of Willie Wiper, Poop and Learn book. Butterflies. Let's break out here as I read this poem. Butterflies don't use tongues to taste like we do. Instead, they have special sensors on their feet. When they land on a plant, they taste it and decide whether it is a good place to lay eggs. If it passes the taste test, the plant becomes a butterfly nursery. Well, I didn't know that, Jim. PLTR down $2.75. Tesla's up 3. Let's break out to double top. I'll be right back. Oh no. God darn it. Yeah, this is going to be a toughie. Because this could come down to a double bottom now. I wanted that to break out. Oh, that could even go below the 200. You doing the IWM? Beautiful. Monsters. We've got 3 of the Magnificent 7 that are red now. Amazon, Microsoft, and Apple. Tesla and NVIDIA leading the pack. With NVIDIA volume leader, there's 215. There's my support level. This is it. Do or die. Do or die. Inverse head and shoulders. So we had a fallen wedge, breakout, pullback, little boom to the 50 SMA, and I didn't sell it, which I should have. And I took a $30 loss. Now I'm down 270. And that's a double bottom, so I mean that's got to be it. If that's got to, I mean that has to hold here. I'm gonna go put my bread on and microwave my soup. How does he do it? Break the 63, please. Just do it. It's important that you make me happy. Feel happy. Well, we've got... Okay. Now this is the secret here. Well, we're at the bottom. We need to break the 63. Run it up to the orb. Break the 63 EMA. 69.90 calls, make me some money today. I'll play this damn thing all day if you don't break. Now, here's the 50 again. See how the 50's dropped? I hate babysitting the frickin' stock and watching it all day. You got the IWM just hit the 63 EMA. Yeah, it might be like this for a bit, because it's really waiting for Powell. Ooh. Ah, darn it. I'm about ready to check this. We gotta hold it. New low on the on the SPY. Yeah, this is not good. Three black crows. I'm gonna buy some more here, I think. Yes, we are. God. Yeah, I'll get all the way back down to here. No way. I can't see shit. Be off the 9. This is the hour time frame. Well, the fat cats think that the economy is, they've already mentioned earnings were bad or are not as good as they want them to be. So in their mind, they're prepared for pow-pow to be negative. But I don't know. I'm at 210 right now. Flip my bread over. $195. Got PLT at a double bottom at 162.45.37. Definitely a double bottom on the 20-day. So this might be a good trade. This one's up huge. I mean, what? 1,000% in a year? $20 to $187, $200. Now at 162, that's still 1,000%. Well, not 1,000, 800. Need a pow-pow pump.
I'll make your butt bounce. I'll make your butt bounce. Let's go.
Some rips. Break out some rips. Break out some rips. Break out some rips. Buy in the dips. 3 black holes in the market scripts. 1 black waving, profit saving. Washboardjim keeps the trade winds blazing. Break out some rips. Buy in the dips. 3 black holes in the market scripts. 1 black waving, profit saving. Washboardjim keeps the trade winds blazing. He teaches dummies, yeah, you and me, how to ride the waves of the S&P, moving averages, patterns,
I really can't tell you how good that soup is. It's just something about this one. I thought about it all night. Eating the soup for some reason is. If you don't have an Instapot, go out and buy your wife one, or your girlfriend, or yourself one. Opens dropped to $5.73. That's getting cheap. With Oklo. I haven't looked at Oklo in a while. And I like his PLTR setup. But that song's your favorite? What are you in, Randy? Oh, Code? You were liking that yesterday. For a while. We've got a triple bottom on Code. Look on the hour time frame in the last 3 days. Triple bottom, right? Say it. $185. There's not. I didn't like it because there's no news. That's why I'd call it risky. But it's a pro share. That's why probably. If I had nothing to eat in the world, and all I could have, and I had one choice, it would definitely be the chicken soup. Over anything. So IWM wants to break the 63. 2 major attempts of it. So third time, if it doesn't hold this right here, if it goes back up, I think it'll break. I'm about to take a loss on this shit. Fake sell. Gordon Ramsay would be very proud of me. I'm at 205. I'm still in it. I'm gonna hold on to it. I'm if I go below the notch, I'm gonna get out. Boeing hit my support today. 239.40 is what I had called yesterday. And I didn't have an alert set, so that's my bad. Double bottom, triple bottom low. Some good stuff. At 205. We could add 3 more. Oklo is at $90, resting at the 200 SMA, which is a pivot point on the 1 hour. And I'm still in my SPX. We got to break the resistance level now. Oklo, and what's another one? Oklo. It was a long shot. What? This thing just... Oh, never mind. It said $2. Yeah. still in this thing. Man, look at that Amazon take a beating. Intel's up $4. Having a good day.
Blamed a lot of it on Greenland, but you see it tied to something very different, and you have a well-supported thesis, so I'd love for you to walk our viewers through it.
Thank you.
I'll walk you through it.
Time, this was Tuesday, the 20th of
First,
last
we'll start
week,
out with
when
candles.
The Dow was down about 800 points.
And warming up the
same time
bathwater.
Those things were happening. Japanese 40-year yields went, exploded higher. I think it was a signal that Japan's been defying gravity and having 240% debt to GDP ratios for decades. Everybody thinks there's going to be a reckoning at some point in time, yet it never comes. But all of a sudden on that day, it seemed like it could. Yields doing what they have in Japan are huge. The yen being down 35% in 4 years' time against the dollar. The dollar,
See, here's
which is
another.
basically down
I should have bought the
against every
dip,
other
but I
developed
didn't.
currency, is a huge deal. So even and both of the central banks of each
Now, here we go
country
again.
thought it was a big deal because they are sending out the rumor that they might be.
So I have a dilemma. We're at the 200 EMA, SMA, which is an exit idea, or I just hold my breath, or I sell them now and buy the pullback, take the loss, or I just hold on and see if we can just walk it through and do it a resistance, jump up into 69.90 after I break. The 200 is a hard one to break. And you got the 63, which we haven't broke yet. So if we can gain respect above the 63, I think that'll allow us to break the 200. 63 EMA and the 200 SMA. I could have sold them right there and been down only $300. Oh man, it's cold in here. It's 67 degrees. I think I know what I did to my legs now. I did some chair leg exercises yesterday. And I think I've been watching these little commercials of these people doing these exercises with a chair. And they're tight. Their bodies are tight. So I tried to do the leg exercise and my legs are sore. And I didn't do that many. I'll do it again tomorrow and keep it up every other day for at least a month and see if I see a difference in my. Okay. Break it. Patience. $220. Invoice 1649 for $1,675. Ice melt, $34.96. Oh gosh. December's invoice. December invoice. Retesting. That's Apple. Apple looks kind of sexy, but I don't know. We're still in this thing. I'll be right back. I gotta walk around a little bit and get this off my mind. It's gonna be a long day. Move on to another trade. We're at resistance on UNH for the third time. We got a little setup here. I don't know if it's good to go or not. Price target lower to 410. UBS. It's still 20 bucks. If it breaks this resistance level of 292.93. That's from yesterday when I called support. It's the most wonderful time of the year. Gonna be a long day, it seemed like.
Not a lot, but better than the Bitcoin performance overall. Next one here is Netflix, tied up in this ongoing saga with Warner Brothers Discovery. Arguably had some good earnings recently, but moved to the downside a bit as there's just a lot of uncertainty tied to Netflix right now and how much they're going to potentially spend on this acquisition. You know, walk us through this one, Don.
You know, in this case, I'm actually less concerned now. I'm kind of moved past the Warner Brothers acquisition. It's just that. It's a saga. It's drama at this point. It's going to happen. But wait, no, the Department of Justice may actually step in. So the marketplace, look, they just need to put a number to this. Whether the deal is going to happen, not going to happen, just put a number to it, and then we've moved past it. I think this is much more, though, about content and the spend. It's enormous out there, but again, I think that's largely priced in. The sell side activity in over here, you need another word for oversold. I'm actually taking a bullish position. Yes, I am a contrarian through and through. I'm taking a bullish position, and this is much more of a near-term bullish position. The stock looks incredibly oversold at these levels and should have a nice bounce, is what I'm actually trading for. I'm going out to the February 20th options expiration. Again, Feb 20 options expiration. I'm just going to buy the 87 calls and sell the 90 calls. It's a $3 wide call spread. It's very slightly out of the money. This one's done for a 95-cent debit. So it's risk 95 cents for some upside of just over $2 in here. Again, it's decent risk reward, looking for that bounce. And the bounce doesn't exactly have to be huge. It just has to be there inside about the next month of trade.
All right, Rick, so as we look at the technicals, do you see the possibility for a bounce here in the next month?
Well, you know, anything's possible, as we say here. It is an interesting position in which we find ourselves right now because we are near some very notable lows. When we look at our chart, we can see that the lows from the tariff news shock event in April come in right around, 82, 83, that point. We did make some intraday lows up below that point recently after earnings, but not really a huge breakdown below that point or anything. So now that stands out as a key supportive area that the bulls have managed to hang on to. Now, some points to watch to the upside would be perhaps 93, 100, 104. Those are some standout levels where price repeatedly stopped and started during our trading year here. When we do look at our RSI study in our next chart, we can see that we have once again entered the oversold area here. That threshold of 30, we can see that that suggests a swift move to the downside. The momentum is more geared in that direction right now, typically regarded as a sign of further weakness to come in a trending market, a move below that oversold area. However, we are pretty much on the verge of re-entering above our moving averages here and re-establishing some of these old lows. So we'll have to see if we do get that
251 EMA
oversold area. That would then be a bullish signal to watch out for. So 85, 50, about 89, those are our closest to moving averages that you could be looking for.
5 EMA and the 251. I've never heard of that one.
Our final chart, our volume profile study chart here.
Never.
We can see that some of our notable volume nodes include the 110 area to the upside, but that's pretty far beyond where current price activity is. More important areas would be more around 90 and then
call the double bottom, you idiot.
97 or so. That's the standout heavy trading areas that the bulls would want to recapture to try and reassert some kind of upward trend here. Notice heavy volume spikes during recent days as well, especially recently after earnings, Marley.
You got a double bottom
right,
here.
Another one
this is back in 25.
After earnings, Goldman Sachs. Now they were one of the ones that wasn't met quite as punishingly as some of the other.
They don't make
banks were,
sense.
Despite some strong reports here, but year to date, up almost 6% here as we take a look at Goldman. Don, what's your thought here?
Well, my first thought is, Rick, if you didn't like that last one, you're really not going to like this one. This one is going to be a bearish call. It's going to be a bearish call because the expectations inside of Goldman Sachs right now are just, they're unfathomable. They're just unfathomable expectations over here. Everything from, the deal flow that they're going to be seeing in this next quarter. Right.
This thing can pull back. Well, right now we're at a triple bottom. I mean, this is really nice support level right here. It really is. It really is. So, I mean, a major support level. Triple bottom. Netflix. You got to take some magnifying glass to this. Take it. Now this is on the weekly, so I'm going to take it to the wick. to that wick. It's right around 80 bucks. I think will be a strong buy. Jot it down, write it down, note it. Netflix, set your alert just above 80. Set it exactly at this precise number, 83.17. To the penny. Type in triple bottom alert. I'm at 195 on my calls. I ain't given up on them yet. So 83.18 alert set, and we hit it yesterday. And that's a triple bottom, and it can hit 80. So if you jump in at 83.13 and it pulls back on you, and you're in shares, just don't worry about it. See, this stock should be doing well in the wintertime, and it's not. That's the way it works out. Just everybody's at home. Damn cold. $83.18. Goldman Sachs.
Trading activity perspective here, so those could be points to look out for potential support if we do start downward move. That's example trade might be looking for.
Overbought. Goldman Sachs.
3033. I want to thank you both for being with us today for the Big Three. Don Kaufman, the co-founder of Theo Trade, and Rick Ducat, our lead market technician here on Schwab Network. Coming up, we are going to spotlight Enova, the company's new CEO, who just took over at the beginning
She was
of
a
the year.
thumb sucker when she was a baby.
A recent result and a recent acquisition. Stay with us.
I can tell you that right now. She was a thumb sucker.
Sometimes, you know, you could have done better.
Oh, that handshake's kind of queer. I'll be doing that. All my exes live in Texas. Uh-oh. No. God, it's gonna be all day long.
From Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Do-do-do-do.
Stay connected to what moves
More
the
drama.
markets. Download the Schwab Network app and stream anytime wherever you are.
Yesterday, golly.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about trading strategies. Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Invest your way with Schwab.
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight
There's the
Innova.
third.
Joining us now, Steve Cunningham, the CEO at Innova. Steve, thank you so much for being with us this morning. Now, you just took over at the helm at the beginning of this year. Company doing very, very well. So I guess my first question to you is, what is the first thing you want investors to understand about Innova now under your leadership?
Ooh.
Thanks for having me, Marley. It's nice
Marley.
to be here. Good morning. Well, so we've been working on this transition for quite a while, and I think our investors are very aware of what to expect with the change, and that is really not a lot. We've been very successful with our strategy of balanced growth for a very long time. And so I think what investors should expect, and what I've told them is like, we don't have a need for hard lefts or hard rights on our strategy, but you should expect us to continue to innovate and adapt and continue to meet the customers where they want to be served.
And let's talk about some of the success that you've had of late. As I was looking through your earnings report for the fourth quarter, doing very well. Originations up 32%, EBITDA more than 20%. You're seeing a lot of growth and strength here. Revenue margins expanded to 60%. You know, walk us through some of the key highlights here and what you're most proud of in the report.
Yes, we have a long track record of consistency at Innova. Our team has done an amazing job leveraging our world-class analytics, proprietary technology, and our very strong discipline on unit economics to make really great decisions. We're also very nimble. We serve consumers and small businesses that aren't well served by traditional banks. They're a little riskier, and so our loans tend to be shorter duration, a little smaller. And so we can move fairly quickly when we're seeing opportunities or risks to maintain that consistent performance. 2025 was an exceptional year. Q4 sort of capped the year for us. It's the second year in a row that we've had 30+% adjusted EPS growth. And I'm really proud of what the team's been able to accomplish in our strong performance of serving customers, really better than anyone else in our space.
And credit has held up well across your portfolio here. What are you seeing in terms of customer behavior trends?
Yeah, our demand has been really strong. You mentioned that our originations growth as we ended the year was really, really strong, and capped a full year of strong originations, which is driven by that demand from both consumers and small businesses across the country. And our credit has held up very well also. We ended the year with really good credit. And if you take a step back, I think it's really a reflection of where we are in the overall operating environment. I think 2025 actually closed out on pretty solid footing. If you look at the labor markets and real wage growth, and you look at the sentiment of small businesses in terms of how they're thinking about 2026, it feels like we're in a pretty good spot to continue this momentum.
And I saw your acquisition for Grasshopper Bank as well here for $368 million. Why is this such a pivotal move for Innova?
Yeah, so we've been thinking about a bank charter for some time. This wasn't something whimsical, and we were very focused on finding the right partner. And with Grasshopper, we think we found the perfect partner.
So I've got 3 contracts.
The National Bank is going to allow.
This is going to be my plan to get out of this trade. I got 3 contracts. I'm going to see if I can get this yellow line. Then I'm going to try to scalp it up from there. Netflix, man, what a... Had a pop. God. Picked a hell of a time to sneeze. Ugh. $145. We still touch that line. $1.45. Up. Come it. Okay, this is it. If I just don't hold right here, I'm gonna stop out. This is be a $300 loss. No, it'd be more than that. It's 600. She zipped her top up. What's a bunch of shit? Who told you to do that? You've ruined everything. I'm probably the only one out there that caught that too. Oh, come on there, Susan. Jeez. Get my coffee. This is horrible. Think about getting it stuck. 135, 140. There's all kinds of little places we can stop at. There's another one right there. Then another one. And then another one. And then another one. None of my alerts are going off. There's one. UPS. UPS triggered. This one I thought was way overbought. Oppenheimer maintains outperform on United Postal Service, raises price target to 115. Citigroup maintains a buy. George to 120. UBS adjusts price target to 125 from 116. So everybody's got price upgrades. And they were pumping it yesterday as a rebound stock for 2025. 118 from Bank of America. Amazon to cut 16,000 jobs, which is a good thing. They always cut jobs after Christmas. That's nothing new. 125 for a hold from HSBC. Stevens and Company, 115. That'd be my target. 115 and 120. Citigroup's got 120. Bank of America, I mean, 110 would be a good one. 110, 115, and 120. That's how I say it. Come on, you stupid piece of crap. Rebound. We got a double bottom on Meta. Pre-market low. Intraday low on Nvidia at 190. Everything's pulling back. Gosh. Apple, new low. We got double bottom on Nvidia. Opening and now. Huh.
You only have 2 days expiration.
All right now at 478.95, we'll have those earnings after the bell on market.close today. Thanks, George, for that example trade in our disruption.
Microsoft
today.
after earnings, after bell.
Look at Starbucks earnings. Stay with us.
And Starbucks, it'll get a pop. Watch. New CEO coming in.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
That should certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market, weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Welcome back to Trading 360. I'm Marley Caden. It's time now for the 360 round. For that, let's bring in our panel to discuss Starbucks after its earnings. Phil Kafarakis, CEO of IFMA, the Food Away from Home Association, and Dan Aarons, Managing Director and Portfolio Manager at Advisor, shares with us today. Phil, let's start with you. Takeaways from Starbucks this morning and this move we're seeing to the upside.
Yeah, from inside the industry, I can tell you, we were like, yeah, this is what Brian Nichol was supposed to do. He's 16 months into the job, and of course, we're seeing some great reporting from them on same-store traffic and sales. Transactions were very good, bringing people.
You're an idiot.
Focused in on their margin and the contraction of the margin, but some of that was explained and is part of what's really happening across the industry when you think about higher commodity costs. He's making big investments that are paying off inside his store.
He's screwing up.
Stores with the improvement of the workforce and longer hours.
How's he improving it?
Closing down some stores.
He fired the woke?
He's basically on track with everything that everybody was talking about with respect to the.
Do you get out of politics?
Particularly during the holiday season when we saw strong holiday sales and consumers out and about.
And Dan, Phil just mentioned there, we saw revenue higher, traffic higher, comps beating expectations here, but margins still under some pressure despite the explanations here.
Thank you, honey.
To call this
Set him straight.
Quarter, or is this still a work in progress for Starbucks?
Work in progress.
Well, it was nice to see some increased revenue, some increased
that guy's full of shit,
for
that other
the
one.
entire restaurant space, if we're including Starbucks in the restaurant space, because it's a tough space. But as an investor, we still don't hold Starbucks in our Advisor Shares Restaurants ETF. It was mentioned about the margins, and they haven't done much to control those expenses yet.
Nope.
Their fourth.
Well, I know where you can start.
Years is trying to reinvest.
Start with that CEO's jet. Let's start with that. Let's cut that jet off. Let's just get rid of it. I mean, how much money does it cost to run that jet? 120 grand every time you take it up? So let's get rid of the jet. And that'll be the best start. We're definitely at a support level right now from the breakout on Starbucks. If this holds, but we spent 9 months and we finally broke out. I called this, I was saying this could have been a buyback here, but I'm not saying it now. I just don't like Starbucks. Although I did buy a coffee there the other day, not for me. For a security guard. I might treat Starbucks like I do McDonald's. Go in there once a year and buy the person behind me their food or whatever, their coffee or total stranger. Starbucks reports mixed first quarter results. This guy comes out and says, it's doing well. Blah, 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 blah. Starbucks sees coffee inflation and tariff headwinds peaking in second quarter. He can't say that. Starbucks plans 450 to 500 international stores in, there you go, what an idiot, China driving nearly half. Starbucks plans 450 to 500 international stores in 26, China driving nearly half the growth to avoid 150. China, I'm hearing, might go into a recession. A deeper one. No, their earnings sucked. Earnings per share $2.15. Estimated earnings were at $2.40. Estimated adjusted EPS at $2.15. Starbucks still sold a lot of coffee. Sales were up. Earnings per share miss. That's bad. You know, that stock should have never bounced. This guy gets like $90 million a year from Starbucks. Cut his salary in half. Watch its stock run $20 contract. Ooh, SPX. More drama. Well, I think I'm about to have a loss. This happened way too early. Timing was wrong. She pumped, hey, in fact, Marley pumped it last time and the thing sunk on her. Last earnings. I sure shit thought it sunk. No, yeah, it did. And then it came back. Yeah, Starbucks is definitely a fat cat stock. Okay, I'm done with it. I'm gonna have to take a loss, I think. I just don't want to do it now that I'm down this much.
100. Tech is still leading the charge to a degree, but we're up by just about 0.25%.
Flat,
Small
market
caps
flat.
taking a step back, off by a little bit more than 1/3%. Here's the roadmap for today's show. We'll look at example option strategies for Tesla. It's got earnings due after the bell. Plus, the team from Likefolio will be along with new data on Meta, and Microsoft is also on our radar today. We've got some heavy hitters coming up. Now that we've got the roadmap for today's trading action, it is time to bring in my co-host. You've got Tom White in our Chicago studio, and Kevin Higgs joining us live from the CBO. As you know, we've got you covered from exchange to exchange and beyond. All right, the S&P 500 hit that new high today. Pulling back now, we're awaiting the latest decision and commentary from the Fed on the path for rates. The dollar stabilizing after Treasury Secretary Scott Bessent's comments, still sitting near 4-year lows. Tom, what's your take when you look broad strokes?
Yeah, I think we're in wait-and-see mode after hitting those record highs for the S&P 500. You know, the optimism's still out there. The data's supportive of it. We've finally seen a turnaround in that dollar after hitting nearly 4-year lows, and I think that's a telltale sign. Because I felt like if that dollar continued to fall, we'd start to see some headwinds. We're seeing a little bit of a bump in yields also today. So maybe that's pressuring because we got some really good earnings reports from some big companies, especially in the tech side. You're looking at Seagate, Western Digital, Texas Instruments up pretty significantly, Microchip, AT&T. So your earnings are coming in the way that they should be with markets sitting at all-time highs. I think once we get through some of maybe the geopolitical risks, maybe some of the volatility that's getting added into that Fed meeting this afternoon and the commentary from Fed Chair Powell, that might appease maybe some volatility that we're seeing. The VIX is up 4% today, and that's not surprising because it's not only the Fed meeting, it's all those earnings that we're going to talk about today on the show with big tech coming out. And it's not just Microsoft, Tesla, and Meta Platforms. It's IBM, it's Lam Research, it's ServiceNow. So earnings still the driver here, and I think that's lifting up equities. But pretty surprising that we're seeing that pullback from early morning highs.
Okay, so Kevin, I'm curious to know your take. As Tom mentioned, we're seeing this kind of pullback, and I'm curious to know if you think this is surprising also. We've got to move in metals as well. It feels like we're waiting for the Fed. We are waiting for tech. What's your take?
Yeah, I think the biggest move so far today really is the move in the U.S. dollar from down to up when Scott Bessent started saying they're not intervening in any currency, and so you see the dollar rally. But when you talk about the U.S. dollar sitting around 96, I invite our listeners to widen out. Go to a 10-year chart of the U.S. dollar. In 2018, it was 88. In 2020, 2021. It spent a lot of time between 90 and 93. So the dollar, though it's moved off its recent highs, was historically high. So I don't think the dollar moving down to 96 is anything to be worried about. That said, it is firming up, going from negative to positive. Remember, I think that's been part of the fuel on some of the metals the last few days. Let's see how they finish the day. I mean, what gold and silver are doing, it is nothing short of incredible, the move. So that's something certainly worth watching. I think when it comes to yields, if you look at yields the last 10 days, 4.13 to 4.3, now sitting about 4.25. I think Jerome Powell's going to have a lot to do about that sometimes this afternoon. So does he come out dovish? Think about the wide width of what he could possibly talk about today. It's going to be, I don't think there'll be any real news at the announcement, but the press conference could be quite worth watching in terms of the range of what he's going to answer questions on, or will he answer questions on some of the things. So earnings after the bell are going to be huge. Late afternoon trading day will be taken over by the Fed, and then we're all into Microsoft, Tesla, and Meta. It's going to be a big day. Buckle up, Diane. We're just getting started.
Buckle up.
I know, that's a great point. And you made the point earlier that we're going to be revving up throughout the day, like it was going to start slow, but then all of a sudden you hit the gas. today. And great point about the metals. You have gold higher by more than 4% right now.
Woo!
It had earlier.
I'm getting rich.
$300 an ounce. Right now it's close to that. Silver still rallying up 8% right now. Big moves in the metals. So there's still momentum there. But they say you got to be careful, especially when it comes to silver. Let's talk about NVIDIA. Those shares still holding on to a gain today after that green.
Especially with silver. I heard what you said.
H200 chips. You also have ASML blowing past expectations. Record $15.8 billion when converted to dollars in new orders for the quarter. It shows that AI demand is still booming. Tom, what's your take?
Yeah, it's definitely a lift for NVIDIA, you know, because they're not able to report any revenues out of China at this point. So anything is going to be a bonus for this company. You know, I think one of the things that we have to take a look at, whether it's TSM's earnings last week, ASML earnings this week, it's kind of reiterating the fact that the AI build-out and this tech boom that we're seeing is doing well for the picks and shovels within the industry, right? The equipment makers, right? The high-tech equipment that's needed to produce this stuff. Taiwan Semiconductor, you know, they don't have the capacity to meet demand right now. ASML, leader in this space, they don't have, you know, the capacity to meet the demand. So they're extending their bookings. That's great, right? But how does it equate to NVIDIA, which is still down 10% from its record highs? Valuations are coming back in line from what they were over the last couple of years, so it's maybe fair valued at this point. It just can't seem to get back to those record highs. So this is definitely a bonus for that company. I think one of the key things, and I mentioned, you know, recently I've mentioned that the services side of the SaaS names, software names that are not participating in this big rally. Well, the picks and shovel companies are winning big. But the software companies are. We get ServiceNow after the close today. What kind of story will they tell at this point? Their CEO, Bill McDermott's usually pretty good on those conference calls, but you know, the demand's still there, so that should benefit NVIDIA and the opening up of a new area of sales in China for them. That should be a benefit for NVIDIA. We'll have to wait and see. They don't report for a few weeks here. So we'll get some more clarity on that. But yeah, the picks and shovels are winning. NVIDIA catching a nice bid with a lot of the chip names now down on the day and off of their highs.
Okay, great point. So NVIDIA is still holding up. Kevin, what's your take when you look across NVIDIA and also the latest report from ASML?
Yeah, this space is now, you know, I say this a lot, I follow the news flow. And the news flow on these is all pretty positive right now. But Tom's right. NVIDIA kind of underperforming. Why? Well, it's got a lot more open shares. It takes a lot more inertia to get these stocks to move than it did before. So I'm looking at stocks like NVIDIA, AMD, Broadcom. They're all doing better because of this, although they're all, you know, this trading day is far from over. They were all up in the morning. Then you've got the memory names that were all strong after Seagate's earnings. So there's a lot of good things going on in this space. You know, Jensen Huang really talking about that we're still early in this build out, and he's been quite vocal. I just think that right now you got to see this group as still a momentum driver of this market. Remember, I look at the equal weight. It's unchanged. The S&P right now is down slightly, but the equal weight is up. But yesterday,
go back up to the upside.
To the S&P higher, equal weight down. So I just think the leadership is back.
So I'm still in the SPX, and I've averaged down. I got 12 contracts, 1 at 380, 2 at 320, and 9 at 145. With an average of 194. Miss Omar. SPX of the daily candle. I can't really see it. I can't see it. Oh, that's bullish. Support would be the body of that previous resistance, which is pretty much on that line, a little bit above it. We're definitely at the support level. If we break this line right here, we break resistance. We break support. That's it. Oh, gosh. I'm gonna lay on the floor for a second. My back, my legs, my body just killing me today. Snow, I realized that snow and 0-degree temperature, your body works 20% harder. And then I gotta work at least 50% harder when I'm out doing my job because I gotta clean up all this shit. So as I get older, it gets, I know that I ain't gonna be able to do that work too much longer. Probably not another winter. Six 97778. Oh, 69. I could have said 69777777777777. Watch list. Google down $1.24. Intel up 11%. So if I get another 12, that'll put me at my definitely. PayPal at 54, wow. That's one they were pumping up. Ooh, yearly low on PayPal. Finally. And we'd have to break these two walls to get anything out of it. The 200 and the EMA and the SMA, and then it's a free ride. But we'll find some resistance. Thought about moving these up.
One. Tom, what's your take?
Yeah, I mean, the market's basically ignoring the numbers that came out earlier this month, right? That 15% drop in Q4 sales from a year ago. The 8% drop in 2025 from 2024. They're just discounting that, and now the EV tax credits are gone, so that continues to kind of hurt this company. But as Kevin mentioned, the price of the stock is not based on any of that information. It's based on FSD rolling out into more cities, the subscription service, the Optimus robot. They're going to start selling those to the public in 2027. So this is, if you've got the patience, and I think that's probably the difference between and the bifurcation in this stock is, hey, it's not valued correctly, or it is valued correctly because you have to look forward. Stocks are a forward-looking product that, if you have the patience, maybe this does pay off, maybe it doesn't. We've heard a lot of promises from Elon Musk over the years. They haven't.
Oh God, you and your promises thing.
You throw in the SpaceX IPO, the Grok.
Yeah,
of the business. Does that go public eventually?
No, shut up. You just don't like Tesla. Last time you brought it down, the fucker went up to almost 475.
Some volatility post earnings and then wait for the conference call.
I tell him to shut up.
Expect some volatility post earnings. Yeah, it's true, because the conference call, that's when he often gets on there and
put some men on here with some hair.
Future and puts a timeline. So it'll be interesting to see what is the new timeline, or in terms of the next steps, especially when it comes.
He's got the same old story every time he gets up there and opens his mouth.
Trades. Kevin, let's start out with yours.
So what I did, just like Tom and I were just talking about, I looked to the future of this company.
There you go.
So if you're bullish, that may be the way you're doing it. So I looked at the February 27th, Diane. I gave myself a full month for this position to work, and I gave myself a $50 unbalanced butterfly. Unbalanced, remember. I bought the 450 call in the Feb 27th, sold 2 of the 500 calls, and then bought 1 of the 520 calls. So that gives me that about 18, almost a 19 long delta in Tesla. It gives me duration, and it gives me a move towards $500. Remember, the old high was like $498. So this is a move towards $500. And then I'm short the 500, 520 call vertical, chipping away at the net debit. I put it in for about $9.70. Trading about 20 cents higher than that right now, but just under $10. But this is one that if it moves to the upside, remember, it's a directional play. The risk is the debit paid. It's a directional play where you're looking for that $50 call vertical to go somewhere near $50. But if it goes through it and higher, you don't lose all your money. You just lose the difference between that 500 and 520 strike. So an unbalanced butterfly giving you long deltas in Tesla, Tom. We do this trade a lot. It's directional, but it's in the butterfly family, but it saves that upside exposure.
Yeah, a little bit of a tweak to this one too, because you're actually buying it out of the money to the upside on this one. But let's break this one down. February 27th weekly options expires in 30 days. So this isn't a pure earnings play, so you have some duration on this. Buy one of the 450 strike call, that's out of the money by about 15 bucks to the upside. Sell two of the 500 strike calls, that's where you want it to go. And then wrap it up by buying one of the 520 calls. So as Kevin mentioned, buying a $50 wide bullish call vertical, offsetting some of the costs by selling a $20 wide call vertical against it with that same short common strike where you're short two options on the 500 strike, paying roughly about a $970 debit. The debit you pay is going to be your risk, so 970 bucks per spread. You can see the break even there, 459.70 to the upside. That's about nearly 6% above the current share price. So this is a bullish trade. You need a move. I think the differentiator in this one is that Kevin's given himself 30 days in this trade. So even if you don't get the move post earnings, you still have time in this position for the trade to develop. Now you look at the risk reward profile, pretty good. You're risking less than $1,000 to potentially make close to 4,000 if it goes at or near 500. But even if it goes above 520 and continues to move to record highs, it's still going to be more than a double. It is going to be a double in profitability, even above 520. Just some of that profitability comes out of this position. But this is definitely, you need a move to the upside, but you've got 30 days in this position. Let's look at a different way that I looked at Tesla. It's neutral, but bearish also. I call this the Kevin trade because it's a complex trade. It's four legs. You're using one portion of this trade to help finance the directional part of this trade. So I looked at buying a 1 week wide put calendar to the downside on the 410 strike and selling a call vertical to help finance that. So let's break this one down.
We bought that way out of the money.
The options that expire in 2 days. Sell
That's
the
a $1,000 trade.
It's out of the money to the upside, about 15, 18 bucks here. Sell the 450 call, buy the 460 strike call. That it creates a credit, and then that helps the purchase price of the 1 week wide 410 put calendar, where I'm buying the February 6th weekly options that expire in 9 days. Buy that 410 put, sell the same 410 put in the near-term January 30th weekly options that expire in a couple days. Your cost on this is going to be basically about even. You might even collect a little bit of a credit, but if it's even, if you pay even for this or zero, it takes your break even to the upside to 450. So you want the stock to remain below 450 because you're short that 450, 460 call vertical. And you can see here from the risk profile, the apex of profitability is at or near that 410 strike. Well, why did I pick the 410 strike? Well, that's what the option market's pricing in, about that one standard deviation move to the downside on this one. And because you're doing this trade for even or maybe even a little credit, anything below that 450 level is going to be potential profitability on this one. Kevin, your take here on the complex four-legged spread.
Establishing your direction, in this case bearish, and then using the short call vertical, which gives you neutral to bearish, to finance the purchasing of the downside calendar. And this is one that, if nothing happens and the stock stays right here, my trade would lose money if the stock stayed right here. Yours would still be profitable, Tom. There's the difference between selling that upside call vertical and buying an upside butterfly out of the money. So yes, this is one that would be profitable if nothing happened and the stock stayed right here.
The ideal situation is the stock creeps down about that one standard deviation. That'll expand the price of that calendar. And
Mama says it be like that.
Of that call vertical that you sold to help finance the purchase of the 1 week wide put
Need a big
calendar
bounce,
to the
pow,
downside.
pow,
There you
so I can
go.
get out of this thing.
Diane, Kevin needs a
I
move
gotta
to
hold
the
this
upside,
for
give himself
hour and a half.
permission to buy shorter term on the bearish example.
Okay.
Good stuff, you guys. Choose your own adventure there.
I think I'm gonna load this sucker up.
The team from Likefolio will be along with a
Take the biggest risk of my life.
parent company of Facebook,
Put
WhatsApp,
20
and
grand in it.
Instagram. Keep it right here on Schwab Network. Fast Market. We'll
Not.
be back after this break.
This is gonna be a long day.
Hi, I'm Alex.
I'm Jane.
Hi, baby.
His mom.
Oh, God.
Sometimes, you know,
Your girlfriend looks like your mom.
Same goes for where you invest. Level up and invest smarter with Schwab.
Disgusting.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade.
Hello.
Even more specialized
I'm
trading
his
support.
mother.
Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome back to Fast Market on the Schwab Network. I'm Diane King Hall alongside Kevin Hayes over at the CBO. Time now for our cash tag segment. For that, we want to bring in our next guest, and that is Landon Swan, co-founder of Likefolio. All right, today we are taking a look at Meta, the parent company of just about every social media platform that we use, along with WhatsApp. So you've got the latest look at what data looks like for Meta and beyond. Tell us where things stand now, Landon.
Yeah, so I mean, right now we're looking at the stock is basically where it ended up after the last sort of disappointing earnings report. It went from 750 down to 670. It's kind of bounced around a little bit, but now back at 670. It hasn't filled that gap yet, so that's going to be interesting to see if it does. It did fill the gap on the previous earnings report, so we'll see if this one fills. But you know, we're looking at a company that, as you said, it's dominating. You know, over half the world uses one of their products on a pretty much daily basis or monthly basis at the very least. And what's interesting about this report is it's in a rare situation where most of the investors are looking at the expenses versus the revenue. And you know, that kind of puts Likefolio at a slight disadvantage because we have insight into revenue. We don't have insight into expenses, but I can tell you the revenue's strong. You know, they're doing well. Everything's looking pretty solid. And you look at the ad spend on a year-over-year basis.
This one here's kind of got me going here. That's TIRX, a penny stock. Now let me see here. I read Seagate shares gain after second quarter results. Swiftstart confirms strategic investment intent and TIRX beginning with 80 million at 150 per share. I mean, this looks like a bargain here. This is the kind of news I like to read on a penny stock. But I don't like to read this. Tie-in. So this will break $1. receives NASDAQ delisting notification. So this is dealt with STX. Tian Holdings enters into an agreement to acquire. That's all this merging and stuff. Boy, Biden wouldn't like that one bit. I used to trade this years ago. Just this year, it was up here at almost $9. Yesterday, it was at 32 cents. It's up 300. They're easily back to the 200. I'm gonna get rid of these here. Gosh. Oh, man, that chart looks delicious.
Discipline here. Now, the good news is they just cut Reality Labs' workforce by 10%. So they're doing some of it in some places, but they can't do the drunken sailor spend on AI. They've got to at least start to show discipline in some areas, or the stock trader, the street's not going to like it, just like they didn't like it the last time because the numbers were bigger than expected. So you're right. I think this company has so many good things going forward, but I'm going to bring up one point, Landon, and I want to hear your comments. AI is annoying how it creates stories on Facebook that aren't true or accurate. And it feels like it's almost starting to wear on my confidence on being on Facebook. I go on Facebook a lot to talk with friends and family. These AI-generated stories are annoying, Landon.
Yeah, you know what? Look, I'm more of an X or Twitter guy, but I do use Instagram occasionally. But I will tell you, I've seen it there as well, and I think that as AI becomes more and more powerful, we're going to see a lot of annoying things, and they've got to figure out a way to let the market speak. So they've got to let the Kevin Hinks of the world be like, you know what, don't show me this anymore, and punish the producers of that kind of content. However, I'm pretty confident that a year from now it's still going to be extremely relevant, even if there's a little bit of growing pains as it becomes, as you say, annoying, and I couldn't agree more, because it's getting really easy for content producers to just try a bunch of stuff very cheaply AI slop is what they're calling it these days, and you probably agree with that term. But yeah, just it's very cheap, it's very easy to do, and I have confidence in free markets being able to reject that. So we'll see what happens there. But when you look at the business use case again, these AI chat, AI enabled chats, people are going to get recommendations. For example, in fact, 80% of consumers said they use social media to find gifts, and if they're getting on there and talking to AI chat to get gifts, they're converting on those ads at, like I said, 31% higher. So the business use case is extremely strong. Don't even get me started on the software development side. I think it's unbelievable. But there is definitely some of that AI slop out there, and I think it's gonna just wear on people a little bit. But as soon as someone
double bottom on SPX again,
it'll be a great fix. And hey, wouldn't you rather have somebody spending a lot of money? So I'm in the opposite camp on I wouldn't say drunken sailor spending, but I would say make sure you're the leader. Because that's the only way that they can lose. Sometimes I like to think about what can go wrong with my plan as opposed to how do I execute my plan, what prevents it from working. And for Meta, it's someone else coming in and solving technology in a way they haven't done. You can go back in time and look that, Facebook, Instagram, they weren't always the #1 social media sites. Someone else beat them, right? MySpace used to be really huge and Facebook beat them. Before that, there was others. And so it's possible, right? It's possible that Facebook and Instagram could lose this race over the next 5 or 10 years. The way to defend against that is to make sure you're on top of technology and you're winning that. So I say maybe not drunk sailor, but how about buzzed sailor? Go ahead and spend a lot of money.
But that's why they bought Instagram, right? Because, the Facebook, it has been losing traction, just like your chart shows, and it does feel like when you go there, there's just a lot of mishmash happening there. It's just kind of random, not tumbleweed flowing through your neighborhood, but something like, it's just randomness that happens there. But Instagram, to your point, I'm not surprised to see what the data looks like for Instagram, because they figured out a way to, be more sticky there, right? It's the reels. And then remember, it took them some time to figure out monetizing that with the advertising within the reels, because people stick around to watch those reels. But I want to ask you something about that chart that you have, where it's the web visits versus the stock price. When we had that up, I could see in the top corner there where it looks like there's a little bit of a dip starting to happen in web visit. Is that something that you're concerned about? Am I misreading that?
You're misreading it.
You're largely misreading it. If you look at those bumps, that's basically weekly bumps. So that is just a standard little weekly thing. It's maybe slightly slowing on that extreme uptrend, but compare that circle on the right to the one on the left. That's the year-over-year comparison. So it's very strong on a year-over-year comparison. And generally speaking, obviously, the more people.
He looks like he's been off drugs for about a month.
And as we know, the ads are starting to convert higher. There's more engagement. So it's not just more people going, it's more people staying on longer, watching more ads, and those ads are converting more. Ad prices are going up 10%. It's a flywheel that compounds over time, and the revenue is just going to continue to climb. So with the margins that they got, obviously they're finding themselves in a very strong spot. But yeah, I would say this is a fairly bullish chart. Just looking at the revenue side of things, which is what, generally speaking, Likefolio likes to do. Just look at revenue, because we don't have insights into expenses. And this is the one company that everybody's eyes are on expenses. So, I would say that our advantage on this, from a data perspective at Likefolio, is a little bit watered down because of the emphasis on expenses. However, I can tell you that we're pretty confident that the revenues are going to come in and not disappoint. They're going to be strong, and then it's just a question of the expenses. So with what the stock has done, again, going from 750 to 670 on the last report of too much spending, it's kind of been sideways since then. Now we've got this 80-point gap above us that, if you're a technical trader, you like to believe those gaps will fill. We're trading right at that bottom of that area. So I would say that if investors can be satisfied with the answers around CapEx, then it's likely to do well off of this report, because I don't think it's going to be a question or a concern when it comes to revenue. So, we're leaning slightly bullish. Plus 27 is our score. Nothing huge, but again, water it down, because we don't know what the expenses are going to come in at, and we don't know where those investor expectations are. We know they want them to cut, but we don't know how much Meta is actually going to cut.
You almost called it the original, the OG name. All right, thank you, Landon. That's Landon Swan, co-founder of Lightfolio, with the latest data on Meta platforms. Now, for the trading perspective on all things Meta, let's bring Tom back into the conversation. Let's get right into the example trade. So, Kevin, you've got the example trade on this one. How do you approach this one, especially given the insights that we got from the Lightfolio team?
Diane, Tom, I think there's a lot of chances for this stock to go in either direction. If everything that Landon said is true, and they keep spending discipline, I think this stock could go higher. I don't know that, though. So if that number comes out, that spending number comes out again, they could disappoint again like they did last quarter. So my thought was play the difference between the implied volatilities and then look for the double calendar to get you a move in either direction. So what I looked at is a 1 week, February 6th, January 30th, 7:20 call, and then a 6:20 put calendar. It's paying about $5.20. It's trading right there, $5.20. You're collecting a fair amount of theta. You're pretty flat in terms of the delta, and you're looking for about $45 to $50 move in either direction, Diane and Tom. And this one, like I said, you want it to go to one of the short strikes, and you've got a couple days for that to happen. So you got to have some strong hands, maybe, and you don't want to move way outside that range, as you know. So the double calendar, an opportunity to be profitable in either direction.
Let's break this one down. Option market pricing in about a plus or minus $42 one-day move in either direction on this double calendar position. February 6th weekly options that expire
I haven't looked
9
at Disney
days.
in a bit.
Buy the 720 call and buy the 620 put. And then sell those same options.
I'm about ready to
in January
add here.
30th weekly options. Sell the 720 call, sell the 620 put. $100 wide double
far out of
calendar
money.
position. You're paying roughly about a 520 debit on that. That's your risk, $520 per spread. But you can see here from the risk profile, you got a pretty good range for this stock to trade in post earnings to be profitable on it. You want it to go either at or near 620 on the downside or at or near 720 on the upside. But you've probably got a range between about 600 on the downside and maybe 740, 745 on the upside to be potentially profitable on this trade. And Kevin mentioned the vol differential. You're selling about 105% implied volatility in the January 30th weekly options that you're selling the call and put, buying about a 60% implied volatility on aggregate in the options that you're buying in the February 6th. So that lowers the input price. But this is one of those strategies where you need a move either way about that one standard deviation. What don't you want to have, right? You don't want to kind of sit here right at the 670 level, and you don't want a 2 standard deviation or a 3 standard deviation move either up or down on this one. The stock fell 11% last quarter on that reset of expectations on CapEx spend. But this is playing the volatility levels here, Diane, where, hey, it's not bullish, not bearish. You just want it to kind of go about that 1 standard deviation either way on this positive time decay on this long double calendar position.
All right, good stuff, guys. We have got the breakdown coming up. Another member of the Mag 7 on deck to report earnings. That's Microsoft. And investors have questions about spending there, too. We'll be right back.
connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
And on all your favorite streaming services.
Schwab Network, available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall, live on the floor of the big board. Before we get to the breakdown, let me give you a check on where markets stand as we get closer to the bottom of the lunch hour here. We've had some flagging since the open, but we're pretty choppy around the flat line, range bound. The S&P 500 off by less than 0.1%. Dow, the flip of that. NASDAQ 100 still has a gain of 0.25%. Russell 2000 lower by 0.4%. Microsoft is next on deck to report earnings after the close today. Investors keying in for signs that the massive AI spending has a payoff. Keep in mind, Microsoft, Meta, Alphabet, and Amazon are set to spend more than $500 billion in CapEx this year. And the conversation has shifted to returns, not just growth. For the quarter, Microsoft is expected to show revenue of more than $80 billion, which would be up on an annual basis. That time now for the breakdown. For that, we want to welcome in George Silla, senior markets correspondent, taking a look at Microsoft. So the question going into this, Meta, Microsoft, whether we're talking, is the spending worth it all? What's the fundamental look at Microsoft from your point of view, George?
Well, I think the fundamental take is that. I mean, if you look at, the intelligent cloud business for Microsoft, just going back to last quarter, basically at $31 billion, that's almost equivalent to their productivity and business services business, which is really their core legacy business. So the intelligent cloud is integrated, of course, with the aspects of artificial intelligence and manifestation of how this investment will play out. I think one of the things you'll have to keep in mind with Microsoft is not necessarily, post-earnings reaction. Obviously, we're all going to be waiting for that. But the price performance, if you look at over the last 6 months, it's down about 6%, trending right below the 200-day moving average. It's nested below that. I think what's happened here is, speaking to the way the stock has performed since October of last year, the novelty elements behind OpenAI has really worn off. And that's important for Microsoft because if you look at last quarter, the company actually took about a $3.1 billion charge on earnings, 41 cents a share, based on an asset impairment write-down of their OpenAI investment, which some would say, based on a convertible basis, is estimated to be around 32.5% of OpenAI. So I think that's the issue in terms of the performance for Microsoft, but that can certainly change going forward. If you look at the EPS estimates for this quarter, $3.92, it's estimated to be about 21% higher than last year's $3.23 per share. As you mentioned too, Diane, $80.22 billion, up 15% compared to last year. From $69.6 billion. So I think what's going to be important here is not necessarily just the execution aspects of the intelligent cloud business, which were higher 40% last quarter year over year. That's a very high bar. I think investors will be looking at another potential either asset impairment charge on OpenAI or some language that they don't see that manifesting going forward. So that actually might pivot the stock back to the upside, perhaps a nice clean break above the 200-day moving average. But if there's some hang up in terms of questions on the investments within OpenAI's ecosystem, that could present some challenges to the price action to the downside, irrespective of the fact that if you look at the last week, since last Thursday, both Microsoft and Apple have been carrying the index. The S&P 500.
Chewy's down to 31.
Highs we saw earlier today, over 7,000.
God, look at this
Market can't do much unless these.
Chewy has a year low.
Are starting to.
No, that what the hell was that?
From a short-term perspective, there is some positive momentum, but again,
well, yeah,
that can be questioned.
Definitely at support
down in terms of price action if if there's some challenges in terms of the investment returns on artificial intelligence. Plus, I think the other important factor is adoption of Copilot. There will probably be some analysts focused clearly on that aspect of their enterprise business as well.
All right, thank you, George. That is George Sillis, our senior markets correspondent, with the breakdown on
George.
So let's get Tom and Kevin back in here for example trade purposes. Tom, this time you've got the example trade in Microsoft. What's the approach?
Yeah, option market pricing in nearly a $25 move either way in the stock. It's still down nearly 14% from those record highs that we saw months ago, right? This has been a laggard in this space. It's kind of gotten dragged down from some of the software names that have been dragged down due to the enterprise side of their business. Cloud's still growing over 25%. So those are the numbers you're going to have to focus on: remaining performance obligations, cloud growth, and their investments in AI. What you don't probably want to see is a rise in CapEx spending at this point. So I looked at a strategy that takes advantage, just like Kevin's double calendar did. This type of strategy takes advantage of that vol dispersion. Really short-term positioning here. 1 week wide call diagonal that's bullish for this example. By the February 6th weekly options that expire 9 days, the 480 strike call just out of the money, basically at the money at this point. By the 480 call, and then in the near term January 30th
There's some bargains.
options,
There are some
we're gonna
bargains
sell
now.
the
I'm starting to like
505
this.
strike call. It sets up about with that one standard deviation move. You can see here from the risk profile, you want it to go at or near that 505 level at this point. Bullish $25 wide call diagonal, paying roughly about a 1080 debit on it. Probably trading closer to 1060, but the debit you pay is going to be your risk. So $1,080 per spread. That can more than double on this one. Break even, you need the stock to go up higher, right? Above about 485 to start seeing some profitability on this trade. It's risk defined, Kevin, but taking advantage of that vol dispersion here to lower the entry point price, because if you're paying, $10.80 for this, it's $25 wide. You're paying a lot less than the width of this call diagonal.
There it is, Tom. You've got a $25 expected move, and that's where you set up your call diagonal. Buying the 480, selling the 505. That's just using the tools on the Thinkorswim platform to help you with your strike selection. And understanding the difference between an 86 vol and a 57 vol, that makes it less expensive. So it doesn't mean you're going to be right. You still got to be directionally correct to have this work, but at least you're setting it up.
AMD looks sweet.
That gives you the best opportunity, Tom.
Yep, your percentage move, you don't need that much to get above that 485, about the break even, but you do need a move to the upside of about $6 to get above that level and to start seeing profitability. And anything above that 485 level is going to be profitability, Diane.
All right, sorry, I jumped the gun there.
Yeah, Diane.
That's what I
Quit
do
being
for us
rude.
today on Fast Market. I'm Diane King Hall alongside Kevin Hinks and Tom White. Download the Schwab Network app. It's available in the App Store. Tune in 24/7 on schwabnetwork.com. Stick around. We've got Next Gen Investing coming up.
We got Meta breaking the 200. Resistance on Nvidia and resistance on AMD.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking,
If
you
I
get
make
the
my money back on
award-winning
this
features
thing,
of
I'm
our
going to
checking
be
account,
amazed.
plus cash management solutions, all designed for investors like
I got a lot of
you,
money
with
in this
unlimited
sucker.
ATM fee rebates for cash
3,500 in it
withdrawals
now.
worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts
24
is easy.
contracts.
Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Did anybody take his trade with me and get fucked? Let me know. Much later and lower price, good. Very good. Right now I've averaged, and I got 140. We're too far out of the money, so that's why I'm averaging down. But I don't know if it's a good idea. I mean, I'm glad you just have a SPY call. Boyle. Let's see if she done something with her hair, because I mean I couldn't hardly stand looking at her for the past 2 days.
Over us, but S&Ps are actually, what I was watching here is we did breach 7,000 earlier today, but really since the open we've just continued to churn down and see these lower lows, but everything will be reset, I'm imagining, as we do get some more clarity from the Fed. But then more importantly, I think then really what we've seen in the past several Fed announcements will be everything we hear from Jerome Powell as far as forward-looking commentary, given some of the ongoing fray between, of course, him and the broader Trump administration, just the ongoing geopolitical certainties right now plaguing some of the overall outlook for this year.
All right, you sold me. I was about to say, like, have you ever been less hyped for a Fed meeting? Like, not that it's that, like, you know, it's kind of boring stuff, but, like, it's market impactful, no doubt. We talked about it. Like, I, like, didn't remember it was the Fed day.
Triple bottom on SPY.
Going through some of my, you know, morning routines and thinking about it, like normally it's like on the calendar circled, and I don't even think it's it might be third most important thing that is
triple
happening.
bottom.
I would even argue it might be
Another fallen wedge.
When you consider that we have Microsoft, Meta, and Tesla reporting earnings after the close. That's, I mean, 6.6 trillion worth of market cap moving hands after the close today. Apple with earnings tomorrow. I would argue it's behind all of those companies as far as...
Well,
not always, but
almost.
Yeah,
it is a falling wedge,
not
but
always, but I think
also
the
descending.
press conference, I mean, as we said in just past Fed meetings, it's going to be more and more scrutinized given the broader outlook for, I mean, timing as well as the next rate cut and overall just inflationary trends. But yeah, I can't imagine that we're going to get any fireworks, of course, when those minutes are
you know what we just did, right? We
jinxed it.
Yeah, we assured that there's going to be some sort of big surprise and big movement. But I guess the reason that I just don't see the path to the surprise the same way that I think you can in other times. Like, it's a near certainty there will be no policy movement. So it takes one of the big pieces just out of the equation. So then it's like, okay, well, if nothing's really changing, how much different can the statement be? Probably not that different. And so then it's left to, okay, what is Jerome Powell going to say? And how is that going to be that different than the last time we heard from him? And so, like, I'm waiting to figure out how I'm wrong. I'm not so sure.
Yeah, I mean, benchmark rate expected pretty widely to hold steady at 3.5 to 3.75%. We will be, of course, diving into all
hit triple bottom on SPX. This is it. It's got to break out now.
But of course, 30
Or I'm gonna
minutes
get
from
pissed
that release.
off.
So 2 major events to look forward to in the next 90 minutes or so, and then we get the slew of big tech after the close, which I think will be definitely dominating at least tomorrow's price performance. But some of these big moves today we're seeing, and frankly, market's not necessarily reflecting a lot of these individual stories today. So we'll kick things off with broader tech coverage, broader semiconductor coverage, really following some specific news as well as earnings releases. We'll also be then previewing Lam Research as well as IBM after the close today for their quarterly reports. Also, with some news after the close today, there's a lot going on after the close today, or this afternoon at least. We'll also then discuss Seagate Technologies. I mean, the rally is still full speed ahead. Earnings crushed estimates, shares touched yet another all-time high, fueling the continued momentum in the memory chip space. We'll also then be discussing what we're seeing actually from Carvana, as Gotham City Research alleged their profitability is largely illusionary, and right now their ecosystem leverage is unsustainable. So an interesting short report we'll discuss, as well as right now some broader expectations for some of these tech heavyweights. And we will close things out with, again, recapping some overall expectations for the Fed. So a busy day. I mean, it's one of those days where I cannot complain from a reporter standpoint. There's no shortage of news catalysts in the market today, although, again,
105, come on, let's go!
There is kind of a shortage, it seems, of these names that these short report issuers pick on, and Carvana is on.
This is my last call on this one. It better break out or I'm gonna get pissy.
The price performance over the last year plus, but wow, yeah, this stock it seems like every 6 months, this or Apple oven, we get some sort of a bear trap, short report. So interesting stuff. Looking forward to that with Diane. But let's get into some of these earnings from yesterday, because I think this is where the movement is really stemming. It's this semiconductor world, as the SOX index up over 2%. When you look at Texas Instruments, we broke these ones live. It's not about the numbers for Q4, and they weren't expecting to be super strong. It was sort of like, hey, if you're in line, that's a win. But how close are you to getting out of this?
By adding on, I'm doing better
closer than
here.
The street thought.
Yeah, and I mean, so to speak to that, I mean, revenue missed, earnings missed. Revenue did still
But
rise
I'm not
2% year
yet.
over year, but now forecasting revenue that was at the definitely more wide range of what the street had been expecting, 4.32 billion to 4.68 billion. Estimates were around 4.4 billion. But at the midpoint, that would at least imply sequential growth, which actually was called out by Cantor Fitzgerald. That's something we haven't seen play out from Texas Instruments really fourth quarter to their first quarter in 18 years. So that's kind of fascinating to me. But this analyst also did call out the right now overall idea that the company could generate still between 9 to 10 billion in free cash flow next year, and the outlook helping offset some concerns around this miss. Frankly, they obviously operate in the analog and embedded processing chip world. They have exposure to industrial automotive trends, also customers like Apple as well as Ford, Nvidia. But Bernstein was far less enthusiastic, calling these results really decent. Now, CapEx should fall this year, which is to the benefit of free cash flow. But while Texas Instruments' business is finally recovering, in at least Bernstein's view, the uptick is not occurring as quickly as some would like. So, acknowledging that, yes, this name had a pretty, I mean, it's only continued to propel higher actually in today's session. It has also been, though, a bit of a laggard in the broader enthusiasm tied to all things AI and, the broader analog world.
Yeah, Morgan Stanley pointed to the gross margin of 55.9% in the fourth quarter as a surprise. The data center business grew 70% during that quarter. Guidance was definitely better than expected. And, I actually thought it was interesting to see that this is a company that wasn't ramping up CapEx. So anything, it came in light, and it's like, okay, there is still some prudence out there. It's not just Apple that sort of scrapped the big spending plans. There's other companies out there that have done the same. So Texas Instruments may be being rewarded a little bit for that as well. Let's talk ASML. It feels like every time we talk about this name, it's around some sort of big earnings event. Sometimes good, sometimes not so good. Another not so good.
Another not so good, and actually our lone red name of the bunch today, down about 2.8%. And so they did see record sales. They also saw orders well above expectations, but earnings did miss, as they did say that orders were almost double estimates. I mean, there were also some weak spots within this report. So We did see that fourth quarter net bookings surged to 15.7 billion. Now, these are all adjusted to US dollars. This company does report in euro, but just for ease of understanding sake, we did see that though their net bookings included roughly 8.8 billion in EUV orders, which helped lift their backlog to just shy of 47 billion, underscoring some of the customer investment in advancing these various chip-making tools. ASML does hold a near monopoly-type grasp on lithography, which are crucial for manufacturing these advanced semiconductors. Basically, they use light technology to etch billions of transistors into silicon wafers, which is a key step in the chip-making, the more advanced chip-making process. But they do have right now TSMC as their biggest customer. We've seen a lot of the enthusiasm also as of late tied to TSMC's massive investment in production capacity this year and beyond, which has helped buoy a lot of the, again, sentiment tied to ASML. But right now, as far as what really did not resonate so well, because obviously we're lower, they did flag explicitly tariff concerns, geopolitical risks, saying that right now they can no longer confirm these substantial growth rates in 2026 because of the broader global headwinds. Also did announce, roughly a 14.3
No initial reaction to the FOMAC decision?
Buyback program of their stock. That was a bright spot, but it does seem to be an overhang of right now how widespread their adoption can be. And one thing I thought
I want to make 100% on these.
Lithography machines. On average, some of these machines, one machine can cost $300 million. For more of the advanced computing, that can be $400 million. So these are not something that are flying off the shelves by any means when you have a price tag of that nature.
Yeah, this to me seems like one of those situations where the results in terms of the stock price have wrote the headlines in the sense that, earlier the stock was at record highs. It was up like 7-8%, and it was like blistering report sends ASML higher, and then it's now hey, maybe the stock's overheated a little bit and it's turned lower despite good results. So it's sort of, we're curve fitting here. These stocks have had such incredible runs. The fact that they're mostly able to maintain their value is a win for investors. So keep watching. We're going to talk Seagate later on, during the show. That's another name that I was really, really interested to see how it would trade today, and it's only gotten better. So ASML didn't have that luxury. Seagate has. That's going to be the story for the earnings season. Can the winners keep winning, even though that the bar are just astronomical for some of these record numbers? Just not enough. NVIDIA, though, that's our topic of discussion next, and this stock is always in the news. But it's been the news a lot lately because of China. So what's going on now?
It definitely seems like at least a positive development today, and shares are now up about 2% this week. So we're not seeing anything wild. Like, we'll be discussing Seagate later on, but China now.
Randy, do you remember Jimmy calling the double bottom at 17, 77, 77, 77, 77, 77? Say yes or no.
Last year, NVIDIA could be selling AI chips to Chinese companies, but there had been uncertainties whether Beijing would then allow those sales.
Yes, he remembers.
So the first approval does cover several hundreds of thousands of these H200 chips.
I'm seeing more than 400,000. So what did they say they had in their inventory? Like 750 or something? So this is like half the inventory.
It's worth like $10 billion.
Oh my gosh.
It's ridiculous. But I do think that Beijing's decision is at least another sign of the overall just hopefully easing of tensions between Washington as well as
That's beautiful.
And again, the two superpowers had
You're right, Randy.
trade truce back in October, but the
That
next
thing
one
bounced
was
right off that
ensuring
support.
Actually, these customers were even allowed to.
Just perfectly. Do you see what I see? Do you see what I see? We just broke the orb. Do you see what I see? Could it be a Head and Shoulders? I got the left shoulder here and the right shoulder here. 2050 is the answer for me. You got the left shoulder here and the right shoulder here. And you got the head in the middle. And you got a resistance right here that needs to break. Called a yin-yang pivot point. Right there. If you maintain 1963, we will go to 2050. But stick this in your crawl. Right here. Your first resistance is now getting ready to hit. Ride day. You're about to hit the first resistance. Yippee-yi. I'm at 105 on my option. We got to break. 1989 has to break. Do you understand? I bet you are. So I'm telling you right now that 19.89, 99999 has to break. Oh shit, that ain't my map. Why is it doing that? I just go ahead and copy it. I don't even look at the thing. There it is. It's on there now. It is for boasting rights. Let's go. We're at 115. I'm 15 cents from being even. Someone in the room made a statement. It's a very serious statement, and I'm going to go ahead and read. I promise you, if I see this thing at 30 bucks, I'm selling it. Might even take it at 25. I still don't trust it. What's wrong with that lad? Maybe even 22. Maybe even 20. We have a triple top on the SPX. Triple top on the SPX. Let's break it. Hello? Hello. This is Ice. Is it true that you have a Mexican girlfriend in there hiding under your bed? No, no, sir. If anybody knows an illegal immigrant and it's a female, send them over here. That ain't too bad. I kind of like that one. If we break the triple top, come on. I've been in this all day, so one time I was down 1,200. I mean, I'm only down $15, $10 now. 20. Should have added more. I had 36 of them. See, this looks bullish to me. Something I've seen over and 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 over again is when we touch that third triple top, and that's a higher low, that tends to be more bullish, capable of a breakout. But I'm just speculating right now, but I mean, through experience, I've seen it not touch that triple bottom and then go ahead and break out on that third dip. Do you understand? Let's go. Let's get a big old fat cat. Let's get some news. $120. Now we're at the 200 EMA. What's this? Oh, looks like the puts are leading, right? I'm in the SPX. I'm out of the money, so you got to move up closer to the money. I'm in the 70-20s. Need to get closer to the money. And I'm going to get closer to the money. $110. It's hard. It's hard to hold like this, ain't it? Yeah, we need to ask where Rob is. It's a good question. He hadn't said anything. I know he got sick and got better. I'm gonna keep an eye on this T, man. This might be a good scalper. Hey, Dad, I ask you a question about Grandpa? How come he doesn't sleep with me anymore? Well, honey, he's dead. It's my turn now, daughter. Netflix.
Really impressive as the digestion period happened, but now that things have settled, we are seeing this 20% move to the upside on this really impressive quarter for Seagate, where the bar was set very high for
darling.
them, adding to this massive run-up they've already had. Seagate reported earnings of
Don't.
$3.11 for the quarter. That's up.
Every time this chick pumps his stock at an all-time high, it tanks.
Billion. That beat by more than 21%, came in at $2.83 billion. So Seagate, as you probably know, leading maker of hard disk drives, they compete directly with Western Digital. Both of those stocks were S&P leaders last year as data center developers race to secure these HDDs that they need to serve AI demand. And management at Seagate says that that demand is not going anywhere. We got some commentary from the CEO, Dave Mosley, saying that they, quote, "We continue to operate in an exceptionally strong demand environment, particularly within the data center end markets. Based on our build to order pipeline, we anticipate these positive demand trends will continue for some time." With that said, their guidance also came in really strong for the current quarter. They're guiding for sales of $2.9 billion at the midpoint of the range. Prior to the company posting results, analysts were looking for 2.78, so considerably better than the expectations. Company guiding for earnings of $3.40 per share. That was compared to forecast calling for $2.99. So again, better than expected top and bottom line for the quarter, better than expected projections for the coming quarter. It really doesn't get much better than that.
Yes, it does.
The question was it going to be rewarded?
It's in a bubble. Her and I be going at it all the time. You will not catch me getting in this trade right here. Never. It's our first big fight, Marley, and I apologize. And she done something to her hair, too. She's looking beautiful today.
More extravagant language than we're used to seeing from them. They're amazed. Evercore ISI also upping their price target, saying that they believe they're well positioned from these secular tailwinds in AI. They've got this favorable demand supply backdrop for them, improving power mix. We got Wedbush coming out, reiterating their outperform, upping the price target.
She has a nice head of hair,
saying
that's
that
for
revenue
sure.
margins expected to continue for the foreseeable future. There's no reason to modify a constructive opinion. Also got TD Cowen upping their price target. So I mean, we already had bulls here. They're just, the bulls are even more bullish now.
Yeah, and I'm frankly
Not
unsurprised
me.
when you consider some of the overall expectations now for, I mean, like their progress in not only just hard disk drives, our favorite term ever, but also now in hammer.
Look at how she done her hair, Jenny.
Assisted magnetic recording.
I
Does
love
that help you at all? I don't know.
That look at her hair, man, what she done the last couple of days. Now look at it. It's flat as could be. It's at least combed. It's a total different look. Somebody got the memo.
But I mean, as we do look at the overall supply demand dynamics, as you mentioned, Alex, there's a nature to this overall space that is oftentimes volatile. So it does, I think, then give the pause of like, can we see this momentum continue?
Yeah, and the thing is it's really, really difficult to call the top in something. These moves have become almost the exact definition of what we're trying to discuss here on FOMO, which is these emotional, momentum-driven rallies. But you can't knock a company for succeeding, and that's really what Seagate and many of these companies within memory chips are doing at the same time. So they're supported by technicals, they're supported by fundamentals, but there's certainly an emotional FOMO-esque move to this as well. And just quite frankly, I mean, these stocks have gotten way more expensive, not valuation-wise, but just per stock share. And it makes it a little bit more difficult for smaller traders to even be involved with them as they've just gotten so much more pricey. But maybe you look at a risk-defined option strategy like a call butterfly spread or something to get a little bit more accessibility, still control your risk, but you can still, position yourself to benefit if this move continues. So that's what I looked at for this example. It just goes out to February 6th, so it's not this Friday,
February 20th.
Next Friday. And we're closing in on a big round number, so that'd be a big milestone. We just talked about S&P 7,000 today. What if we get a Seagate 500? And so if we get Seagate to 500 by the end of next week, a 490, 500, 510 called butterfly spread, then maybe you buy for around $1 would be in position to benefit quite greatly. And this is not a high probability of success trade, and it should be indicated by the fact that you're risking 100, but you can make 900. Whenever you see that relationship get very favorable to the investor, we should assume, hey, this is probably something that needs a lot of things to go well, and that's what you need here. You need this stock to end up between 490 and 510, with a best case scenario that it centers around 500. And it has to happen close to the end of next week. So a lot of things need to go right, but this is a stock that set the stage for something like that to happen given its performance.
Yeah, I mean, given that it's up now 346% over the last 52 weeks, up another 608% from its lows that were made at the beginning of last year. I mean, it's just been a phenomenal run. Best performing stock in the S&P 500 today. No surprise, of course, by a pretty sizable margin. So Seagate is one that has continued to impress, especially on the heels of this earnings event. We'll leave it there, though. Appreciate it to Marley Caden, host for the Schwab Network, for all of that breakdown. But now coming up next, we'll discuss our heavyweights. We have Microsoft earnings out after the close, Apple also tomorrow after the close. Both names are actually lower today and also on the year. So we'll discuss what really could help revive some of that momentum coming up next.
Med 110 and 15. I just don't like being so far out of the money.
She's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about trading strategies.
Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are. Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome back to Next Gen Investing. It's now time to discuss a short report that we are seeing pertaining to Carvana from Gotham City Research, alleging that their profitability right now is an illusion and that its ecosystem leverage is unsustainable. So joining us is Diane King Hall, the host of Morning Movers. So Diane, walk us through this short report, because unfortunately for Carvana, they do seem like the target of a lot of these short reports, just historically speaking. So the latest and greatest, unfortunately, from Gotham City Research. Walk us through it.
Huge hit to Carvana today. That stock down about 20% right now off of this short report from Gotham City Research. They are alleging questions about the earnings quality for Carvana. They said they believe that 2023 and 2024 earnings were overstated by more than $1 billion, and to their view, they're far more dependent on related party transactions than investors realize. So who are the related parties? The report focuses on Carvana's relationship with Drive Time. That's the lender that's owned by the father of Carvana CEO. We've heard this kind of allegation before. If you think back to about a year ago, it was Hindenburg Research who had a short report. They called it a father-son grift for the ages. You all probably remember that. Now this time, there's some similar allegations that Gotham City Research is making, saying that Drive Time's leverage
Come on, SPX 110.
boosts Carvana's adjusted EBITDA.
Get me out of this
Concerns
thing.
around loan sales, servicing fees, accounting,
Carvana.
and they're predicting delayed filings and possible restatements. Carvana hasn't responded yet. In the past, though, you remember Carvana has disputed these kind of claims before. So we'll be looking out for, investors obviously will also be looking out for, if there is a clarification or a full-out rebuttal of this. They, again, are alleging accounting irregularities.
I agree. We've been through this before with Carvana. What, a couple years ago they did this? When it was at an all-time high and they tried to short it and they come up with irregularities. And it really affected the stock just for a short period of time, and then it took off. So JP Morgan maintains overweight on Carvana, raises price target to 510 at 12.25, and at 12.26.24, Carvana stock dives following Gotham City's short report. What the are you raising this stock up to $510? Are you freaking nuts? $525?
Reports. And I'd like to welcome in Daniel Rubino, Editor-in-Chief of Windows Central. Daniel, always appreciate you joining us, especially as we're on the heels of so many news catalysts for big tech.
700 calls.
Wanted to start off with your thoughts here on Microsoft, of course, the earnings before Apple.
Well, that sucker got hurt.
Momentum for this earnings event, and really, what will you be watching to gauge the real-time monetization?
Alert April 17th. Let's see how much them fuckers
Thanks for
are.
having me. Yeah, so when it comes to Microsoft, we're talking about Azure, right? That's their big mover, makes up a huge chunk of their profits. They beat expectations for the last 9 events, so we're hoping that that's going to happen here. When it comes to momentum, there's a lot going on, obviously, with Azure in terms of building out the capacity to offer more options to its customers. They also have a multimodal system, which really kind of benefits them. So while they have their own co-pilots,
April 17th.
they do offer everything from Grok to OpenAI.
$700 calls? Are you serious?
So that companies who use these services can basically pick the model
Oh, this
that
guy's-
they want. And this multi-model
Oh, he's hurt.
approach to AI is going to be very critical. I'm not a firm believer that,
He got 1,000 contracts of April 17th, $700 calls, and I have no clue why he bought them. The bid and the ask has got a real, probably, since his dip, it got a real wide spread. But these things, he bought them at 385, and they're at 144. Everybody's raising the price target. I would never raise a price target on something like this. So 3 years ago, Carvana was at $6.45. Today, we reached $486.89 in 3 frickin' years. I'd short it with them. I would short it with them. But car prices have got so high that people have been forced to buy used cars. Many people that I know say, I'm never going to buy another new car ever again. Can't afford them. $700, $800 payments. Mary Barrow comes out last night. She says she makes a car that's feasible and not very expensive. 30 grand. The Equinox, and I like the Equinox. It's about the only best car they got. Well, I can't jump in this at this high price, but I'll tell you where I think it's going to go. Yeah, definitely 353. 353.50. Another $20. $355.37. Fine-tuned. Treat the alert so I can be prepared to take it. No, when these fat cats start shooting these prices, and this thing's up, what? How much of a percent is that? $486. You times that or divide it? Divided by 6, what was it? $645. 7,500%. $7,500%. Oh, I gotta watch my. $144, I'm even. No, I'm not. What the hell are you doing, Jim? Wrong ticker. I had $1. That ain't right. $360.98 is where I set my alert. There it is. Yeah, I was right. Calculated that right. What happened to my apron? I had it on. Golly, I can't believe how sore my legs are. I didn't do that much. Okay. I'm on 5. You guys claim bankruptcy? Oh shit. What happened here? Oh, God. It's not what I wanted to see. I wasn't even watching the clock. Two big engulfing candles on that. I can't tell you. I'm not going to tell you how much of this shit I got. You're not going to like it. I've added on, so. And this support level right here. Come on, baby, let's go. 60 contracts. So I got that wrong. Well, it did break out to the upside a little bit, didn't it? I'll let Magnificent call it. What? It went up. Come on, go. I'm scared. Randy, I'm scared. I got $5 more to go. If our name's Washboardjim. $65. Because I got 60 contracts. If this breaks the 200, I'm going to be going into the bathroom and taking a shit. Because I feel constipated here waiting. Bring it! I don't have days like this where I sit here and about 4 or 5 years ago, I'd be breathing real hard right now. Dang it. I don't know. I think I'm about going ahead and send some down. Okie dokie. I sold a little bit of them, but when I was up there, but I'm still down quite a bit, about $1,000. I ain't doing nothing. I figured I'd get a little bit more volatility. So we get good news from the Fed, and the market didn't like it. Well. It's 120, 220. The men's downstairs, excuse me, the women's restroom downstairs, the women's restroom downstairs, I know that sensor's not cheap. Work.
that we've seen for the last 5 years. It's not much of a math to get to 7,600, 7,700 on the S&P 500. I don't think it's going to be a straight line. There's plenty of things that are going to cause volatility. The Supreme Court could throw back the tariffs and the constitutionality of using the Emergency Powers Act. We can go through a midterm election cycle that might cause some volatility. But I just think it's all about earnings, and consensus for this coming year is going higher, not lower. That happened after the third quarter earnings reporting season and is continuing to happen in this earnings season.
Yeah, and we love seeing your dogs on Twitter. Are they Cocker Spaniels or Cavaliers?
They are Cavalier King Charles, and this one wanted to join as part of the dogs of the Dow. I had to pick him up so he'd stop barking during the interview.
No, that was good. I think he was whispering the answers in your ear, Art. All right, thank you.
I'd be lost without him.
I know they are your analysts. Very cute. Thank you. Art Hogan, it's always a pleasure to see you. Thank you so much, and a Happy New Year to you and the gang there at B. Riley Wealth Management. Thank you, Art Hogan. So we're waiting for Jay Powell's presser at 2:30 p.m. Eastern Time. That'll be live. George Sillis is joining me now. And
George.
About really what we've heard from the Fed and what we could surmise from this part thus far before the presser comes out.
Well, I think, interesting. The reaction has really been not much at all, even on the yield complex, the equity complex. So clearly, the market is still waiting on the Q&A coming out in the next 20 minutes or so altogether. So I think everyone's going to be looking for some comments on inflation progress, labor market tone, if you will. They did denote that the economy is expanding at a solid pace. Unemployment has slowed down in terms of the risk of the labor market. I think that's interesting. They seem a little bit more bullish on the economy. And of course, the inflation risks are something we're going to be looking for in terms of even the dollar, which has actually been moving to the downside over the past week, which can, of course, be inflationary, considering some pickup in areas.
Short-lived, buddy.
Which is, again,
you cannot be
inflation. So again, the commentary in terms of where the outlook from Jerome Powell going forward is going to be important. And then, of course, what's going on with the dual mandate. The other thing I'll be looking for, too, myself, and I'm sure somebody will ask a question associated with this, is the reserve management policy. There are $40 billion a month purchases, which actually have helped improve the amount of reserves on the bank's balance sheets to about $2.9 trillion. They were below that level, around $2.8 trillion, just going back to December of last year when they started this program. So that's, again, very supportive of the markets. But nonetheless, you have to consider, too, Nicole, that right now, based on federal funds level that we're at, with no change after 3 consecutive declines, pretty much in line with 2-year yields, which have not moved at around 3.58%. Since the announcement just a few minutes ago.
All right, so now we have to wait and see because, the dissenters, first of all, Myron's did 25 basis points rather than 50. Yeah. I mean, I don't know what happened. I don't know what made him say 25 and not 50. The other thing is Waller, who said 25, and he's in the running for Fed chair.
Right, so there are 2 dissents, and again, both the dissents were expecting or would have liked to see a 25 basis point cut. One of the things you have to keep in mind, the consensus is, of course, the majority, which is what we're seeing in terms of no reaction nor cut today. Nonetheless, if you do look at some of the ratios, even including the SEP report last meeting, right now we're about 1% above inflation in terms of the federal funds rate. And that's what their neutral rate is expected to be in the long run. In other words, the expectations of 2% inflation and about a 3.1% federal funds rate. So we're pretty much in line with longer-term expectations. And so again, even if we get to those levels, that would only include in the next couple of years, or even the long run, only 2 interest rate cuts. So we're already at a low level contingent upon inflation. So there's not a lot of wiggle room unless there's some sort of crisis that the Fed has to lower rates more than, let's say, 50 basis points between now and, of course, their long-run goals.
Yeah, and what I think about? I think about that we have both monetary policy and fiscal policy sort of working for folks. We did see that the U.S. economy is now experiencing solid growth, was among the first lines of the Federal Open Market Committee statement, and Jay Powell will be coming out in a moment. But when you have tax cuts and you have businesses feeling like they're doing better, you have earnings that are
AMD
showing
dropping.
fundamentally that they are improving, and monetary policy that's been somewhat, they pulled back 3 times in the, back half of the year, 2 more maybe to come. So people feel that things are lined up. Final quick thought, George, because Jay Powell's coming out.
Yeah, sure. Yeah, I think if you just consider the nature of interest rates being elevated, that could be a sign of either inflation or some combination of high investment demand. That's what we're actually seeing with non-residential investment spending being extremely robust. I know the housing market struggled, but that's why I emphasize non-residential. Business fixed investment spending is very, very much in demand, and that could also be why interest rates remain high, which is a good reason for higher interest rates, not necessarily a bad one.
And it's worth noting, thank you, George. It's worth noting we did hit a record earlier today in the morning. We got up to 7,002.28. We're at 1 year for the S&P 500, up 15%. Year to date, up just over 1.7%. But some of these here's Jay Powell coming out right now, our Fed chair.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy expanded at a solid pace last year and is coming into 2026 on a firm footing. While job gains have remained low, the unemployment rate has shown some signs of stabilization, and inflation remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy rate unchanged. Having lowered our policy rate by 75 basis points over the course of our previous 3 meetings, we see the current stance of monetary policy as appropriate to promote progress toward both our maximum employment and 2% inflation goals. I will have more to say about monetary policy after briefly reviewing economic developments.
Let's go!
Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. The temporary shutdown of the federal government likely weighed on economic activity last quarter, but these effects should be reversed as the reopening boosts growth this quarter.
I'm shaking like...
In the labor market, indicators suggest that conditions may be stabilizing after a period of gradual softening. The unemployment rate was 4.4% in December and has changed little in recent months. Job gains have remained low. Total non-farm payrolls declined at an average pace of 22,000 per month over the last 3 months.
What color tie?
Excluding government employment, private payrolls rose at an average pace of 29,000 per month. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth.
You need somebody to learn how to teach him how to dress.
Immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including openings, layoffs, hiring, and nominal wage growth, show little change in recent months. Inflation has eased significantly from its highs in mid-2022 and remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index indicate that total PCE prices rose 2.9% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%.
I sold some there.
These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. In contrast, disinflation appears to be continuing in the services sector. Near-term measures of inflation expectations have declined from last year's peaks, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people.
Come on, go.
At today's meeting,
we got a megaphone
to maintain the target range for the federal funds rate at 3.5 to 3.75%. Since last September, we have lowered our policy rate 75 basis points, or 3/4 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%. once the effects of tariff increases have passed through. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis.
AMD bouncing.
The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you. I look forward to your questions.
Who dresses you?
Chris Rugaber at Associated Press. Thank you.
Oh God, they still have news.
I wanted to ask that you attended the Supreme Court hearing last week on the Lisa Cook case, and Treasury Secretary Scott Bessent criticized that as political. Can you say why you attended and what you would say in response to the Secretary's criticism?
So let me start with I don't respond to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that that case is perhaps the most important legal case in the Fed's 113-year history. And as I thought about it, I thought it might be hard to explain why I didn't attend. In addition, Paul Volcker went to a Supreme Court case famously in, I guess, 1985 or so. So it's precedented, and I thought it was an appropriate thing, and I did it.
Great. And then just quickly follow on the job market. You mentioned last month that the household survey might be distorted, and you also mentioned the potential for overcounting jobs, which would suggest that we're still in a negative hiring pace. So do you see the drop in the unemployment rate as solid? And what's the basis for saying that things have stabilized? Thank you.
So, yeah, really 2 questions. One is, so we're getting through the distortions in the data from the shutdown. However big they were in November, they're smaller in December. So we're getting to a place where they're no longer material. They're still there, but it's a tweak here and there. The reason why we changed the statement, let me pull it out, was simply it used to say that judges that downside risks to employment rose in recent months. So we saw data coming in which suggests some signs of stabilization. I wouldn't go too far with that, but some signs of stabilization. There are also some signs of continued cooling. And so we thought that was no longer an accurate description of the data. In addition, the outlook for economic activity has clearly improved since the last meeting, and that should matter for labor demand and for employment over time. So for those 2 reasons, we thought we would take that language out of the statement.
Nick.
Nick Timros, The Wall Street Journal. Chair Powell, you've generally avoided engaging with political controversies directly, and the video statement on January 11th was a departure. What made this different, and are you concerned it could draw the institution further into political debates?
So today I'm simply going to refer you to the statement that I made on January 11. I'm not going to expand on it or repeat it. So I'm just not going to. This
You're
is
a tough guy, aren't you,
the
today?
press conference and the economy and what we did today, and some ancillary areas, but I'm not going to be getting into that.
Can you say whether the Fed has responded to the subpoenas?
I have nothing for you on that today.
Makes sense.
Michael McKee from Bloomberg Radio TV. Have you made a decision on whether you would remain as a governor of the Federal Reserve? And if so, would you tell us what it is? And if not, when might we anticipate a decision?
No, and I really, once again, have nothing for you on that today. That either.
Why would you want to leave it all under the circumstances?
Again, I don't want to get into this. It's not something I'm. There's a time and place for these questions, but not something I'm going to be getting into today. Thank you.
Claire Jones, Financial Times. Thanks a lot for taking my questions. In another one that might, lead to a similar answer. We've seen quite big movements in the dollar over recent days. What do you think is driving the US currency lower? And have you been at all concerned just by the extent of the volatility we've seen this week? Thank you.
So, Claire, as you probably know, we don't comment on the dollar. Really, the administration, especially the Treasury Department, has the job of oversight over the currency and exchange rates and all
So
that.
your policies don't affect the dollar?
So
that's bullshit.
I have nothing for you.
But, what's your view on the market movements? What do you think behind them? Is it asset managers diversifying? Is it?
Yeah, I just don't. We don't talk about the dollar. We don't talk about what moves it around. It's just not appropriate for us to do so. Really, the Treasury
That's your
Department
opinion, huh?
Has that? It's their role.
You're responsible for the dollar, you idiot.
Monetary policy and some other things, but we don't comment on the dollar. Sorry.
Neil.
Hi, Chair Powell. Neil Irwin with Axios. Obviously, no SEP in this meeting, but in light of the slight firming up of the language around growth in the labor market and the statement, should we assume that the timeline for any further rate cuts is pushed back compared to what people might have thought in December?
Well, first of all,
I'm done. I just don't like this guy. I just don't like him at all. I really don't. I think Fauci, I like Fauci better than him. Okay, well, I'll be able to get out of here with $100 today. I'll be happy. We got a double bottom on Carvana. UNH has 2 humps over my resistance level tested. Was a UPS. Oh, dang, they were pumping UPS yesterday. It hit my support. This is one reason why I don't chase stocks on earnings. I'll buy the dip. It's had a pretty good run from $82, and it held there for 3 months. I don't know. I had a 115 target and it didn't hit it off the earnings. And I think it triggered my support level. I'm going to set an alert off the 200 here. Right around $100. I should write that in there.
March? And how are you all thinking about the conditions that would merit another rate cut? Is there broad agreement on the committee about what it would take?
So there was broad support on the committee for holding today. Broad, I would say, including among non-voters. So that's where that was. Of course, some people didn't want to cut and dissented, but committee pretty broadly for holding today. We're not trying to articulate a test for when to next cut or whether to cut at the next meeting. What we're saying is we're well positioned as we make decisions meeting by meeting, looking at the incoming data, evolving outlook, and all that. And we're in a position where we still have some tension between employment and inflation, but it's less than it was. I think that the upside risks to inflation and the downside risks to inflation have probably both diminished a bit. So, we'll be looking at that. It's about how you weigh the risks to the two goals and how big those, and quantify them. And so there are different views on the committee, and, we'll find our way forward as the data evolve.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Has the effects of tariffs already moved through the economy on prices?
A lot of it has. So basically, there are many different estimates, and they're all highly uncertain, but most of the overrun in goods prices is from tariffs. And that's actually good news, because if it weren't from tariffs, it might mean it's from demand, and that's a harder problem to solve. We do think tariffs are likely to move through and be a one-time price increase. So most of the overshoot, if you were to take that out, inflation, core PCE inflation is running just a bit above 2%, x the effects of tariffs on goods. And the other good news is, if you look away from goods and look at services, you do see ongoing disinflation in all the categories of services. So that's a healthy development. So that's what's going on. The expectation is that we will see the effects of tariffs flowing through goods prices, peaking, and then starting to come down, assuming there are no new major tariff increases that are begun. And that's what we expect to see over the course of this year. If we see that, if we see that, that tells us that we can loosen policy. Also, if we see something that suggests that the labor market is not stabilizing, that in fact the downside risks reemerge, or the data just get worse, we'd have to look at both of those. We have
now I'm too freaking far out of the money.
If President Trump does pick a new Fed chairman before May, what does that look like? How would you work with that person, and what does that transition period look like?
I don't have anything for you on that. That will depend on Congress's actions and things I can't speculate on.
Howard Schneider with Reuters. Thank you for taking our questions. Given the changes in the statement and all you've said so far, is it fair to describe risks to both sides of the Band-Aid as roughly balanced right now? And is the next move necessarily down?
I'd say that the upside risks to inflation and the downside risks to employment have diminished, but they still exist. So there's still some tension between the mandates. Are they fully in balance? Hard to say. And we think our policies are in a good place. I've just discussed reasons why we might change our policy. We'll just have to see how the data lead us. about how, one of them is more at risk than the other, just that the risks to both of them have diminished.
Okay, thanks. BIS wrote a paper last summer which concluded that global investors were hedging their dollar exposures in ways that previously they hadn't because of policy uncertainty. Do you agree with BIS?
We really don't see much at all about that whole story. There's just not a lot of data that suggests that there's much to that.
Thanks.
Anna Swanson with the
Sunday
New York
edition.
Times.
Welcome back. I'm Nicole Petalides, and we are live on the floor of the New York Stock Exchange. I bring back George Sillis, senior markets correspondent. We were just listening to our Fed Chair, Jay Powell, and there were things he said very clearly and things he stayed away from very clearly. I'll just go through a couple of them, and I think the most notable is how well the economy is doing. Firm footing, solid growth, solid pace, and also the turnaround in the labor picture. He took out the phrase about downside risk rose in recent months to unemployment. Now we're getting more about unemployment. Now the unemployment rate has shown some signs of stabilization. So the downside risk is out. Housing is a bit weak. Business investment spending is okay. He doesn't know whether or not he's going to stay on or didn't share that with us. That's more. Tariffs are digested, and the data is now pretty much materialized to be cleaner after what we saw with the Fed shutdown with the market shutdown, government shutdown. Now they have more data to go on. Your thoughts, George?
I think if you look at how he described the labor market, it was duly noted that they talked about private payroll growth. There was some challenges because the government shut down in federal government labor markets. And ideally speaking, too, if you look at what's going on with inflation, I think this is important because service inflation or services is about 70% of total output of our consumption-based economy. So essentially, he's noting that service inflation is down, but unfortunately, goods inflation has picked up based on tariffs over the last, 8 or 9 months or so. And if that seems to be being addressed going forward, that could actually bring that inflation rate down closer to the annual expectation rate this year in 2026, based on their last projections around 2.5%.
Yeah, I'm in and out. I'm definitely down.
What he denoted as core PCE inflation all of 2025
Shiba.
3%. So the more inflation comes down, they're going to realign their rate.
I'm still in it, but I've been flipping back and forth. I'm still down about $1,000. Yes, Fauci should be. Fauci says he's not in charge of the dollar. That makes no sense to me. Or I'm just off. Monetary policy, huh? He's not in charge of the dollar. I've got 4 minutes to power hour. I'm gonna go have a peach. My last peach. Legs are killing me. Shit, I might have found something. Today's info commercial comes from Better Goods. Nothing better than a peach a day. Let's see what Trump says here. Got a Trump tweet. Eric Kirk. What's this? Oh. Oh, this is a news source, okay. We got any Marines in here? Navy? I watched a submarine show yesterday. I really loved it. I really liked it. Well, that's done. It's a nice little jar. I'm going to keep it. Better Good Peaches. It's kind of a fancy jar. Put screws in it. Here's a footage of the USS Gerald. Oh. What was it? What happened to it? I guess they're looking for broken cable, right? Sheba, I don't think we did good on this one. Spy at the VWAP. We hit it twice. 1 minute past power hour post. Yeah. Jimmy screwed that one up. It was more or less worthless.
Inflation under control, and frankly, to finish the job of getting inflation back down to 2%.
Worst trade of the year. It's on a good roll.
Good afternoon. It's 3 p.m. on Wall Street, and this is Market on Close. We've just gotten the FOMC's decision to leave rates unchanged for now. I'm Marlene Caden, coming to you live from our Chicago headquarters.
And I'm Sam Bidas, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on today's show. We will have plenty of reaction to today's rate decision to keep rates on hold. We'll break down that announcement and Powell's press conference and where the Fed goes from here. Later, we'll be joined by the CEO of Virtuix after its debut on the NASDAQ. We'll learn all about its omnidirectional treadmills. Yes, you heard it. That let users walk and run in 360 degrees inside AI-generated worlds. And after the bell of
He didn't say nothing.
Earnings from Meta, Microsoft, and Tesla will react live.
He said that was the Treasury's job.
As they are released.
He said that was the Treasury's job. And then made sense about him today. I took the loss over $1,000. I was able to flip it a couple times and it would have been a lot worse. I got close and tried to sell the lot and only sold some, and that hurt. I figured we'd get a little bit more. I didn't like his commentary. I've not traded much either. 4 trades. It's been like that here lately. I was up to like doing 8 or 9 a day. I don't know if I want to trade any more today or not. I'm still green, but not much.
On solid footing for growth. So the growth outlook is looking better, and particularly when you look at more of the neutral statements here around the dual side of the mandate. Obviously the shift in balance of risks, removing that downside risk when it comes to labor, less worried about both sides here, but the risks, Jerome Powell saying, still existing here. They're going to wait and see. The decisions are going to go meeting by meeting. 2 dissents, obviously, from Myron and also for Waller. So they were the major takeaways sideways, but not a huge movement as far as the markets are concerned. Obviously waiting for that next big catalyst with those earnings, but the dollar stabilizing this morning after hitting a 4-year low and experiencing its worst drop since April. And it came after Treasury Secretary Scott Bessent said the US has a strong dollar policy. He also said that the US is absolutely not intervening to prop up the Japanese yen after recent speculation about some rare coordinated intervention. The yen did tumble off the back of that. Now, President Trump had earlier weighed in on the dollar, suggesting he's not worried about the weakness, saying, I think it's great. Look at the business we're doing. Now, the Dixie did fall over 9% last year. Remember, the Japanese yen, which I mentioned, has been a big beneficiary of a weaker dollar. That slid on the news. We also saw a move in the metals, which gave up earlier gains. Remember, gold setting another record this morning, about 5,300. Also on the softer greenback, but then paired gains ahead of that FOMC meeting. Silver making a similar move after hitting a record of 117 on Monday. So plenty of movements across the FX space and also the metals today. But Marley, I'll send things back over to you and Jenny Horn in Chicago with some of today's top movers.
Thanks so much, Sam. Yes, Jenny Horn, co-host of Next Gen Investing, joining us here in Chicago to help break down some of these top movements we've seen. And of course, the biggest move we've seen came from Seagate in the wake of this earnings report. They had blockbuster earnings. They were up more than 20% when we last spoke about them on your show on Next Gen Investing. Take us through this report and why we're seeing such a big move to the upside for a stock that has already made huge moves to the upside.
Well, I feel like one thing we've learned from this earnings period is that the headline numbers really don't matter as much. At least it
wasn't worth the hassle.
Today. Obviously, this narrative can change. I mean, you have 53% bottom line growth and then 21% bottom line growth. Margins also healthy, but that doesn't really illustrate the story because hugely right now, as we're seeing these various AI applications and the overall modern data centers increasingly needing these storage solutions, this company has given not only cost efficiency, but also continued to perform in a, again, sometimes challenged overall supply chain environment. So giving really strong guidance, that was huge, as they expect now for the current quarter revenue at the midpoint to be around $2.9 billion. That was ahead of expectations. Operating and earnings is also well ahead of expectations now as far as their guidance was concerned. But they did highlight this 22% increase in average nearline capacity per hard disk drive to roughly 23 terabytes. That, coupled with the rise that we're seeing of capacity in their cloud nearline storage to nearly 26 terabytes, shows that they are more focused on some of these high capacity offerings. So nearline capacity basically is what is used for this data that is not currently active, but is basically being seen as a way that you can access it quickly. But the tight supply dynamic has allowed them to not only, again, increase their price per terabyte, but also boost margins, as management did now continue to really guide for more of the same in the coming quarter as well as this fiscal year. So they've also showed some progress in my new favorite term, which is the heat-assisted magnetic recording, or HAMR technology. And that was something that was mentioned by their CEO, saying that they shipped roughly 1.5 million HAMR drives last quarter, up from 1 million previously, and now continuing to build with Mosaic 3 across all major US hyperscalers. So I think that narrative of continuing to be a driving force of hard disk drives, continuing to build into HAMR and giving guidance that matches all of that enthusiasm is really what's driving a...
This thing right here reminded me of something I did when I was young. I thought this was kind of cool. I remember one night I got drunk one night. It was about 1 o'clock in the morning. I got up to this intersection and my buddy wanted to drive the car. So I had a paper sack or something and I threw it out the door, right there by my door, and got out of the car. And I was right at a T intersection, and right in front of me was a frickin' cop, and I didn't even see him. So I threw that bag out of my car, and we got ready to get out of the car so he can get into the driver's seat. And all of a sudden the red lights came on. Son, I'm going to give you a ticket for littering. And back to what, 1977? Like $50? And we were drunk. He gives us a DWI. He's concerned about that paper.
Next week, they are laying off more employees, announcing them in advance of their earnings statements.
And this is something that, first of all, I feel like there's like a humanity element to this, where obviously this is a substantial.
Jenny, you look hot today.
Amazon does this a lot, and so I mean, to speak to that, we've seen.
I'm glad you got my memo.
Major overall just restructurings from an employee layoff and hiring perspective in not only post 2014 in this AWS shift, and then again in 2018, and then again, of course, 2019 and 2020, we've seen, I mean, major just overhauls as far as their workforce. So this is not a new narrative for Amazon, but planning to cut roughly 16,000 corporate jobs to streamline its organization. Its U.S.-based employees that will be affected will have 90 days to look for new roles, and as well as they will be receiving severance as well as other transitional support. But this was highlighted right now as really being able to help reduce layers, increase ownership, and remove bureaucracies. As they said, these changes will not necessarily freeze hiring by any means, as they actually directly stated they'll continue hiring and investing in other very strategic areas. And I will say that when you look at the pockets of hiring and firings, AWS, which is their high margin business, it's really what the street really cares about, has not really seen any faltering in the recent layoffs, because that's really where it seems like they're concentrating a lot of this focus, and there's a good reason why. I mean, it's again that high margin aspect of their business.
And they're good. And Amazon moving down slightly, but I'm not sure it's tied to any of this layoff news. A marginal move to the downside today, about 0.5% for them. I do want to talk about Starbucks, though. They had their earnings before the open. Bit of a mixed quarter, but the comments I got today on Trading 360 was that it was positive in terms of the turnaround, seeing some response to that. We saw a really positive move in reaction to the results. They've given back most of those gains, though.
And I'm not surprised, because I do feel like these names that are fairly discretionary facing, and they're just not the growth story that right now is so dominated by tech. So I feel like it's almost just an appetite for risk and right now growth in this market that maybe is not playing out into these discretionary names. But first quarter revenue did beat the expectations. Global comparable sales, though, were up, or same-store sales, were up 4%, as we saw the U.S. specifically post its first comparable sales growth figure in 2 years. Management said the turnaround is now ahead of schedule, prompting many analysts to then raise their price targets. But so far, we've seen global comparable sales be a bit of a drag. I mean, we've seen most of their growth actually come internationally, even as the overall market in China does remain fairly right now crowded. But earnings miss estimates, and there is still, I mean, a lot right now of these pressures like coffee prices, overall macro concerns, and I just think that a consumer that is trying to tighten their belt, tighten some of that spending. But I will say, you look at Brian Niccol and what he's done for brands like Taco Bell, Chipotle, now Starbucks, all brands very near and dear to my heart, maybe Taco Bell a bit more than the others, but he's been able to really capitalize on reviving a brand. And so far, based on these advertising efforts and some of their holiday drink offerings and promotional deals, it does seem like this is resonating, because foot traffic is also continuing to be higher, despite again some weakness in these metrics, which could be related to some, again, global macro pressures.
Yeah, still holding on to those gains, though, not as high as earlier, but overall, the sentiment seems to be that the turnaround is well underway. Thanks to Jenny Horn for breaking down those stories for us, co-host of Next Gen Investing here on the network. I do want to send it back to Sam in New York, though, for a look at what we have coming up in the rest of the show. Sam?
Well, we'll get back to the Fed, Marley, and what's next after they held interest rates steady. Market on close. We'll be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our Investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Welcome back to Market on Close. I'm Sam Vardas alongside Marley Cater. Let's dive into the Fed's rate decision and comments from Jerome Powell with our next guest, Christian Salomon, Chief Investment Officer of Balance Rock Private Wealth. Hello to you, Christian. So obviously we got a hold as widely expected. Fed Watch advisors thinking that the commentary has skewed bullish, hawkish, particularly with respect to the upgrade to the economy, the upgrade to jobs, less worried about things on both sides of the dual mandate, avoiding questions around Fed independence, Lisa Cook, and the dollar. What were your takeaways?
I think it was exactly what the market expected. Maybe not what they wanted, but given the strong GDP numbers, employment continuing to show signs of improvement, as well as inflation, though still high, somewhat moderating. Powell even mentioned the fact that they expect to see later this year the transition of cost of tariffs to be coming down, which is a good sign because it means there's not other parts of the economy that are causing the heightened inflation we have. And I think he's hoping that we get back down to their 2% target. Now, obviously, the meetings in the future on whether there'll be continued rate cuts or they'll start cutting rates again is going to depend heavily on the data. And he mentioned that more than once about their dual mandate between keeping unemployment low as well as keeping inflation low. And so, I think that the market from now on is really going to be watching both the labor market as well as inflation and whether the administration is going to be putting on new tariffs, which could certainly put a monkey wrench into some of the comments Jerome Powell made today.
And Christian, was there anything that surprised you, either in the adjustments made to the post-meeting statement or anything specifically that Jerome Powell said in the press conference?
I wouldn't say that I was surprised. It's somewhat, like I said, I think this is what the market expected, given that the data has gotten a little bit better. I think it would have been very surprising had there have been maybe more dissents. I think everyone expected Miram to. Maybe the one surprise was that Waller did as well. You'd like to think that that's not because he's on, President Trump's short list, and President Trump has made no bones about the fact that he wants to see interest rates lower. However, I think that he's voting his conscience, as was said by some other commentators. I would expect that this is going to be language that's going to continue for the next couple meetings, assuming that we don't see more tariffs or geopolitical tensions, assuming that we see the trends in both the labor market and inflation continuing to normalize. If the market had gotten a 25 basis point cut, I think that would have been somewhat good news, bad news. And we probably would have seen stocks rally, but at the same time, I think long-term bonds would have taken that as a sign that maybe that the Fed has lost the plot a little bit, or maybe losing some credibility. And that's something that Jerome Powell was very strong about, that he does not think that the Fed has lost credibility. They don't want to, and it's very important for financial markets. So I think this is just what the market needed. You see, very muted reaction both from stocks and bonds, which means this is pretty much was priced in.
Yeah, I mean, the S&P 500 just really teetering around the unchanged line for most of that press conference, which perhaps goes to show that maybe they're waiting for some direction, maybe they're just still trying to digest all of this. I wonder if it's got anything to do with the fact that Powell seemed pretty bullish on the economy, at least that the data, he says, suggests things have started on solid footing for growth. Do you think the markets can wrap their heads around an acceleration of growth and fewer rate cuts in the system this year? Do we need them?
I think that, he was pretty clear that, the economy doesn't need them at this point. I do believe that, we continue to grow. Now, we need to watch, the dollar. It has obviously sold off a lot this year. There's some, we have, President Trump saying that he likes the weaker dollar, but, the Treasury sector is up. That's saying that, no, the U.S. still believes in a strong dollar policy. I think that that's something to worry about, as well as geopolitical tensions. But the fact that, we've kind of stepped back from Greenland, we'll have to see what happens with Iran. That could be, something that could potentially, spoil some of the enthusiasm in the market if we see, more geopolitical tensions or more, messy conflicts, but at the moment, we seem to have, stepped back from a lot of the saber rattling. If we can, just continue to move as we are and not rattle the table too much, I don't see any reason why the market cannot continue to grow the way that it has. And I think that the equity markets, will continue to rise. It's very difficult to fade them at this point, despite the fact that the Magnificent Seven is trading at very high multiples. Just because, the Fed was kind of accommodative. It was just what people expected. Powell did not rule out cuts later in this year. Now, they may not come as soon as some people had hoped last year, but there's still expectation there's been 2 rate cuts, potentially starting in June. I think that'll help the market as well. I think it would have been much less bullish had Jerome talked more about his inflation fears.
And Christian, as we look at positioning in this environment, this potential, we don't know when it's coming, we're still very much in wait and see mode. Does today's decision to leave things unchanged and stay in this holding pattern scenario just continue to reinforce the idea of how much diversification matters right now, more than actually trying to time out when that first cut is going to come?
Started going up.
Oh, 100%. I mean, it's very difficult to time the Fed, especially because a lot of that's going to be priced into the market well ahead of when they actually make the right decision. It's very rare, especially for the Federal Reserve, to do anything in a surprise manner. They're very good about telegraphing to the market, unless in times of extreme stress. And so diversification is key for any portfolio, especially when you do have concentration risk in the equity markets. I mean, that is great and has led to fantastic performance, but it also leads to potential volatility risks. When the indices are dominated by a few big names, if one of them were to wobble, you could see performance in the entire index come down pretty precipitously. So we're huge fans of diversification. As people say, it's the only free lunch in investing, and we like to use alternatives as a way to diversify away from the public markets in order to get some tax efficiency, as well as enhanced income, as well as opportunities that aren't necessarily available in the public markets.
Christian, we've got to go, but we really appreciate the reaction today. Christian Solomon there, Ballas Rock of Private Wealth, joining us. Thanks so much for your time. Coming up next, we will be joined by the CEO of Virtuix. We'll learn more about this company that combines virtual reality with omnidirectional treadmills. Coming up next on Market on Close.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you know, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
It's a very dirty game. We don't appreciate it.
Meta just laid off a bunch of people from its reality allocate capital from parts of the business that aren't working into other parts of the business. I'm just wondering how you're thinking about that and how you respond to that.
Yeah, I think what we do is beyond just a VR headset. We add a movement component to the experience. The majority of our customers have never bought a VR headset before. This is their first time diving into VR. It's a gaming device with health benefits. So we're a bit different than the Metas of the world. Now, the big tech players continue to invest billions of dollars into new technology in the VR and XR space. Meta, Apple, Google as well with Android XR. So yeah, the market and the business continues to evolve in the right direction. And you know, we add the movement component to that.
And Jan, I know I talked about the omnidirectional treadmill at the beginning of our conversation, and treadmill sort of implies that it's an exercise tool, which it certainly can be, but the usage of a Virtuix machine, an Omni One, goes far beyond that. I mean, you have gamers, it looks like you're widely in e-sport venues, and also the military. You know, walk us through the use cases for the Virtuix programs and devices.
Yeah, our key two markets are one, the consumer market with Omni One. That's need a gaming system for the home, but it has nice exercise benefits coupled with that. And that segment is growing. That's where we reported our growth. We have production capacity in place to produce up to 3,000 units a month. That's about $100 million in annual revenue. So we're ready to scale there. And then we couple that with other markets, for example, defense, where our technology is very useful to let warfighters walk the terrain before they fight on it. For mission planning, mission rehearsal, there's nothing like it. And it's a revolutionary technology for the defense market.
I see that also you manufacture in places like China and Taiwan. I'm just wondering how you're looking to mitigate some of the, no doubt, geopolitical elements to that with respect to tariffs, because I see that your product is trading for $2,000 to $3,500 so far. You've clocked up 2,000 deliveries, so you're selling this stuff, but I wonder if you have to face price increases because of that.
Yeah, right now the geopolitical situation, the tariff situation is under control, is managed. We'll see how it evolves. If it deteriorates again, we can always move our supply chain, but we'll feel for now we're in a good spot.
And Jan, you sent over some notes. You now have the capacity to produce about 3,000 units per month. How quickly can demand catch up with your supply here?
Yeah, it's the main purpose of us going public this week. The proceeds will be used to fuel that scaling, that growing, and that's a key focus for us going forward.
So what's next? I mean, you know, we've talked about some of the demand, where it's coming from. I'm just wondering exactly what sort of challenges, issues out there in the world you're actually looking to address and solve here.
Yeah, well, there's an exciting development around AI and AI-driven 3D reconstruction techniques like Gaussian splatting, where we can now very quickly, from 3D 360-degree camera footage, create photorealistic virtual environments. And that's very exciting. We can now make photorealistic replicas of real-world locations within hours. That used to take months. So think about applications like industrial training, safety training, defense as well. We have these beautiful photorealistic worlds. How are we going to walk around in those worlds? Well, that's what you need our technology for, to move physically inside virtual worlds, both for gaming, entertainment, and defense and enterprise applications.
And Jan, you're talking about photorealistic training. How is that different, and what sort of advantages does it offer versus a traditional simulator?
Yeah, traditionally, to create these simulations, that has been a very costly, very time-consuming process. And now that costly and time-consuming process, which used to take months, can now be done in just hours by using 360-degree camera footage and turning that into a fully 3D walkable VR environment. So that's a great breakthrough development thanks to developments in AI and AI-driven 3D reconstruction. So I think it's going to deliver on the full promise of virtual reality, and then with our technology can walk around inside those worlds. So that's where we come into play.
Very exciting, Jan. Thank you for being with us, and congratulations on your IPO. That's Jan Goodluck, the founder and CEO at Virtuix. Coming up next, it's Options Corner. Rick Ducat will join us to take a look at the options activity on Meta platforms ahead of its earnings after the bell. That's next on Market on Close.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
to Market on Close. Meta is one of the Mag 7 that will report earnings after the close today. Estimates call for adjusted EPS of $8.21 on revenue of $58.59 billion. Investors will be watching for Meta's CapEx plans for 2026. After last quarter, the company's CFO said that the CapEx dollar growth will be notably larger in 26 than 25, which implies it could be well over $100 billion for this year. That said, it's now time for Options Corner. Joining us, Rick Ducat, our lead market technician, to take a closer look at Meta and some of the activity we're seeing in advance of these earnings. Now, Rick, as we take a look at Meta, just looking at them today, just slightly lower on the day, but what's the setup like as we go into earnings?
Yeah, Rick.
Well, there's a lot of lawsuits that seem to be coming into focus here before we have this earnings event here. What I mean by that is there's a couple of headlines that caught my eye today. One is the first is lawsuits about WhatsApp encryption disclosures. Now that may sound kind of dry, but the allegations are fairly serious here. WhatsApp, one of the key features is end-to-end encryption, in which it means only the people in the chat can access the messages, which is supposed to include Meta itself. Now, the lawsuit says Meta can access pretty much all of it, and it accuses them of misleading consumers. It says this information comes from whistleblowers who are not yet identified. Meta denied the allegations and said WhatsApp has been end-to-end encrypted with the Signal protocol for a decade. Now, the other lawsuit that caught my eye regards the safety of AI chatbots. This lawsuit says that Meta allowed minors to access chatbot companions that could be used for adult purposes. News reports say Mark Zuckerberg himself personally approved overruling the objections from the child safety staff members. Meta denied this, saying the state cherry-picked messages to build a misleading case here. But as we look at our charts, the setup for this company as we head into earnings shows one of underperformance here versus the broader markets. If we advance to our next chart, we can see it's one of the weaker members of the Magnificent Seven group as well. You can see that blue line represents those seven together as a whole, Marley.
All right, and then as we take a look at, Meta just sort of on its own and its setup coming in, we saw the reaction to their earnings, particularly I think that CapEx number for their last report moved to the downside. What's the setup look like as we come in today?
Yeah, so what we have now is two competing trend lines, one longer term and one shorter term here. When we look at our chart, we can see that our white line that goes down from the peaks that we saw shortly after those highs near 796, the peak I'm referring to was in late September. You could then connect it to the subsequent highs. That's about where we've gotten stuck so far here. Now, as we are having this earnings event here, this could dramatically rewrite the story. But for now, price has mostly played within the confines of this line. You could also say that starting with our recent lows and going upward, you could draw an upward sloping trend line here. So a more shorter term area to consider here, but nonetheless, you could still make the connection between those two lows. So in terms of our horizontal price levels,
I think the market's getting close to correction.
678 and about 710 to the upside, marking
well,
some
once we got here, that's a cool
lows that came back into focus. And to the downside, our gap would be filled once we get to about 619.
See, I wouldn't do that. I'd take this and do this.
Comes in near 5.
Well, no, that's a yeah. I'd do that.
If we look at our next chart, we have a confluence of our moving averages. They're all kind of clustered together in the same spot. So this suggests lack of trend direction, slowing momentum, both kind of common things that you might expect as we head into earnings here. RSI was the notable departure here. We can see that our momentum indicator broke above its
so as the moving averages, but if you heard what he just said, he said the moving averages bundled up together gives indecisiveness. I say it's getting ready to squeeze. It's either going to break them or it's going to pull back. So it's at a point of squeeze. But this guy's smart trader.
Things drop off pretty notably beyond that, Marley.
Yeah, right now at 671.53. But as we take a look
See
specifically
here?
at the options action,
We have the widening.
today, no real
Then they
moves
tighten up.
today in terms of the stock. Are we seeing any increased options?
And then they
activity?
expand.
What's it looking like?
And they squeeze
the
out.
sizzle was just about in line with average. The sizzle at the time I checked was 0.97 versus the 5-day moving average of options volume. So you may have thought it would be a bit more of an
5-day moving average. I mean, he keeps mentioning that. So we have the tightening of the moving averages. They get real tight. Then they expand. And the breakout. Take us to a 5-day, 5 minute, 1 minute. Yeah, Meta will break out. You watch. Meta's going to break out. Meta's earnings to be confirmed Wednesday. We got the 200 SMA. This is going to be an interesting to watch tonight. Is it tonight? Yeah, Meta's tonight, IBM, United Rentals, Southwest, Sans Microsoft. Oh, tonight's a big one. Tesla. Oh my God. This is going to be a market changer. I tried to replace the batteries in there once. God. Hello, I'm Aria from the Amazon recruitment team. We have a position that is great fit for you, helping Amazon brands increase product visibility, flexing working hours, about 1 hour per day, flexible time and location, daily pay $200 to $600 a day, free training for 15 to 20 days of paid annual leave. Well, I'm going to go work for Amazon. I got 3 more minutes left. I'm surprised I haven't been trading silver. I mean, SLV. $26.57 to 106. What's this? Oh. Oh, the bell's already rung. That fell off. Okay, well, sorry about that last trade today. I thought I could pull it out. I really did. I figured Powell's speech would bring the market back up a little bit, but I was completely wrong about that. So I scalped it as best as I could and still didn't win. Kind of made me feel. Now we have pullback right now in SPY. So I like to win most of them, but and for anybody that was in that trade with me, my apologies. So, I'm going to get out of here and do my thing. Where's it? We'll catch you later, YouTubers. Oh, let's look at some of these earnings. Didn't I post something in here earlier about it? Oh. So we got Microsoft and this one I think's overbought anyway. Way overbought. Then right to my support level. Right to my support level. Now turn it in black fucking screens. Okay, I can't recognize that. Tesla. Tesla boom. And we got Meta. This is big names tonight. Meta new highs. I said this one could break. Why did I say it? Because we were at the 200 SMA on the daily. And we got IBM. Oh, we're going to have a green day tomorrow. IBM's up. Ooh, yeah. Waste management. Sands. Was it sand? No, I don't know what the ticker is. Okay, well, I'm going to get out of here. I'm looking to short this STX. It's up too much, 7,500%. I'm out of here. Yeah.